this reset?
Maybe, we'll have to take it part by part. If there are areas which we've been in an investing mode even in the last some time, right up until yesterday. So it's not that we had stopped deploying money. But obviously, these kind of gap ups generally tend to kind of, settle down over a period of time, as you rightly said. So we'll see which opportunities come in front of us, which still look attractive even after the 3, 4, 5% run up, which might happen in some of these spaces. But the point is, Neeraj, that one has to look at it from the lens of the fact that 2025 has been a year which has operated at various levels at a lot of extremes. Whether you look at it in terms of the global extremes of the AI trade and or the depreciation of the dollar, and you look at things like the way the whole precious metal space has behaved in the last 1 year, and inflation which has trended down so much throughout the world. So I think there are global extremes. In India too, there have been a lot of extremes. Our earnings, for example, which are well above trend, have actually been significantly below trend. We have seen massive underperformance of our markets, at least relative to other markets in the world. 20%, which is probably the highest that I have seen in my years of being in business. And we can go on and on. There are so many of these, and FI outflows of $20 billion, depreciation of the INR, against all other currencies in the world, including the dollar, which itself has depreciated. So I think there are a lot of these extremes, and which basically begs the question that can some of these things mean revert? What will mean revert is something that we have to judge. And I think from this, the perspective of the deal, I think some of these things start with, let's say, the currency, for example, our currency, for example, can we appreciate? Can the underperformance, therefore, relative to other markets, probably compress? We do some catch up. If there's a 20% underperformance, imagine if we were to probably cover up even half of it in the course of the next some time, in the course of 2026, for example, it can mean a fair bit of upside. So I think there are these mean reversion possibilities which are likely to be at play for some time. It definitely contains a downside. It probably adds that punch, which probably maybe to some extent the budget could not provide. So in many ways, I would like to think that this is going to be relatively more sustainable, but definitely not one way either.
Here, I want to drill a little deeper into the point that you made on the banking space, right? Because you have allied beneficiaries. And good morning to you, Alex, here. I'm just wondering whether the pockets of relative pressure on the asset quality side start materially shifting, and already in certain pockets you've had banks report better than expected collections, or lenders in general report better than expected collections. But I wonder about the takeoff in credit growth, because that has been in some of those MSME pockets in particular would have been a little depressed. So does that take off materially? And would you look at the smaller lenders, or would you be more favorable towards the larger lenders?
So we started to see improvement in credit growth in any case for the last some months. I mean, if you look at the trend, we moved up from 10% to 12%. But banks today, for credit demand, I think in the system is starting to pick up, especially after some of these segments, like for example, MFI, SME, MSME. Part of it has also been driven by gold, as you know. So there is that impact and overlay as well. But I think the credit demand will probably get a little more broad-based. I think the budget also at some level endeavored to help the whole cause of SME, MSME, if not from a short-term perspective, but a somewhat medium-term standpoint. So I think it will allow for better credit growth in that space going forward, and therefore credit should pick up. But constraint beyond a particular point has been in deposits, because as soon as 12% starts to, if you have to target 14 or 15% credit growth in the system, then you're really challenged as far as your LDRs are concerned, and your LCRs also are concerned. So I think it is important that something should have been done about the liquidity in the system, and especially and the budget did not really go down that path. I mean, it was in fact it created a little more hurdles given higher borrowings and yields moving up, and the government's somewhat reluctance to actually draw down their own cash balances. So I think now if this starts to reverse, as I said, because of the rupee strengthening and foreign flows getting better,
in fact, on that note, I just look at the rupee this morning and the strength coming in on the rupee. Beautiful sight. Your pre-open session looking fantastic. The number of upper circuits is befuddling. Your Nifty is showing me nearly 6% up right now. And the Sensex 5%. All of this will settle. You're watching the pre-open session, but I want to focus on the rupee for a second. Abhishek Goenka, founder, India Forex and Asset Management, joining in to talk about the rupee this morning, strengthened to the 90.43 mark. Abhishek, how much move can you see on the positive side now, since we've been sliding consistently thanks to these tariffs from the US, which now go off?
Hi, very good morning. It's a beautiful day. And now we are seeing the rupee and the markets all cheering the news yesterday night. So I think, as we discussed earlier, that the fair value of the rupee should be close to around 88 to $1. And whatever weakness we saw was just because of the tariff. And as for the real effective exchange rate, even if it settles at around 100, we should be at 88. So I think now, since the tariff is gone...
No, you're saying rupee can go to 88 by when, Abhishek, you think?
Yeah, so I think it could be gradual in the space of, say, 1 month or 1.5 months. RBI would come in to buy some dollars in between because they have exhausted a lot of their reserves. But if we start seeing push from the capital flows, and the stock markets are cheering today, then possibly, rupee moves in pendulum. So this time around, we saw the moves very high. And this time on the downside also, at one point of time, the exporters who have not covered at the higher levels will feel left out. And they would start coming in the market and start selling. So I think I'm fairly positive on the currency now. There's no reason to panic. And with this trade deal, I think whatever money we have lost out of our current account, we will be seeing increasing orders from America.
Abhishek, quick question though. Abhishek, quick question. We're already at 90.4 on the USD INR. In the near term, where do you see it settling? And this gradual move up to 88 again, can you define that in your mind? What is this timeline looking like?
It's difficult to tell you the timelines, but one thing is for sure, if we see sustained rally in equity markets also, and we start seeing 2-3 days of FII flows, then, our one problem of current account is getting solved. Now, the second problem of capital account, if we see triggers in the market, then that will also get solved. And then we are good to go. And then there is no reason why a rupee weakness should stay. So I think let's keep a close watch in the markets. And if we see a follow through, then I would be a seller of the US dollar rather than the buying of US dollars in the current market.
You would be a seller of US dollars in the current market instead of a buyer. All right. Abhishek Goenka, thank you so much for speaking with us. Let's just go through what's happening in the pre-open session. Halfway through, look at the number of upper circuits. Aarti Industries, Aditya Birla Lifestyle Brands. That's also because of other news coming in and PE investors coming in. KPR Mills, we'll love to show some of those rates. Vardhaman Textiles, Wellspun Living, all of your exporters who were suffering, all up there right now. LT Foods, KC International, Trident, all of them doing very well. We should actually get Trident back. We spoke to him on budget day, the Trident chairman emeritus, and they spoke about how I wish something had been done for us in the budget, but obviously government knew that this was coming. So what had to be done has been done.
How did you say it,
Yeah, no, obviously. I think the government knew they were close to sealing the deal the day that the budget was being announced. And you had exporters saying, "Arey, hamare ko kuch mila nahi." But this was the reason perhaps that happened. I want to pull up just give you a sense of the breadth, because out of the Nifty 500, you have 493 advances and only 5 declines. The Nifty itself at a beautiful 1325 points up. Remember, this is not the markets open yet, this is the pre-open.
All 50 stocks of the Nifty 50 are in the green.
I'm sure. You have that and more.
Pokarna is up 20%, by the way. So anything which had got this exposure to US and not moving is starting to move.
Oh, we are
really
at
really strong
quick calls. Kushpura.
If you get them at right prices, I think SSWL, Steel Strips Wagons, and Avalon Tech.
Wheels, na?
Steel strip wagons, yeah.
Steel strip
wheels, my bad. Steel strip wheels and Avalon Tech. These are a couple of stocks that you should keep on radar. But again, let the pre-open settle. Let's see, whether it's a 10% or a 20% kind of a gap up, and then take it from there.
10 or 20% on this particular stock.
On these stocks, yeah.
Yeah. So I'm just wondering, Parag, this is where everyone who's watching is going to have a lot of FOMO this morning. That how do I get in and where do I get in?
Correct. So, you're asking me?
Yeah, Parag first.
So basically, the only way to get into this market is to buy large caps right now, because as we spoke, all the beneficiaries of tariff cut will be in circuit only. So that is the problem. If you so big beneficiaries like Welspun Living, we saw like it was in circuit. If it is not in circuit, then it's okay, because they have been beaten down, as Neeraj said. So there is no problem in buying 10-15% higher, but if it is 20%, then what can you do? At least today you have to sit idle.
Tamanna, I promise you, the bigger feeling on the street today is going to be relief. इतना ज़्यादा beaten down है, इतना ज़्यादा pessimism था street पे कि the first thing is going to be relief. FOMO तो बाद में आएगा.
Guys, we're looking like we're going to end up just about 40 points away from all-time highs on the Nifty 50.
Yeah.
Why should we not?
I think that's what we need to look at.
Yeah, agreed. This is just the start. This doesn't look like a pop rally which will peak out. This is just the start. Don't be surprised if this 1219 points on the Nifty that we have right now. And maybe you could have some, but there's so many shorts in the system. I don't think post-budget too many people took tactical longs either on the markets. So I think we went into this deal very, very light.
Yeah, I mean, look, even Kush himself was talking about that. Wait till 930, wait till 940.
Whether it was a short covering rally or a fresh long build-up. In fact, if you see yesterday's data on futures, which I track closely, Nifty futures was only in the short covering mode. थोड़ा बहुत जो long build-up हुआ था, वो Bank Nifty पे हुआ था. Which means even until yesterday there was short covering only. Fresh longs नहीं थे अब तक system में.
Look at what I mean. Everything will do well, so you can only pick one over the other. But I mean, Nifty IT is 5.85% in the pre-open session. We talk about the beaten down stocks doing well, and yes, they will. But the large caps are participating thick and fast. Really interesting to see.
Eternal is your biggest gainer. Look at your Nifty gainers after the pre-open session. Eternal 8% up. Adani Enterprises 8% up. Tech Mahindra, Axis Bank. So interesting picks. I mean, everything is up. So within that bucket, you're still looking at what's moving. A Bajaj Finance, Jio Financials. So your heavyweight financials are also up. Reliance Industries about 6% up right now, as is HDFC Bank. So you are seeing a possible setup of 1,000-point gap up on the Nifty. I think this is the first time this has ever happened. Has there ever been a 4-digit gap up on the Nifty? And you are very, very close to your all-time highs. It is in one fell swoop. All the pain in the markets of the last 6 months could get erased in the next 6 minutes. This is the kind of setup that we are seeing. I mean, great for those of you who have invested in mutual funds and sat over time consistently. There comes Alex, the personal finance guru. Yes, for them, obviously, you don't have this stress that am I in or not. But for Indian markets, I think this is just the start.
Agreed. And look at, okay, just take a wild guess. Trident, Pearl Global, GoKix, Gokuldas Exports. What are they opening at?
All 20% up.
All 20% upper circuits. This is exactly what you spoke. अब इसको chase चाह के भी नहीं कर सकते. But अब इसमें relief enjoy करो.
So that is the problem. What do you then go out and buy today? What do you go out and buy today?
I will reiterate, buy the heavyweights because यहाँ पे supply है और ये. And you remember we had this conversation where, pick by pick, in the early part of January or mid part of January, ITC, Reliance Industries, HDFC Bank, ICICI Bank, they came under heavy selling pressure. तो अभी तो यहाँ पे शुरू हो रही है.
So let me ask you this, and both of you, if you are a retail investor, and a lot of 24/7 NDTV 24/7 viewers tuning in today, if you are a retail investor, should you buy the index today, the Nifty 50 or the Nifty Next 50?
No.
Why not?
You should book profits because यहाँ से आपका risk reward ratio आज और कल के लिए favorable नहीं रहेगा.
I'm talking about buying an ETF or an index fund.
Positionally investment के लिए हाँ. I thought you meant कि अभी gap up में trading के लिए लेना है कि नहीं.
For a retail investor.
Of course you should because heavyweights are oversold और यहाँ से तो rally शुरू होगा अभी उनमें.
I think that's the important bit, that it's not going to be just for a day. Hiren Ved with us, Director and CIO, Alchemy Capital Management. Hiren, very good morning, and what a glorious morning this is, for lack of a better word. I was just asking, have you ever seen a 4-digit gap up on the Nifty? I don't think I have ever seen that as well. What is the mood like? What do you do in the markets right now?
Celebrate. What else? Yeah, I mean, I think this was the last thing that everybody was waiting for. And I think we will start a new bull market after almost 15 months of consolidation. So yeah, I mean, I think it's a very positive step, and this should probably lead to Nifty soon hitting new highs, lifetime highs.
Hiren, we are very close to market open, so we'll make it quick. But 2 questions very quickly. We are opening about 1,000 points higher. You believe there is more upsides over the course of the next 12 months, right? So you would be deploying capital.
So we were never bearish, so we were always deploying capital. So I think that yes, there will be a lot of impact of short covering also on the Nifty. But I think that just there is more opportunity in the broader markets, because there many mid and small caps had sold off 30-40%. And there will possibly be an opportunity to buy there over the next few days and weeks.
Hiren, just a minute left, but how closely are you watching the rupee also to try and gauge what the flows will do in the near to medium term?
I mean, at least I don't know about inflows, but one thing is certain, that maybe the intensity of the outflows should reduce, and hopefully inflows should also come in, because if India continues to now outperform, and FIIs are underweight, they will scramble to at least become equal weight. So it is quite possible that we should see inflows as well, and the strengthening of the currency also.
Hiren, I have only one question. Where are you going 2 minutes before markets open on a day like this in your car?
To the office.
I think you better get there quickly. Thank you so much, Hiren. We'll try and get a word from you just in a bit from now. But there you have it, Neeraj. You're going to have a spectacular start to the markets, a 4-digit start in all possibility. And the important point that you've been making, ये तो बस शुरुआत है.
Cross fingers these days. But I completely believe, and I'm sure all of you do, Tamanna, Alex, Parag Bhai, Kush, all of you believe that this is just the start.
Or for the fact that the market is going to go up.
Yeah. No, but I mean, the 1,000 points is a given. The question only is, how soon do we reach 27,000? I mean, whether it's a day or two, or whether it takes some more time. But forget the advanced decline, really. Just look at the headline numbers, and that is what will matter. We are gonna start off with a bang. Never mind the tone of my voice, and almost all indices, if not all, will be in the green. Frankly, I mean, this is just spectacular. 26,106 or 26. Yes, the market come down to maybe 26,000, then bounce back again. But I think this is a great start for Indian markets. Remember the MSCI ETF, India ETF ended 3% higher. We're about 3.22, so circling around that 3% odd gain for the Nifty. Bank Nifty is participating, mid caps are participating, small caps are participating. Fabulous advanced decline ratio. Wonder which are the 57 stocks which are declining, those losers. Let's get the heat map up on the screen and show you what's moving, and everything in the green. Literally everything in the green. Starting off with the winners though, Adani Enterprises 9% higher. If anybody thought, oh, there are stress, etc. and stuff like that, and could there be shorts there, I think short squeeze out here will help. Eternal 8.5% higher. Tamanna marked this earlier. Shriram Finance 8% higher. Tech Mahindra, Geofin. I mean, frankly, Tamanna, what can you say? You can mark individual stocks, but it won't matter. I mean, the point is just the ferocity of this first up move, and does this actually get us an opportunity for Nifty traders to go long, considering that we are not really 1,000 points higher, but about 700 points? Is this an opportunity? Is the question that we'll ask our guests. But frankly, really good start. Let's wait and watch. Save for an ONGC. It's a party right now.
Yeah, if I look at the top row, it's looking like an India trade to me. Of course, there are individual stocks, but you look at the bigger picture. Eternal, of course, also had a block deal, so that is boosting it. But infra companies, financial companies, that's why you have a Shriram Fin, a Geofin, an Adani Ports, Adani Ent there right at the top, and Indigo. So this is an India economy boost trade that you're seeing play out on the screen right now. ONGC, the only one in the red, because their costs might go up if they have to now bring in oil either from the US or from Venezuela, and crude from Russia clearly does shut off. But I want to look at the broader markets as well. Let's pull up the small cap and the mid cap, because you have to have that consistent party all around. Nearly 4% up on the Nifty mid cap 150 as well, which is great. Nifty small cap 250 also about 3.5% up. The sectoral heat map, and I wonder if you'll see an all green across all sectors, and there you have it. Now, this is not such a common sight in the markets for those who are joining in. This is an all green sight across all sectors. Nifty FMCG at the lowest 1% up, but look at what is moving fast and furious. Nifty Realty 4.5% up. Again, domestic play is what the street is betting on. Consumer durables, of course, the broader indices all doing very well. I'm going to pull up the list of companies which were worst hit because of the US-India trade deal, those sectors and those stocks. So textile, gem and jewelry were the obvious ones, right? Because you had 50% tariffs coming in and they were in pain. Look at an Indo count, a Kitex or Gokuldas, everything is at a 20%. When you're seeing 20% on that screen, that means you can no longer trade on it. You've hit an upper circuit. You'll have to wait for those circuits to lift to trade again. Aquaculture stocks, again, those who are exporting prawns, shrimp, etc. Avanti Feeds, Apex Frozen, Coastal Corp, all of them hovering near the 20% mark. Coastal Corp on a 5% upper circuit right now. Jubilant Ingravia, we talked to you about. SRF, Deepak Nitrate, these are all chemical stocks. Again, doing very well this morning. Auto ancillaries, I want to look at a Bharat Forge, a Balkrishna Industries, a Sona BLW. Balkrishna Industries actually 20% up right now, and even an RK Forgings. We'll be speaking with them later on in the show to get a company view on what it means for them. So you have a whole host of companies that are doing well. I could go through the laundry list, but it is basically the NSE 500, save for some 60 stocks that are doing well. So I won't do that. Let's get more reactions in this morning and just get that flavor of the markets, isn't it, Alex?
Absolutely. And a few of the AMC stocks also doing particularly well because investors are celebrating and certainly that bodes well for flows heading into the rest of the new year as well. Remember that there were question marks for a few of them. Look at Nippon Life, for example. It's up about at 10% at this moment. Pokerna, another stock that is benefiting quite significantly on account of exports of granite to the US, is up about 20% or thereabouts. But Kush, I do want to ask you about the benchmark open. 25,800, not necessarily the heady, absolutely extravagant start that was initially being penciled in. Do you think that gets built into over the course of the day?
How life is relative, right? I mean, we had 1,000, 1,200 points.
I'm not complaining.
Yeah. No, I'm so glad. That's exactly my point. अगर किसी ने कहा होता कि निफ्टी सिर्फ 700 पॉइंट ऊपर खुलेगी, you would have still taken it. I mean, compared to the 1,000, 1,200 point, that the GIFT Nifty was suggesting and the pre-open was suggesting. Okay, let's just put things in context. The euphoria aside, let's put things in context. आज वीकली एक्सपायरी है. There were heavy positions at 25,300 and 25,500 call options. They will come to unwind. So ये initial tick के बाद कुछ तो सिस्टम में लॉन्ग्स थे, थोड़ा बहुत वो भी प्रॉफिट बुकिंग के लिए आएगा. I have a feeling that there is a good opportunity that we might recover, or rather not recover, we might actually revive and go higher from here as well. Just because of the expiry, that technical play, or we might even consolidate here. I still remain positive. Do I go long at these levels? No, let's not forget that, it's not a 1,200 or a 1,400 point up right now. It's a 750 points up, which is also a good number. Remain constructive on Bank Nifty even now. There will be an opportunity to go long. Perhaps, I'll be here, in studios or on the phone to give you that long call like we did yesterday. But I think this is a good opening. Don't go by the fact that 1200 point nahi hai. This is a good opening. The sustaining itself will give enough and more room for the indices to move higher over the next couple of days.
So, no, Kush, simple question. Are you Going long here on the markets currently?
Not now.
You are not going in now?
Not now.
You will wait for an opportunity?
Absolutely, yeah.
Okay, and the opportunity is a few percentage points lower, you're saying?
You know, Neeraj, surprisingly, it could be a few percentage points higher, or not percentage points, a few points higher. 25,800 sustaining, 26,000 being taken out, then you will have the real short covering kick in. ये तो जो हो रहा है, ये आप थोड़ा profit booking देख रहे हो. जिसने भी system में long रखा होगा, they will be taking some money off the table, right?
Got it.
So this is perhaps that long, profit booking coming in.
Got it. Parag bhai, क्या लेने का?
ICICI, HDFC.
ICICI Bank, HDFC Bank.
Because those are available. And plus there is too much of short in the system. Ultimately, they'll go up, and Tahir Badsha was saying one point which is very critical. Up till now, what was happening, RBI to protect over volatility in rupee had to intervene. And they had to sell dollars and suck in rupee liquidity, which was creating a deposit starved system. Now, with rupee relaxing on its own due to this trade deal, that worry will go away. So, there will be good deposits accretion in the system, because there will be good banking liquidity in the system. That is fundamentally positive for all financials, not only banks, NBFCs also, companies like LIC Housing Finance also. Everybody will benefit in the system due to this particular thing.
You know, the fact that a lot of financials and real estate plays are getting a boost today as well. I think a bit of that domestic consumption story and domestic infra story, which had gotten dampened down, also comes back into play.
Yeah, because the worry which was there, that cost of borrowing will go up. Right, because of that 17 lakh crore gross borrowing number which came in budget.
Yes.
Yeah, so now that is fading away. And plus, as I said, RBI will not be having a pressure to control rupee volatility now. So that will provide enough liquidity in the system to boost consumption, to do infra, because there will be good deposit accretion with the banks.
Yeah, so think about it. You have to look at it in a more holistic picture. You have to look at the budget, the gross market borrowing figure over there. Then you have this trade deal coming in, and then you have the RBI policy on Friday. So that also becomes very crucial for market watchers and for economic watchers right now. The next few days are absolutely crucial. Just in terms of how the index is behaving right now, are you expecting maybe some profit booking to come in, or this is not the mood? Too many shorts in the system?
No, in fact, I'm expecting the index to go up. जो profit booking expect कर रहे थे वो आ गया. Gap up हमने देखा, and then we are already down from there. Like I said, weekly expiry playing out, some profit booking playing out, but I'm actually more constructive. In a way, if you ask me, I'm glad that we are only 750 points up.
मतलब greed की हद होती है.
देखो, नीचे में दर्द सहा है तो ऊपर में cheer करना तो बनता है, right?
That's true. That's
so,
true.
I think there is an opportunity to go long. Like I said, not just yet. Let this euphoria also settle, and perhaps we'll be here to give you that long call on the index as well.
It's too early to call euphoria, na?
देखो 750 point euphoria तो है.
All right, on that note, let's bring in Vikas Khemani, founder and CIO of Carnelian Asset Management and Advisors. Vikas, we asked a few other people what to do today, and they said celebrate. Do you think that that's the case for you as well?
Yeah, I mean, what's there not to celebrate when market goes up and you have that kind of event happening? So I'm sure it's a reason to celebrate, not only from market's perspective, but I think in general for a country as a whole.
But specifically, how do you read the tone and tenor? Because we're still waiting for a few of the fine prints to come through to understand where this takes us with regard to the bilateral agreement between the US and India. But a lot of the beaten down sectors tend to do well heading into the new financial year. A few of the allied sectors as well. So specifically on earnings, specifically on companies and sectors that you're seeing benefit from this.
This deal should not be only seen in the context of only the sectors limited to where it is beneficial, which is definitely there. We have all argued for long that this deal, when it was not happening, that is not very material for India for a very long time. So you can't suddenly turn around and say that, oh, this is the big game-changing event, right? The simple point here is that there was a big uncertain event on the overhang which was there at a macro level, which I think is behind us. See this in the context of the corporate earnings recovery which has happened. See in the context of focus in the budget which was there and boosting the sector. See this in the context of EU deal done. So if you put all these things together, this is one more, which was one uncertainty which was still around, that kind of goes behind. So this, I think, in my opinion, creates a way for a lot of investors who are sitting on sidelines, especially FIIs, Last year we were one of the underperforming market. So I think we will see probably FI covering the shorts coming back. So it's irrelevant in that context. While there will be some sectors which will definitely benefit from this, like sort of textiles, like especially chemical, pharmaceuticals, especially in CDMO space, auto components. So there are certain segments which will benefit from that. There's no doubt on that. The biggest beneficiary of that probably would be textiles, because that now has both US and EU as a market. So you will see, those kind of things, but that's again a very small sector to drive the overall market, right? You can't really say, and same thing was true when, this was not happening. We were saying that this is not going to drive the markets down.
Yeah, exactly.
Yeah.
No, by the way, Pankaj Tibrewal joining in as well, but Vikas, I have a follow-up question to you. And let's get Pankaj and Vikas together. Right? It's great to have two storied money managers together. Vikas, usually when you strike a really good deal, you are all beaming. Today, India struck such a good deal, you're not all smiles. Why is that the case? Because I hear you say this is the end of uncertainty, end of pessimism. Why isn't the usual Vikas Khemani here?
I just don't want to, give a huge euphoric thing. I'm just saying I've been positive on market for some time. This is one more uncertainty behind. I mean, I was positive on market without this. This is definitely a very good event. There's no question on that. You just don't want to create a euphoric moment saying that, oh my God, this is the only BNN. Because I've argued all along that this was not the one, which was not a doomsday when it was not happening for India. So you can't suddenly say that, oh, this has happened and it's a great thing it's a new future for India. So you can't argue both ways, right? You have to be honest to your own thought process.
That is a fair point. Pankaj, I wonder how you think about it. But the fact is that we did hurt because of the markets did hurt. FPIs did start exiting. You're hoping that they now come back. What then changes in the short term and what changes in the medium to long term?
I think in the short term, I think sentiment was crushed. Nobody wanted to touch equities. People thought that things are not going the right way. I think market is finally a Triveni Sangam of fundamentals, flow, and sentiment. And sentiment plays a very important role. I think what it does is that it creates hope for the future, that things are not all bad. And let me give you some ground level reality. And I have been on the ground for the last 20 days. I can only say that I have met companies across sectors. And for the first time, I'm feeling that the stock market and fundamental at the ground are divorced in a positive manner. So stock market is not reflecting the improvement which is happening at the ground level today. And this is across sectors. Cement is doing extremely well. Steel and steel allied products are doing extremely well. You speak to the direct infra companies which are rightly on the ground. They are saying that the demand from December onwards have been very strong. You speak to the consumption guys. They are saying that what has happened after 15th, 18th December, we don't know, but things have started to look positive. So I think this export deal also adds to that, kind of domestic story, which has been doing well. And stock prices are not showing that currently because there has been a lot of negativity around various stuff. So I'm pretty optimist saying that over the next 12 to 18 months, earnings growth is likely to improve from what we have seen in the last 16 months. Price correction, time correction, both has happened in the markets. And finally, it should be a breakout period for the Indian stock markets, and especially in the broader market cap curve.
Pankaj, so therefore, just to read into that and to double down on that, do you think that there's a strong argument to be made for multiples to be re-rated, particularly in the broader markets? And what would you think the street would find palatable?
See, even multiples don't re-rate. I think finally earnings growth will be the compounding part. And if you look at till yesterday night, 263 companies out of the top 500 companies have reported numbers. Market thinks it's doomsday, but it's not the case. The earnings growth on a headline basis, adjusting for the labor code, is 12.5%, which is not bad in my view. And if you bifurcate it between large cap, mid cap, small caps, hold on your breath. Large caps have given 8% earnings growth, mid caps have given 18% earnings growth, and small caps have given 39.9% earnings growth, which is roughly 40% earnings growth. So my sense is that earnings growth at the ground level is picking up after many quarters. Even in second quarter, we saw the glimpse. Third quarter, it continues. And if my ground reality checks come true, looking at what the way the January has gone for a lot of businesses, we believe that March quarter could also throw a lot of surprise in form of earnings growth picking up significantly. So we continue to believe that this is one event which has happened. Markets have, it's a good game changer for sentiment. But finally, for markets to sustain, you need earnings growth and growth to pick up across sectors, which I think from a ground level and reality check I am seeing at the moment.
Vikas, very quickly, your point well taken about, either you say that India is resilient even with tariffs, but having said that, can be a little flexible in the sense that this is, okay, if we were strong, this makes us even stronger. Where do you deploy money right now? If you're looking at the screen, of course, this morning is going to be everything, a rising tide lifts all boats. But where are you strategically now deploying money?
I think our long-term structured sectors, nothing changes with this. We've been long bullish on manufacturing and, the latest, but despite US deals, so we've been fairly exposed to that. Again, usual, banks, consumer, with this little bit more textile export-oriented sectors can do well. Chemicals, which were beaten down over last 12 to 18 months, should come back. So you will see again, these some of the sectors where a lot more export opportunities can come back. Some of the capital goods companies which were exposed to US can kind of do well. Some of the pharma companies which were likely to get impacted, not all, but some of them were likely to get impacted, can do well. So I think again, I would say that boils down to understanding individual business model opportunities. I do believe some of the auto component companies, by the way, have done well today and probably likely to do more well in future as the uncertainty gets over. So I would say that nothing changes from an India story perspective. I think it's more of the same, but eventually it boils down to identifying the right company, right management, which is available at a reasonable price and can grow and compound wealth. That is the only thing. Sectorally, we all know what is likely to do well and not do well.
Vikas, point well taken. And by the way, I mean, your analysis of how it has not been a bad news also in some sense was true. So I was not referring to that. But usually, like I said, you are exuberant at the right deals. So which is why I was thinking, why not? But clearly take your point. Pankaj, one last question to you on this conversation. And that is this, that Vikas made this point that FI flows could return meaningfully, right? That has an impact on what the currency does, which in fact becomes a bit of a positive virtuous cycle, right? Because then you don't have the currency acting against those interests. And 2025 has shown us that FIs are important, right? DI is maybe the plank, but FIs are also important. Do you sense that tide turning, which could be meaningfully positive?
Absolutely, Neeraj. More than FIs, I think markets will be extremely surprised over the next 12 to 18 months in the number of FDI deals we see being signed by good companies with their foreign American counterparts. My understanding over the last few months suggests that in many, many sectors, the American counterpart was ready to set up the factory in India with the Indian partner, but because of the uncertainty on trade-related tariffs, it got pushed back. I think those deals will start to happen. And if that happens, I think a more stickier money, which is FDI, starts to see its way. On a gross level, for the last many years, we have seen between $70 to $90 billion. But last couple of years, we saw that net number was a negligible number. And that played an important role in your currency devaluation, which we saw. And I think that is going to reverse. Mark my words, over the next 12 to 18 months, India will see a significant amount of FDI inflows, which I think markets will be surprised by. A lot of foreign JVs will get formed. A lot of foreign companies will set up their back-end operations in India because the rivalry between China and US is not going to go away in a hurry. And this provides an extremely important point. And we are now lower than Bangladesh, Vietnam, Cambodia, Thailand. And that puts it in a very, very sweet spot from an FDI perspective. On the FIs, I think the first leg, as Vikas mentioned, will be short covering. And the second leg will be to reassess India in a fresh view. And I think FIs have been short India for a long time. I've been writing across all my emails that this is the lowest underweight they have ran over the last few decades. And if that starts to inch up a bit, because India has 15% weight in the emerging market index, I think you will see FI flows also coming back. But my hope and a more structural long term is FDI flows into the country.
Okay, there you have Prime Minister this morning. I think everyone is looking at how deftly these deals have been struck. This is Prime Minister entering Parliament. He will be addressing the NDA Parliamentary Party meeting this morning, which will be held at the auditorium in Parliament House. You're unlikely to hear from him right now, but these are important pictures because, this deal that has been finally struck was so crucial for everything that the nation needs to do right now. Markets in that sense sometimes just become a reflection of the bigger picture, right? Trin Nugent with us, and I want to thank Pankaj and Vikas for their time. Pankaj, Vikas, thank you so much for joining us this morning. But I want to go to Trin Nugent, senior economist covering emerging Asia, Natixis, and I doubt I've seen anyone cover this deal's twists and turns in as much detail as Trin. She follows the Indian economy also very closely. Trin, is it a good deal for us?
Absolutely. The rupee went from the worst in Asia to the best today, right? So you see that very strongly in the rupee. You see that in the Sensex and Nifty. Everyone's really excited. It's a big, huge sign of relief. And we've always argued that India trade deal with the US will happen. That tariff will need to be dropped. The question is how and when, and this is happening. And I think the reason why markets are so happy about this is that it's immediate, right? Immediately, you'll get that lower from 50% to 18%. Immediately, Indian exporters will feel more competitive, which means earnings will feel better and there'll be more dollar inflows and therefore helping with the rupee. Immediately, that also takes the drag off the back of portfolio flows, which have been wondering how long is this going to be a drag for, because the US, which was India's biggest market, became second to the EU in 2025, goes to show that, in fact, that India's need this trade deal, and the US also needs this trade deal, and the immediate relief is felt immediately. Versus, for example, the EU FTA, which I think is also a big deal, but the market did not respond so proportionately, is that it's positioning for future liberalization. It's very unlikely to be ratified by the EU itself and also India until 2027, and everything is being phased. But for now, you get immediate pressure off India's back, and I think that's going to make a huge difference in the short term and also long-term prospect for India, because you're reversing the negative impacts. But additionally, it is competitive, as many people have mentioned. The 18% is very competitive vis-a-vis Southeast Asia, which gets roughly the same, but a bit higher, somewhere between 19 to 20. But the most important thing, in my opinion, for India is that it's in the game of trade, right? It's signaling that it is, with the seriousness of FTAs with the EU, with the UK, and most importantly, the biggest market in the US is the US. And so by saying that, it's opening itself for further liberalization, further reforms, and the fact that it's putting its name in the on the map for manufacturing, not just for India, but manufacturing to export to the US, manufacturing to export to the EU, and many other markets. And I think that reflects also the budget that was unveiled on Sunday, and that reflects the change of tide in Indian policy mindsets that's willing to take much more risk, right? And I think that's very important for India.
So all fair points. Trin, I want to get your view specifically on the various implications of the rupee strengthening, right? So it's already at 90.4, and one would assume that with the pressure on the central bank being taken off somewhat, or expected to be taken off somewhat, the liquidity scenario should also improve going forward, because in intervention you would essentially have to suck liquidity out of the system. So what are the follow-through impacts that you see happening there? And already, by the way, bond yields have cooled off from the highs that they saw on account of that heavier borrowing number.
Absolutely. So India was under a lot of pressure, right? So one of the disconnect that we saw in India was like amazing growth, but nominal growth was slowing, earnings were slowing, and the rupee was all-time low. And that disconnect was really this trade relationship with the US deteriorating. Exportings were holding on to dollar, not selling it because they see why would they, right? Because it's becoming more scarce and that they, get more so on and so forth. But now we have a reversal of that picture. The reversal is that the immediate relief is immediate, right? This trade deal is not one in which you have to wait for a long time. Immediately you get a lift off. And therefore, for an INR perspective, that can immediately be felt. And you saw that today in that you should expect more export earnings because from lack of orders due to very expensive, now it's competitive. So you should get more orders, you should get more export earnings. And that helps with liquidity. And it creates a very helpful situation on the back that we know that globally, there's a lot of debt issuance out of Japan, out of the EU. That bigger supply means that India, when it actually have to issue more, and that's what the budget shows, that it's going to actually have to face a tightening global liquidity conditions. And that easing of liquidity from the export side, from the current account side, is very helpful. And actually, meaningfully, it will actually help facilitate the capital account as well. So we see the boost, I think, from the sentiment, and that will help the INR. And I would juxtapose the INR versus, for example, IDR, where a lot of people see the risk to Indonesia as more domestic oriented, what the president is doing in terms of monetary independence, fiscal slippage, whereas Indonesia, a lot of risk that it has is really more externally driven, this US tariff situation, and what is Prime Minister Modi is going to do about it, right? So it's not really concerns about what Prime Minister Modi is doing to India itself. So I think by being able to negotiate this, that risk premium that you saw for India is disappearing very rapidly.
Trin, now we know that this, good morning, of course, this is Neeraj here. We know this is going to be growth conducive, right? The question only is, because you have a great eye, while you are an economic voice, a great eye on flows and how they would move as well. Do you reckon that the end of this uncertainty, some bit of the end of pessimism, plus the fact that the currency will likely appreciate, all of that could mean that we could see after a long period of 15-18 months, FI flows returning, or would it at least be FI outflows getting stemmed?
Absolutely. So two things are helping India, of course. Of course, oil is getting higher, so any refined oil export would be supportive, a lot of oil exports. Secondly, is this trade deal is really, really important. As I mentioned, for investors, it wasn't so much that how is the earnings going to impact what share of the earnings, but the fact that India is facing this huge hurdle to the largest market in the world, right? And that hurdle, they worry, will spill over to other areas of the Indian economy. So if you look at even Indian service exports, they have slowed a lot last year. So I do think that removal of that big question mark puts India back to this thesis that it is going to be the winner of this whole tariff and trade war scenario. And you can see that it's actually positioning itself much more aggressively than under Trump 1.0. I wouldn't say thanks to this tariff because this has been very painful, but it pushed India to really push through this 2-decade-long negotiation with the EU. It pushed India to also finally ratify this labor reform that they passed but never implemented, and it pushed through the GST rationalization. The budget is also much more manufacturing focused, talking about supply chain. So the pivoting of the narrative and the pivoting of the risk appetite, I think is what investors like. Investors like the picture of India, right? We know that it's the whole domestic demand story, lots of people, growing budgeting, and so on and so forth, capex on infra. Now, I think that kind of fell on the back burner when India was really not so much focusing on trade because it was so being worried about this geopolitical and also domestic issue, right? It had state elections that it had to take care of. And I think the timing now makes sense, right? Now that a lot of domestic issues have been pushed away, we can now have this window for opening up. And I do think that is a huge game changer for India. And I think this game changer is also on the back of what has happened, which was the EU FTA as well, which was a big game changer, but not really changing market in the short term because you have to wait for that to be ratified and implemented. Whereas the US-India trade deal means that it's in the game and it's right now, and therefore it puts India on the map of a regional supply chain reshuffling on the map of saying that we're very, very interested in being much more competitive vis-a-vis the Southeast Asia. We're much more hungrier to grab a bigger slice of that pie, that manufacturing pie. So if you look at India net capital or net FDI, it was not great in 2025. And actually, we should see that to be positive.
Not to break that chain of thought, but we don't know the full details of the deal yet. We know that from India's side, there's a curb on import of Russian oil. But what are we opening up our markets to? From what Trump has said, we are now going to charge 0% tariff and pay 18% tariff versus 50%. Great drop down. On the agricultural sector side, which was the bone of contention, does it seem like there would have been concessions made? And what does that mean for India and the way the economy is structured right now?
So what you don't know, I don't know better, but I can tell you what I do know about other trade deals. So what I do know is that for South Korea, for Japan, for example, they did not have to breach their sacred or untouchables, such as, beef or rice, right? So I do think, and this is something I've commented on over and over again, is that for the U.S. is not what it's really interested in. It doesn't need to breach the red line, so to speak. What it does want is for India to liberalize more, right? So a good example is Indo-auto market. It is the third largest in the world. However, it imported very few, right? The market itself is a 7-digit figure, millions of cars, but it imported basically a 4-digit figure from the U.S. So I do think that there's a lot of room from the beginning of where it is, which is very high tariff, to really a lot of liberalization. So of course, it's true, the devil's always in the details, and we have to wait for the details. But it also is immediate in that Indian export of labor intensive is immediately relieved from this pain from the 50% tariff to 18%. And that's we know from the Korea and US trade deal, right? We know that even before the deal is signed, countries enjoy the reprieve of the tariff. And therefore, I do think that is a positive. The details will come later, and we'll find out. I'm pretty sure it's going to be somewhere in the middle. So it's not going to be complete. India doesn't change completely overnight. And I would imagine that Prime Minister Modi is very sensitive to his constituents and would not completely breach those red lines. But within the red lines, there is plenty of room to move.
Trin, on that note, I'd like to thank you for joining us today. We must say from all of us here, we enjoy speaking with you because you bring that unique energy, bring a smile to all of our faces. Thanks so much for taking the time.
Oh, thank you for inviting us.
All right. Well, I want to go back to the gentlemen in studio and Parag and Kush. If I'm not mistaken, apart from budget day, the last 5 sessions, you've seen the second half that has been significantly better than the first half. Is that likely to pan out today as well?
Very likely. In fact, while I've been in the studio, I've been checking at the setup which we have for those typical intraday calls on the index. It's still not given that trigger. Otherwise, jate mein wo Nifty or Bank Nifty pe ek long call deke jata, because that profit booking is extending a bit, but it's okay. We are still in a very healthy, comfortable zone, and you could see an uptick from here as well. Most likely in the second half today. If not, then definitely in the following days. I'm actually a little glad that we've come off the highs, because then it leaves room, or it creates room for you to go fresh long at the current levels. So yeah, whenever that tide turns, from an intraday perspective, you could create a long position, and 25,500, 25,600, that zone becomes your immediate stop loss.
And Parag bhai, as before we let you go, your thoughts on whether this is going to be a rally which then cools off, or are we starting a shift?
No, we are starting a shift.
We're starting a next leg of the bull run.
So normally, if you ask me, my style is that in such a gap up opening, I would definitely sell. So I'm telling my team, just hold on. Right now, I don't want to sell. This is the first time in my life I'm doing this.
Wow. Why is that? What is the thinking?
See, India macros were absolutely superb. We had no doubt. The sentiment of FIIs were negative because we were not a AI place and US trade deal was not happening. And I think now one part of the thing has happened. Already anti-AI wave has started a little bit at the margin. So if both comes into play, we are in for a very good time.
So that FII buying, possibly we're going to see post 12-1. So watch out for the afternoon session as well.
If not today, they'll come. They'll have to come. So
they'll
have to come. So now they cannot. Now this thing is done. So I think, And plus, as I said, a lot of macro things in favor of India now because of this rupee appreciation starting. And see, if you look at from FI's perspective also, rupee has depreciated so much. Stock markets are down so much versus other markets. It's a great entry point for them, right?
Just small 30 seconds. I know we have the next interview waiting, but just small 30 seconds here. Even if the FI inflows were not to come in torrents, if the outflows stop, right,
that's good
and the DI flows continue, that's great for our markets.
Yeah. They have no reason to sell right now. Thank you so much, Coach Parag, for joining in today and giving us your perspective on what is a very important day. So what we're doing is we're getting you the big market voices, we're getting you the big money managers, we're also getting you the company perspective. So in fact, listen into what Aarti Industries is saying. Suyog Kotecha, CEO and Executive Director, spoke to our very own Hiral Dadia. This is what he said on the US India trade deal as well as the company's Q3 performance.
We're talking about an 18% tariff number. This was something which probably the street was really waiting out. Question was, when will the trade deal happen? Question was, at how much will the trade deal happen? Your initial reaction?
Well, it's indeed a good morning for everyone. I think this was something that the industry long awaited. And it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
Okay. So you help me understand, in the previous quarters when we were speaking as well, the idea was recalibrating to other markets, etc., because the pressure was coming in certain segments on the back of tariff issues. How do things actually change for you on ground? What were the trouble areas and what gets sorted now?
So I think as a company, you do a diversification strategy, right? So though we increase exports to other market, I think we did not vacate US market. In fact, we actually resumed our US volumes in the last quarter itself, while absorbing part of tariffs. Now with the deal coming through, I think it just gives push to further volumes going into US. Plus, the tariff impact will get significantly mitigated. So as a company, diversification always helps. But now with the certainty, we expect the margin profile also to improve.
Okay. With certainty coming in, any commentary that you've been hearing from your clients, were you anticipating something like this already?
No, I think this was long awaited. I think everyone was very clear that given the two largest economies and the amount of trade flow that exists between the two countries, the deal had to happen. But I think, it's a very positive, as I said, for the sector. If you step back for a moment and look at last 3-4 weeks, right, there are 3 major events that are happening which could impact the sector. US-India trade deal is, of course, a big deal, but even EU FTA, where 97.5% of, chemical export lines will practically go to nil duty. And more importantly, China's anti-involution stance, where they've started to take actions to curb deflationary export pricing and manage their overcapacity. I think all these 3 are actually a big positive for chemical sector as such. And, we might be seeing the start of recovery, which has been long due for last 2 to 3 years. The sector has been impacted quite significantly. But I think all these 3 global macros are expected to boost the sector, positively going forward.
Okay. Suyog, earlier in terms of our conversations as well, you had already mentioned that negotiations were underway to maintain that US demand as well. Now, with the deal coming in, does this actually give you any pricing power, number one? Or do you think the price concessions that we were looking at will remain in place for the existing contracts? How does that schematics of things work?
No, some pricing power will definitely come back, right? I don't think anybody had ability to absorb full impact of tariff on their own. So I think the impact was shared by multiple stakeholders in the value chain. And in that context, as we go back to 18% levels, I'm sure the pricing power will come back and everyone in the value chain will benefit.
Okay, so that's with regards to where the trade deal goes. Now, if I have to talk about the third quarter itself, and let's start with the US. We've seen the volumes which have come back substantially in terms of the resumption that has happened. with the accelerated deal that has come in right now, do your plans to reach that 60 to 80% utilization at your newly commissioned Zone 4 project comes in earlier than expected?
Yeah, I think in general, because of the trade deal, we will see a lot more stability in the performance and a lot of growth projects, especially from Zone 4, where significant chunk of these ag and pharma intermediates were also ultimately targeted towards the developed market. They will also see a faster ramp up. Given the nature of the product and the specialty products, of course, it does take time to go through all the qualification cycle once the asset is commissioned. But from a macro point of view, it definitely supports the capex which we are supposed to commission in the next 12 months time frame.
Okay. Taking the way Q3 has panned out, and sequentially we've seen that growth that has come in as well. What is Q4 looking like? Because we are already in month 2 of the fourth quarter and getting into FY27 as well. Where are you seeing pressure? Where are you now seeing those up moods coming in?
No, I think in general, as I said, with the 3 macros now turning around, we see volume demand, across end-use segments. I think on the margin side, there was a lot of pressure, especially in the agro and dyes segment. Now, with the latest movement, both on a US trade deal as well as some of the actions that the Chinese industry is taking as part of their anti-involution strategy, that margin pressure also should start getting mitigated to some extent. So, in general, we are looking for a better volume recovery as well as margin profile going forward.
Okay.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy
who loves
Welcome back to an exciting morning, and this is India Market Open. We're celebrating, or rather the market is, the signing of a trade deal between the India and US. We're off the high point of the day, but still gains of over 600 points, nothing to sneeze at for the benchmark Nifty 50. We were languishing just a tad bit, now trading above 25,700, and even the broader market's looking sanguine at this point, with gains of over 2.5% for both the mid-cap as well as the small-cap index, and overall, the market breadth very, very healthy at this point. It just must be said, Neeraj, that a few of those circuits that you saw early morning on the upside have in fact opened up. And so what we were talking about opportunities in the broader market, something like a Welspun Living, something like a KPR Mills, LT Foods, Aarti Industries, those have all opened up.
Yeah, most certainly. So, I mean, first vanity, then a little bit of sanity, and then the reality will come in, wherein maybe the markets move higher. But yeah, I mean, Alex, just one simple point would be this, right? I don't know what you made of it, but Pearl Global, we got a chance to speak to him, and he mentioned that for the US side of the business, it's about an 18% jump on EBITDA, right? For the US side of the business. Now, people can do the math about which businesses have a higher US exposure.
Sure. And then there are some with 60-70% exposure.
Exactly.
Which is incredible. But also, another point that I think some of our guests have been making over the course of the day is allied exposure to the extent of the financial services space, where there were pockets of weakness, MSMEs in particular, some of those external facing ones, that overhang goes away. And so if you're talking about a 12 to 15% increase in bank credit, maybe we need to look at the potential upside to that. But we're joined this morning by another big voice in the asset management space, Sandeep Tandon, founder and CIO of Quant Mutual Fund, joining us this morning. Sandeep, thanks so much for taking the time. And let me start with a slightly broad-based question on the sentiment, because to a large extent, one can argue that the fundamentals of the Indian economy were strong even amidst this headwind or this sword of Damocles of the trade deal not being done and higher tariffs. Now that that is out of the way, is this most importantly a sentiment-driven up move that is supported by fundamentals?
So obviously it is a big booster. If you ask me, I think what was missing was this drive was completely missing. People were slightly pessimistic. The hope was lost. People have given up. Like today, somebody called me in the morning. He said, "I'm reaching office on time today after a long period of time." You know, I'm just giving you a small perspective. People are slightly dejected. So obviously what has changed, the mood has changed, the drive is back, energy levels are back. So I think activity, if I have to define from market perspective, activity will come back. Today, let's say market has corrected in last many quarters or so, less from the domestic selling, more from the lack of buying on the domestic side, which is one of the reasons some of the domestic led companies has also corrected. It's not only the FIO own stock corrected, even domestic companies corrected. So this is the background. I think it's a constructive development, and it's not only about the US trade deal. If you really look at the EU trade deal happen and the bilateral talk which is going on with so many countries, so I think it's a very constructive approach that something has changed, and this is what we have gone through a small amount of pain for last many months. I always said our entrepreneur will emerge much more stronger if we go through this thing and we learn how to reduce the concentration risk on particular geography, and that's the case. And I think in going forward also entrepreneur will look into it, and if Europe deal, which is according to me is quite liberal and quite good, if that is the case, then we have very important market opening up from maybe if say from next year onwards.
Sandeep, I do know that you look at rupee, you look at flows very closely as well. So what does this tell you about the direction? And it can go one of two ways according to what people have said so far. At the very least, you will have a cessation of outflows. But is there possibility of a turn in the tide?
So if you really look at, we were very early to talk about from last 2018 onward rupee depreciation till 2000 till 90 levels. So we have reached that 1992 mark sort of thing. My personal sense on multiple channel, we have said that how you look at rupee. A lot of people look at rupee is very weak. It is, yes, it has underperformed as compared to developed market as well as emerging market currency. But I look at not as a breakout phenomena. I look at as a peaking characteristic. Given the way Indian economy is growing, our contribution towards the crude related expenditure, which is there, is falling significantly. Overall macro picture is good. So I think rupee should appreciate going forward, and it's a good data point to talk about. It's a constructive background, and I think if let's say the rupee depreciated in last 6 months because of trade related challenges, and I think it worked very well for our export. From a strategy perspective, it was not good, but from the FPI perspective, that was not a great news. But what is very important to understand, don't look India still in isolation. What we have to look at on a relative basis, India macro picture was anyway good only, but because of demand supply situation, we were affected. What is very important for us now to understand that our predictive analytic indicators are indicating difficult time for the developed market, and India will be outlier in 2026. So India will be outperformer in 2026, irrespective of the absolute performance. So money flow on relative basis. So if region specific emerging market also, we are seeing signs of exhaustion. We are seeing signs of exhaustion in the US market. If that is the case, then money has potential with a lag effect to shift to India. And that is the trend which I will like to watch very closely. And that is our thesis, which is endorsing that we are moving in that direction. Money will actually come back to India, which has been missing for, let's say, for last many quarters or so.
Music to the ears. Sandeep Tandon, good morning. So what's the impact thereof? We are literally at the start of 2026, right? Sure, Jan has gone, but we're still at the start of 2026. I hear you say 2026, not in your words, but 2026 could be a banner year for Indian markets. So will India just outperform some of the other markets, or in isolation, India could have a year of very solid performance both on the equity markets as well as on the currency?
Thank you.
So what is important to understand, let's say if I have to talk about a year perspective, let's say beginning 2025 also this question came and market has corrected. I always said that by 31st December 2025 will be higher than 31st December 2024. Something similar if I have to say, I think by end of this year, India will be in positive territory, if not decisively up, but it will be meaningful up. And what is the way we have to play? This year is all about PE contraction year. We are calling it a PE contraction year globally. So you have to identify neglected, beaten down, where companies which are in neglected territories have good growth potential, and with the trade deal also getting benefit, GST benefit, income tax benefit, all those factors you have to keep in mind. See, if you really look at in last 2-3 years, particularly the new age company globally led by AI and everything has done very well. And because in India, the companies are very limited. So we have seen extraordinary hype getting created in few names. I think those anomalies will correct, and quality name company where earning potential is there will come back in the system. So I'm very optimistic on sector specific and stock specific rather than saying everything looks good to me.
You know, Sandeep, hi, Tamanna here. That's an important point. And even as we're feeling euphoric, triumphant, important to try and understand what could go wrong or what we need to look out for. Markets, of course, have cooled off. No one's complaining about a 600-point bump up on the Nifty, but they have cooled off. And we don't yet know the concessions which have been made, if any. The devil will be in the details. What will you be looking out for?
See, the first most important point is that sentiments. Okay, so we started the show with this. So sentiments has changed, which means the activity levels will move up. People participation will rise. People will become more constructive. People look for buying on this as a thesis which India has been growing for last many years. I think that thesis has potential to come back. And what is more important from a FI perspective, rupee stabilize. Macro picture becomes slightly more constructive, and we see some upgrade coming even on the earnings point of view. We strongly believe that September 2025 quarter earnings cycle has bottomed out. So quarter on quarter, you will see a gradual improvement. I'm not saying it is a very runaway move on the terms of earning. So you have to look at some of these factors, and I think which will attract flows. Okay, the key thing is the stability in rupee will be very, very vital to attract FPI flows and some of the changes. Look, this is like sentiment booster. Even lot many institutions were slightly worried about deal is not going through. It was a more of a psychological barrier. No, it's not. Our export was badly affected. Yes, some sectors, some companies were badly affected, but not in general. So I think it's the way we look at totality rather than just looking at small pockets. I think sentiment-wise, great news. Perception-wise, obviously it will help. And I think what is more important to watch rupee closely. Our worry in India is not about Indian market. Our worry is more global. Our worry is developed market. Our worry is other emerging market. Our worry is actually dollar has a potential to spike, So that is something because a lot of people have now taken for granted the de-dollarization thesis. We are a strong believer of de-dollarization from longer term perspective. But from a near term perspective, I think we have to watch this phenomena very closely because this is the battle of supremacy between China and US. And in that context, relevance of dollar is becoming more and more important for US perspective. So we have to see very closely how it plays out. So that's the one risk we are watching it very closely. It will not affect India up to that extent because we have already been underperformer. We have been neglected territory for a while. So which is a good news. Anything which is any damage happens in the global equities or the emerging market, I think India should be beneficiary of that.
Absolutely. Sandeep, thank you so much for joining in. And I love the way you started your conversation saying that, people are feeling like getting up and going back to office and sitting in front of their trading screens after a while. I think it will show in the volumes as well. Because you feel like the tide has changed. Sandeep Tandon there. We're taking the conversation forward. And Pranjul Bhandari, Chief India Economist and Macro Strategist, ASEAN Economist, HSBC, joining in. Pranjul, great to have you on. And we've been talking for the last few months about where the pain has come in because of the trade deal. Because of the lack of a trade deal or because of the tariffs. Would you say that the deal has come just in time before any huge impact of these high tariffs could be seen on the Indian economy? And what have you made of the contours of the deal basis on what is available right now in terms of information?
Yes, thanks for having me. It's a great day to be on your show. Yeah. And look, I was saying from the beginning that this 50% tariff was actually a big downer for India for just not the short term, but also the medium term. My sense was that people were not realizing that exports growth has slowed a lot. They were just looking at the dollar value of exports and saying, hey, that has held up, but growth was going away. And we are a country which wants growth. That was a problem. The other big problem was FDI inflows were not that strong to offset the outflows that we are seeing, and we were doing pretty poorly on net FDI. And I do think that the trade deal with the US is going to help on both those fronts. So my sense is that, yes, it's been a pretty good news so far. It's been a great morning. But of course, there are a lot of details. I think we'll have to watch out for a few things in particular. One is, do we really need to bring down the oil imports all the way down to zero? Second is the $500 billion that we need to buy from the US. What is the timeline? What are the details? And the third is India's exports tariffs on US. If they're going to be down to zero, as President Trump said, is it going to be on all goods or will there be some exclusions? So I think these are some of the details we still need. But on the whole, my sense is it's very positive. Earlier, I was thinking that with a 50% tariff, growth could be 70 basis points lower. But now if this has been brought down to 18% tariff, I think the growth drag more than halves to about 30 basis points. I think that is good. In terms of asset markets, my sense is across all three, equity, rates and bonds, we were underperforming the EM index for the last 1 year. And a lot of it was because of our own domestic issues. Less growth certainty and also tight financial conditions. I think both of them are getting addressed right now. Tight financial conditions by the RBI and the growth certainty part because of all the trade deals we are striking. So I think for all three asset classes, there could be some reprieve in the next in the foreseeable future. And most importantly is the long term. The long term is important because I think we finally have a growth strategy. It's not just about the India-US trade deal. It's the fact that in 1 year we've got India-US, India-EU, India-UK. We've got a New Zealand, Oman. We have improved relationships with China. We are cutting down customs duty. We are bringing down non-tariff barriers. I think we are finally coming together with a new growth theme, which is rise in exports. And maybe we can also discuss about what the budget did for this. But I do think that things are coming together, and that is what is exciting, not just the US-India trade deal.
Pranjul, the nature of the news is such that the tendency is to focus on the biggest piece of it. And so therefore budget seems like a long time back, right? Even though it was over the weekend. But having said that, I do want to ask from an economy standpoint, the argument that was made, as is usually the case when things were not going right on the US front, is that the implications for economic growth are not terribly significant. But that becomes a tailwind now. I'm just wondering what the knock-on effects would be. Assuming that the rupee continues to strengthen a little bit, liquidity pressures perhaps ease a tad bit, the current account starts looking better. From your perspective, will you have to adjust your estimates at all?
Well, look, yes, if I had a low growth number for FY27 because I was worried about the trade deal with the US and now it looks more certain, then I will have to change my growth forecast. Broadly, I would think it would be about 30 basis points more than I was thinking before. If I was going with something close to 6.5%, I think it will now be closer to 7%. So I think that is going to be sort of like one growth change that I make. But I also must say that there are other changes I will make. For example, I think the balance of payments could look better now. The trade deficit slightly smaller, inflow slightly higher. So on the whole, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive. I'm going to hold back a little bit on rates because they have a slightly different story. I think for them, the worry will be that if growth is going to be strong, then will the RBI have to help with all of these OMO purchases and all of that? So I think that will weigh on their sentiments. Will the RBI cut rates? I think that could steepen the yield curve. So, the bond market will take a little more time to rejoice. But eventually, if GDP growth improves, then demand for bonds should also improve. And eventually, the bond market could also benefit, though I think they're not going to be seeing this immediately. So across all asset classes, I think there is a change in sentiment. But as I said before, it's the long game that I've got very excited about, that India is doing all of these external sector reforms, not after 2 years, but after 2 decades. And I think that is great from a growth expectations front.
Yeah, though Pranjul, good morning, Neeraj here. I wonder if people are globally are just exiting bonds, why would there be a big appetite? But I take on board your point that with a delayed gratification, bonds could also come into the party. But rarely have I seen you sound so excited, Pranjul. You are fairly measured in your conversation today. Maybe just that kind of a day. I wonder if you are recalibrating your growth assumptions for starting Q4 itself, but for a better part of 2026 as a result of this and the previous 3 or 4 external deals that India has done. Could there be a surprise on the upside on growth in 2026?
Yeah, that's a great question. And the truth is that a few years ago, we were all worried about what is India's growth plan. We could tell you lots of small stories, but what was the big plan which drives growth in a major way for multiple years? And I felt like we did not have a growth plan. We could talk about 1 or 2 sectors like electronics, but we didn't have a full growth plan that could create jobs and take India to 7% plus growth trajectory. And slowly over the last 1.5 years, I think a growth plan is coming together, and that is what is interesting me at this point of time. We've always asked, and please listen to me carefully here. We've always asked that why isn't private corporate capex rising? We are asking this from 10 years. First, we said because balance sheets are stretched. They got clean, but that didn't help. Then we said corporate tax rates are very high. That got cut, did not help. Then we said we need public capex to crowd in private capex. That happened, but it did not help. Last year, we said we need a demand stimulus, tax cuts. That will help. We did GST tax cuts, but that did not help. I think through all of this time, the real answer was hiding in plain sight. The real answer was exports growth. We've never seen any country have good growth without seeing exports rise, because exports opens up a new market which you can cater to. On the back of that, you build up your infra, you build up your capex, you create jobs, and then you start this new demand in your own economy as well. We were missing that. That is how the US grew after the World War. That is how China grew for the last 30 years. We were missing on that story. So if we are going to be focusing on exports, or at least trying to focus on exports more than we've done in the last 20 years, that's got to be positive for me. Of course, competition is very high. I'm not saying that this is like a silver bullet and we're all going to get it right, but at least we are doing the right steps after a 20-year long wait.
Pranjul, we anyways hear you carefully, but I must say, this is a very different Pranjul Bhandari than what we've been used to interacting, and lovely, lovely talking to you today. Thank you so much for your time.
Great to be here. Thank you for having me.
All right, that's the HSBC view. Pranjul Bhandari saying, please listen to me carefully. This is the thing that will bring about private capex. Well, somebody who looks at that side, markets and economy very, very closely. Madhusudan Kela, a veteran and founder of MK Ventures, with us yet again, by the way, twice in 2 days, and with reason, simply because both the days have been so important. Mr. Kela, great having you, and thank you for accommodating this request. Simply because when we spoke to you the other day, almost everything that you said, including the numbers for gross borrowing, etc., were all firmly in our eyes. Now, we just finished a conversation with Pranjul Bhandari of HSBC, Mr. Kela, and she said that amongst all the other things that have happened, what this deal and a set of deals will do is that open up the export market and bring about private capex. Do you believe that to be the case? Because that has been that one missing point for the last so many years.
Neeraj, first of all, good morning. And I think I chose to really come here in spite of a busy day, because this is a celebrating time for all investors and for India as a whole. And it is not only about this US trade deal. It is about the series of events which have happened, including the EU deal, including the budget minus the STT, which was a little irritant. But I am saying overall, things are kind of shaping up really well from a market perspective. I think the economist will tell you better about the capex cycle and all. But what I feel was there was some amount of feel good which was lacking. Right? People in the market, there are corridors in the markets which were concerned that if this thing gets, too prolonged with the US and it starts to impact in ways in which we can't envisage today, then that was kind of worry. So that all of this is being put aside now. So in my opinion, Neeraj, and markets have seen very, very meaningful corrections from the top, specifically in smaller companies. Nifty has not gone anywhere in last 15, 18 months. So this is a clear market which will become now kind of buy and decline. Having said that, let's not forget that lots of companies in India wants to raise money, and there will be a real big pipeline of money which is lined up, pipeline of companies which are lined up for new offerings. So we should be very calibrated. There are lots of opportunities is what I'm saying, both, and even the new companies which will come, maybe a lot of them will come at some sensible valuation. So in my opinion, this is a buy and decline market, and today you can really buy it with a view that you want to now hold it for 2-3 years, and there is money to be made here now.
Madhu, good morning. I was just thinking back to when we spoke pre-budget, and the whole tone and tenor was very different, because I think pre-budget everyone was wondering ki kya hoga. Will there be some relief? Will there not be? The mood was, not as positive as it is today. And I can just see that difference. A lot of people we've been talking to are also talking about the impact on sentiment of market participants. For investors to want to come in, for volumes to grow. A couple of people said now people feel like going to office because of what has happened. Do you think that this is a shift which lasts beyond the here and now and what we are seeing right now in markets?
Very clearly, that's exactly what I'm trying to tell Tamanna. Because ultimately life is all about feel good. When we feel good, then only we want to do things, and investing is no different. And everyone's portfolio, including that of mine, has taken a beating. There's no doubt about it. In the last 12-15 months, people who have been individual stock investors have not done well. And something like this, today I can see so many greens in my portfolio. If you tell me today, Madhu, now you have to buy something new because I'm making money and my portfolio is doing well, there is a himmat to go and say that I want to buy something additional. Till yesterday it was all red. So, even if I had the money in the pocket, I did not want to buy or I did not want to participate. And that's how the psychology works. More importantly is the psychology of foreign investors. On one hand, you had currency which was depreciating. On the other hand, the markets were not really doing well. So there was really no hurry from a foreigner perspective, and they were making money everywhere else. I can clearly see, even looking at the markets today, there is clearly a short covering which would have happened or which will happen. And my biggest thing is that over the next 3-6 months, you will see possibly foreigners coming back and nibbling in and buying into Indian markets, which have been kind of absent. So your domestic flows will continue, and the foreign buying, once it starts to resume, even though it's small, that will lift up the overall sentiment. And I would just want to make one strong mention about what happened in the budget. So what happened in the budget was the buyback. Previously, buyback and dividend were at par. Today, the companies which are actually making cash, some of these smaller companies which had literally had no taker, and where the promoters have flexibility to increase their shareholding. I have spoken to a number of people in last 2 days. I think there are lots of people who will exercise this option rather than giving dividend. They will prefer a buyback. And at this valuation, I think promoters will not end up tendering their own stocks. So that will be kind of a thing which we saw in the market maybe 3 years back, and since last 3 years, the buyback window was kind of completely closed because the companies had to pay the tax. Today, company has to pay zero tax. So if I have 100 crore rupees, if I want to do 100 crore rupees worth of buyback, that entire 100 crore rupees will go into buyback. And the people who are going to gain, from an individual investor, the long-term capital gains or short-term capital gains, which falls in my hand, I am the one who will be paying the tax, not the company. So that's a big, meaningful change. So I think that window also opens up for smaller companies.
Point that you're raising, Mr. Kela. Alex here, and good morning to you, and thanks so much for taking the time as always. But important to speak to you today, and very important points that you've already raised. But I just wonder, the arguments were already being made before this deal has been struck that there might just have been a little bit of a dislocation with the way that markets got sold into, because the signs from the ground, Mr. Kela, were not necessarily that bad on the earnings side or otherwise. I'm wondering whether now the correction happens, yes, of course, but the focus now, I'm wondering what your focus will shift to. Of course, it goes to earnings, but what happens from this point on? Does that get built into some of these external facing sectors, allied sectors like banking? Do they benefit as well?
So the banking will obviously benefit, and whenever the foreign allocation of money comes, if you want to put large amount of money, banking becomes quite an obvious choice because that is the leverage play on the economy. Banks are indirectly a large leverage play. If the country is doing well, banks and financial services companies naturally are very leveraged and they do really well. So, and that is one place where you can actually deploy thousands of crores, and where the valuations, I would say, are still quite reasonable. Whether it is, the large NBFC companies or large private sector banks also, valuations look quite reasonable. So I think money will come. But from an individual perspective, I would say there are a lot of bottom-up opportunities in the markets. Stocks which have got really beaten down in the last 2 years because of external factors, because of internal factors, and most importantly, because of lack of interest. Because see, what is happening is all the large mutual funds who have got large corpuses now, they are not looking at these smaller companies. Suddenly that will not change. But over a period of time, as people start to make money, ये भैया मेरे को सिखाते थे बहुत, मैं आपको हिंदी में बोलता हूँ, ये पूरा नफे का दारू है, राइट? एट द एंड ऑफ द डे पब्लिक का यहाँ पैसा बनता है ना, तो ही उसका इंटरेस्ट आता है और तो ही लोग लेने को आते हैं शेयर. तो टुडे एज आई टोल्ड यू अबाउट माई ओन सेल्फ, my own portfolio is started to look green. So I am looking for ideas. That window was closed 2 days back because the portfolio was red.
Some things are best explained in Hindi, Madhu. I agree with you there. I just have one question. STT ka gum thoda kam hua hai? Because that increase is still there. Those volumes are still going to be hit.
अभी अच्छे दिन में क्यों सब याद दिलाते हो?
Only 2 days ago.
Good things today.
No, but just try to understand from a market perspective. Does that wipe out that issue?
I think that issue may still be there. But hopefully people will learn to, there are now so many positives. Hopefully it will be kind of get into back burner or back seat. And people maybe learn to live. Okay, this is the increase is there and we have to live with it. It's like we were used to be paying zero tax on long-term capital gains. Suddenly we started to realize that we have to pay 15%. So that doesn't mean that I have stopped trading or stopped investing. It only means that my mentally, it took a little time for me to correct myself, but I've got used to it.
Mr. Kela, do we celebrate 2 Diwalis this year? One right now and one in November. And do you reckon that the markets will be a different animal when we reach the Diwali in November from the Diwali right now?
Neeraj, in true sense, I think today is a true Diwali from a market perspective. Because see, मैं आपको बहुत honestly बोल रहा हूँ, लोगों का portfolio deeply hurt हुआ है. You go and talk to individual retail shareholders now. There is a very deep correction which is not reflected in Nifty. And today when you see so many stocks up 10%, 15%, 20%, that is the real jubilation. See, no one is holding index. How many people in India are holding Nifty or how many people in India are holding index? Maybe 1 or 2% trading population is holding Nifty or index. But the widespread holding up stocks is where people are. And once there is a jaan in that kind of market, now that is what gets celebrated. And hopefully that is what will get celebrated going forward. And I would just again re-emphasize that point. Let us not undermine that buyback window which has opened up. You will remember me what I am talking after 12 or 24 months. The number of companies where the valuations will become attractive, I think lots of promoters will come and do buyback instead of dividend. And that is very supportive from a market because it does basically first your equity falls, second your ROE and ROC improves because you are deploying your own capital which is there in the balance sheet. And the third, at least people know कि बस कहीं अटक गया तो exit तो है, कंपनी वाला खरीदेगा तो जरूर.
It's a fair point. Mr. Kela, to the point that you were raising about deployment of funds by some of the large asset managers as well, and eventually that trickle-down effect going to the broader ends of the spectrum, right? I'm wondering how long do you think that will take and over what period? Is it going to happen in the short term, that is in Q4 itself, or will it happen over the course of FY27?
बहुत अभी आईसीयू से निकले हैं तो मैराथन नहीं भागेंगे यार. अभी 18 महीने के वनवास से आईसीयू से निकले हैं. इट इज गोइंग टू बी ग्रेजुअल बट दैट्स हाउ द मार्केट्स आर. यू नो इफ इट हैपेंस एकदम तो कल ही बुल मार्केट फिर वापस खत्म हो जाएगा ना. वी नो दैट इट इज गोइंग टू बी वेरी ग्रेजुअल. आज तो आधे लोगों को लगा होगा मेरा भाव आ गया तो बेच देता हूँ. दैट्स द नेचर ऑफ द मार्केट, राइट? टुडे पीपल विल बी फीलिंग ए लिटिल रिलीव्ड that yes, मेरे ये 120 का 140 हो गया, चलो भाव आया मैं थोड़ा बेचता हूँ. But that's the wall of the worry with the market clients. That is the real learning which people like us have over 35 years. That someone was making a point that there is a bull run in India every 8 years. That point is taken, but you go and analyze how long the correction lasts from the bull run. It normally lasts between 13 to 19 months and we are on the 16th month of this correction already. So if you go through when 2000 happened, in 2002 actually after 19 months market bottomed out, but that was the best buying opportunity. The best buying opportunity was not in 2006, 7, 8. that is when market actually peaked out again. So the people who have gone through these cycles many times, they will realize that there is going to be a skepticism. It's not going to be euphoria all around. It's not going to be that today all of these deals have happened. So this we should go lock, stock and barrel, and that everyone will be in a buying spree. But it will happen gradually. Some stocks will start to make money. Some stocks will start to make new high, and that's how the confidence will gradually come back.
Madhu, I have two very quick questions. You said that the market tendency will be कि भाव आ गया है, so let's sell. Is that the wrong thing to do today? And second, you said
it's an absolutely wrong thing. Unless you are stuck, unless you don't like the company. If you are stuck, it is every price is a good price to sell.
No,
okay. But अगर आपके मन में ये था कि मैं कोई चीज 200 रुपए में लिया और उसका 120 का भाव हो गया, कंपनी वाज गुड एंड यू सॉ 140. सी साइकोलॉजी क्या होता है तमन्ना, मैंने 120 का भाव देखा, अब मैं आज 140 हो गया, 145 हो गया, मुझे ये लगता है यार एक बार बेच देता हूं, मैं नीचे में ले लूंगा. वो नीचे का भाव आता नहीं, अच्छी चीज कभी ऐसे घटती नहीं है. बट साइकोलॉजिकली पीपल फील रिलीव्ड कि एक बार तो बिक गया मेरा. एंड व्हाट विल हैपन आल्सो, दिस 145 विल बिकम 135 एंड यू विल फील वेरी इंटेलिजेंट कि देखो अच्छा हो गया, बिक गया. पर वो 146 होने के बाद कभी लिया ही नहीं जाएगा.
So okay, so that's the first part. Second part is you said that now people are looking for opportunities to buy. What are you looking to buy? At least sectors, areas, any kind of direction there.
पहला तो मैं सेलिब्रेट कर रहा हूँ जो पोर्टफोलियो ठीक हुआ है, and then of course we'll make a list. I think I am very, as I said, one has to be very calibrated. You know, there is a big pool of new issuance which is going to hit the market in the next 3 to 6 months. So I am just saying that it will be bottom up ideas. I am not in any hurry, but the list is ready. I am sure this market will continue to give you a chance, and wherever we are convinced that the company fundamentally will do well over the next 2-3 years is the one which will buy, and this will all be bottom up.
Mr. Kela, thank you so much for joining in today. If you are a golfer, you are swinging it well today. If you are a cricketer, you are coming on the front foot and hitting the ball out of the park today. But it's been lovely talking to you.
Thank you so much, Dheeraj. Always pleasure interacting. Thank you.
Thank you.
All the best. Have a great day.
Thank you. You too. And well, portfolios शायद रिपेयर हो रहे हैं. विजय केडिया जी को इसीलिए यहाँ पे लाना है क्योंकि अचानक जो इंडियन मार्केट्स बहुत ठीक नहीं दिख रही थी वो अच्छी दिखने लगी हैं. केडिया जी, गुड मॉर्निंग. थैंक यू सो मच फॉर ज्वाइनिंग इन. और क्या कहूँ, दिस इज अ ब्यूटिफुल मॉर्निंग. क्या आपको लगता है कि दिस इज अ स्टार्ट ऑफ समथिंग ड्यूरेबल, केडिया जी?
तो मैं इसको मेरे हिसाब से ऐसा बोलूंगा कि वो 1-2 लाइन है गाने की, कि नहीं तो तमन्ना बोलने वाली है कि
नहीं, मैं बोलने वाली थी कि बजट के बाद आपका गला सूख गया था, अब ठीक हो गया.
अभी हो रहा है, अभी तैयारी हो गई अभी.
गाना
अभी शुरू हो रहे. तो गाने की लाइन ऐसा है कि तुम आ गए हो तो नूर आ गया है, नहीं तो चिरागों से लो जा रही थी, जीने की तुमसे वजह मिल गई है, बड़ी बेवजह जिंदगी जा रही थी. तो ये आज की बात को समराइज करता है भाई, ये जो हुआ है
जी. तो अभी तक तो हो गया केडिया जी, लेकिन अभी जीने की तमन्ना है, मरने का इरादा नहीं है. बट क्या अच्छी तरह से जी पाएंगे 2026 में? डू यू थिंक ये रैली की शुरुआत है?
See, I will tell you, maybe few weeks back we had वो क्या जिसको बोलते हैं ना, समझो अंकल्स ऑफ ऑल डील्स हमारा हुआ था ऑस्ट्रेलिया, न्यूजीलैंड वगैरह के साथ में. वो थोड़े दिन पहले फिर वो मदर ऑफ ऑल डील्स हो गया था यूरोप के साथ में, और आज रात को समझो फादर ऑफ ऑल डील्स हो गया अपना यूएस के साथ में. अभी चिल्ड्रन ऑफ ऑल डील्स बाकी है, माने जो इन्वेस्टर जो अभी हैं वो इंक्लूडिंग अपने FIIs और इंडियन रिटेलर तो बेचारे लगे हुए, इंडियन इन्वेस्टर तो लगे हुए. तो मेरे को लगता है ये टाइम है, दे आर गोइंग टू कम बैक नाउ. दिस इज द बेस्ट टाइम फॉर इवन फॉर फॉरेनर्स पार्टिसिपेट इन दिस मार्केट, एंड स्टॉक्स आर माने क्या मर्सीलेसली चीप जिसको बोलते हैं, स्पेशली मिड कैप्स एंड स्मॉल कैप्स आर 40, 50, 60, 70% down. So I think this is the best time for India, and we are again, I think worst is absolutely over. Whatever low index had made in last 3-4 months or whatever, I think that is the final bottom. This is what I feel as of now. That is the final bottom. But that does not mean कि यहाँ पर again वो euphoric bull market had started. I am not in that camp. I feel that now stock selection will take place, and one has to invest in this market in small and mid caps. इंडेक्स चाहे उतना ज्यादा न भी बढ़े, हमेशा एवरी बुल मार्केट के अंदर में क्या होता है, जो मिड कैप स्मॉल कैप्स होते हैं दे मल्टीप्लाई, और इंडेक्स जो होता है वो एक परसेंटेज वाइज रिटर्न देता है. अगर इंडेक्स 2 टाइम्स 3 टाइम्स होता है तो मिड कैप एंड स्मॉल कैप दे राइज 10 टाइम्स 5 टाइम्स 20 टाइम्स एंड ऑल. सो और जब whenever market falls, index suppose goes down 20%, 15%, 25%, but mid cap and small caps they fall 40%, 50%, 60%. The same thing has happened. Now again, I think this new bull market has started. That does not mean that index एकदम कोई तोड़ फोड़ के कोई बहुत ज्यादा नए भाव में आ जाएगा. It will consolidate. Market will be selective, and it's time to buy good stocks with having a good balance sheet and high growth.
Yeah, ji, namaskar. Alex here. And in conversations that we've had in the recent past, you have said that because of the state of the market that it was in, you had done things that you have never done before, which is rotated into slightly larger stocks in lieu of cash. I'm just wondering whether selectively you are unwinding some of those positions, getting into the broader markets. As you pointed out, there are plenty of opportunities on the valuation side. Have you started doing that already?
Yeah, that I have started doing that. I'm selling my large caps and liquid stocks where I'm invested. And I've started deploying into small caps and mid caps. This is what I'm doing for last 10, 15 days.
And specifically, what are you looking for? When you're looking for companies in that small cap and mid cap space, is there a theme or is there are there triggers that you're looking for specifically on the earnings side? Have you seen those?
So I think earning has yet to catch up, but things have started looking rosy. This is what I feel. And I have invested in infra stocks. Some of the infra stocks I have invested in, and they had also fallen 60-70% from their peak. And the balance sheet is still intact. Only the profit was little down, maybe because of government से जो पैसा आने वाला था वो आ नहीं रहा था. Going forward now things will improve, and because the valuation is very cheap, so I'm comfortable in investing in such companies.
विजय जी, आपसे शिकायत है, आपने गाने का प्रॉमिस किया, 2 लाइन बोलकर आपने निपटा दिया. That was not a song. That was just a line recitation. तो गाना तो बाकी है, लेकिन उसके पहले आपको कुछ आइडियाज देने हैं हमारे व्यूअर्स को. Our viewers love watching you because they really like your style of investing and they look for some cues from you. When you say that you're looking at the broader markets, कौन से sectors, कौन से किस तरह के आइडियाज आपको पसंद आ रहे हैं?
तो देखिए, मेरे को इंफ्रास्ट्रक्चर के जो स्टॉक्स है जो पहले बहुत बढ़ गए थे, ठीक है, और वो 2 साल के अंदर में बहुत रिएक्ट हो गए, मैंने उनके अंदर में इन्वेस्ट किया. मेरे को वो सब अच्छे लगते हैं. मेरे को पीएसयू बैंक्स बहुत अच्छे लगते हैं. मेरे को बहुत सस्ती लगती है पीएसयू बैंक्स. वो सब सिंगल पी पे, हाफ पी पे, 5, 6, 7 के पी पे मिलता है. 12, 13, 14% की ग्रोथ है उनमें. 5-7% का डिविडेंड यील्ड है. मेरे को सेफ एंड सिक्योर्ड मेरे को वो लगते हैं. सेफेस्ट एंड मोस्ट सिक्योर्ड स्टॉक्स वो लगते हैं. और टूरिज्म मेरे को पहले भी अच्छा लगता था, बीच में थोड़ा सा डिफिकल्ट हो गया. मेरे को आगे भी मेरे को अच्छा लगता है. मैं आपको सच बोलूं, मेरे को एयरलाइन का स्टॉक भी मेरे को अच्छा लगता है कि ठीक है, वो जो गिर गया, जो होना था वो हो गया. अभी वापस नया सब्जेक्ट शुरू होएगा. तो फिलहाल मेरे को ये 2-3 अच्छे लगते हैं ऐसा, और इनमें मैं इन्वेस्टेड हूँ.
ओके, एंड नाउ लेट्स कम टू द सॉन्ग. कोई ओरिजिनल कॉम्पोजिशन नहीं है विजय जी? आपने बना के तो रखी होगी.
नहीं, अभी नया तो नहीं बनाया. अभी वही मैंने डाला हुआ. अब एक सीक्रेट तुझे अपन भी बताएगा, इंडिया को
गा के.
अब एक सीक्रेट तुझे अपन भी बताएगा, इंडिया को शॉर्ट किया तो गॉड भी ना बचाएगा. इंडिया हबीब मेरा, इंडिया नसीब है, तू बड़ा ही अजीज है, तू बड़ा ही अजीब है. जो भी तुझको लेके बैठा वो ही खुश नसीब है तू. तो ये हमारे हिंदुस्तान.
Wow, that was superb. That was superb. Thank you so much, Vijay, for always being a sport, always coming and speaking to all of our viewers. और बहुत सारे investors जो मायूस हो गए थे. They need this message today. So thank you for that. The inimitable Vijay Kedia there as always. We're going to take a very short break at this point. But look at how we're describing this. This is the Dhurandhar deal done. I know this is a movie I finally watched it on Netflix. I watched it on Netflix, not in the theaters. But now I know what the hype is.
Okay.
Yeah, very well made movie. So it is the Dhurandhar deal done. On that note, we are taking a quick break. On the other side, we've got your calls pouring in. All of those being answered on Ask Profit up next. Stay tuned.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Masterstroke Art Awards on the NDTV network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo Honey Singh. This is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy
who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म
You are watching Ask Profit on a day where Nifty is 3% high as we speak, and you can see the smiles on Puneet and my face as to how this entire, I mean, and we've been waiting for this deal for so long, and one tweet at probably 10 p.m. in the night.
Stay tuned
and markets
was that tweet, and we were all staying tuned for the next 2, 3, 4 hours of what it could be.
What it could be.
What a surprise, right? What a surprise.
I
I don't think there was expectations of any such kind of deal so close post the budget. But definitely one that took us by surprise and positively by the markets as well.
For sure. I think so many, months of planning and, kind of anticipating as to what will happen has finally translated into an 18% tariff for India. And certainly very positive for the markets. You've been hearing from market experts since morning as to how this could be, a great deal for India coming in for sure. And that's reflected in how the markets are performing. The broader end, however, is doing fantastic because, Nifty 50, however, is seeing gains of about 3% and held that gain. Of course, we opened about at 26,000 levels, but probably some people in the markets were trying to book profits, but the mid cap 150 up almost 3% higher, the small cap 250 also almost 3% higher. So everybody and anybody who's been waiting for that rally in the broader end of spectrum is cheering, somewhere today at least. So that's with regards to, of course, where the broader perspective for the markets is concerned. But I think a lot of names also are seeing great gains. I mean, Puneet, if you look at so many textile names, you have so many names that are export facing in terms of where the US market stands. I think a lot of them locked in upper circuit.
Well, most certainly, and it's been a very, very strong day. So you pull up all those textile names, all those chemical names that have been out and about in terms of favor, in terms of the market sentiment. Almost a lot of them on the 20% mark as well. What's also interesting is that within sectors like automobiles, like EMS, where you had the companies which had the maximum exposure in the export market. So pull up a Balakrishna Tires, you'll see that almost started off 18 to 20% in the up move right now. That was one key stock because of how it is export facing. It's still up almost 9%. Post the last 2 quarters, there haven't been too much in favor. Now back in. Bharat Forge, Forging, Ramkrishna Forging, some of the other names that are also back in focus yet again. So you're seeing that momentum on those counters as well. Let's quickly start pulling those up. 9.5% up on this one. Bharat Forge up 8%. Apart from that as well, the EMS counters, Dixon, Keynes, they have been out of favor. Look at something like Avalon Tech, up almost 20% in today's trading session as well. So 6.5% move on Dixon. Keynes also, we await results for Keynes Technologies, but Avalon Tech, because of them having already a manufacturing facility in the US, but also the export-oriented nature of the company, largely helping. So these are just some of the names, a lot more action, and we'll continue putting them at the bottom of the screen. Mahima spoke about the broader markets and the benchmarks where, stocks like the Adani Group, in terms of the momentum, Indigo, all those stocks are doing very well in trade.
Absolutely. I think, and it's also important to take a look at all those names that Puneet mentioned about and all the sectors that could probably benefit from this, trade deal that has happened. Textiles, of course, because US accounted for almost 28% of India's textile exports, and more than half of textile apparel imports in India, is coming in from that cotton segment. But I think this in textile, especially because we are at a better place as compared to countries like Vietnam, Cambodia, Bangladesh, etc. in terms of where tariffs stand. I think a lot of these names like Indocount, Kitex, Gokuldas, Pearl Global, Wellspun Living, Trident, Vardhaman Textiles, KPR Mills, etc. are going to benefit from this trade deal happening, and these stocks have been volatile since the negotiations of the trade deal had begun. So, big relief coming in for all of these counters. Seafood industry is the other industry that will, force certain benefit, because Avanti Feeds has almost 14% of its revenues coming from the US. Apex Frozen 63%, something like a Waterbase also has almost 40% exposure to the US. In auto and auto ank, you have Sona BLW, Ramkrishna Forging, Bharat Forge, Tata Motors, Samvardhana Motherson, Balkrishna Tires, etc. Having a lot of exposure coming in from the US. Chemicals is the other space that is most certainly going to see positive impact. You have UPL, SRF, Jubilant Ingrevia, all of these having exposure in that range of 10 to 20% odd. Some other names also include Aarti Industries, PI Industries, Naveen Fluorine, Deepak Nitrite, Vinati Organics, Alkyl Amines, etc. And in terms of your rice exporters, LT Foods is something that's seeing good gains today, almost about 12% as we speak, because almost 40% exposure coming in from the US, KRBL around 10%, and a small exposure coming in for Tata Consumer as well. So that's with regards to how sector and stocks will get impacted because of this India-US trade deal. But I think a lot of you have queries today with regards to how you should work on your portfolio and how you should go about markets as of now. And to discuss exactly that and to take all your queries today and to answer those queries, we're joined by Swati Hotkar, AVP Technical Research at Nirmal Bang, and Asta Jain, Senior Research Analyst at Hem Securities, joining us now. Welcome to both of you ladies, and a very good morning to you. I'm sure it was a good morning for everybody who tracks the markets today. Without further ado, I take up the first question, which is coming in from Afreen, who is writing us from Hyderabad. Although she's not asking about anything related to tariff, but she's asking about Coal India and wants to know if she can enter into Coal India from a long-term perspective. Astha, I'll come to you on this one.
Hi, a very good morning to all of you. So talking about Coal India is looking very, very strong to us. And I think the way markets are right now moving, this counter is well placed to, show some more upside from here. Although in today's trade, we are seeing some sort of weakness, but I think one should take advantage of this weakness, and at around 410 odd levels, one can make fresh entry. So buying on dips is recommended for this counter.
Okay, all right. So that's the view coming in on Coal India. The next question is coming in from Ramesh, who's writing us from Bengaluru, asking about Aster DM. He's got 10 shares, bought at the levels of 565. Wants to know if he can buy more, sell or hold. Swati, I'll come to you on this one. What's the view?
I would suggest not to buy at the current market price. The view is definitely positive, but once the stock manages to give the support or show the supports of 540 level, those levels are attractive to take long positions, but not at the current market price. Upside momentums can be carried forward once it manages to give the breakout of 575. Beyond that level, 600, 620 levels can be seen.
The view, Swati, and welcome to the show. But viewers, time for a very short break. We of course started Ask Profit late today because of the market voices which were important to get. But all your stock related queries on the other side, do keep sending them back in a jiffy.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
Welcome back to Ask Profit right here on NDTV Profit. Now it's the time to answer all your stock-related queries, and a few of them we've already gotten on the India-US trade deal and that theme as well. So the first one coming in on a very interesting one: is it the right time to get into Avanti Feeds or Apex Frozen? Now both of those stocks reacting very, very positively right now, and largely on the back of this news flow as we discussed. And Vanita Bala, who's a regular viewer, is asking this question. So Astha, your quick view on either of these counters. Is it a right time to buy?
So what I believe, although the news is very much positive for these counters, but today the way we are seeing the market response to these counters, it is, they are really showing a very, very high momentum today. So rather than entering at the 14% upside momentum at around 914, my idea here is enter at the lower level. So just wait for some more downfall to come. Maybe not today, in the coming few days when the stock starts to settling down, then one should definitely make an entry into this counter. So I would recommend entry at the lower level, not at the present level in both the counters.
Okay, all right. So that's the view coming in on Avanti Feeds as well as something like an Apex Frozen Foods. But the next question that we have is on ITC, and we keep getting this question from our viewers, and everybody who's invested in ITC probably wants to know as to when can we expect a gradual bounce back, because that's how generally ITC stock responds. Gaurav Kesra from Pune has 120 shares bought at the levels of 313, so very near to where it's trading at right now. He wants to know, should he add more from a 6 months to 1 year perspective? Swati, would you recommend that seeing the charts?
See, looking towards the charts structural pattern, we have already seen a very sharp correction from almost 450 to 300 levels, and he bought at very attractive levels where the risk reward issue is really favorable. The counter is trading in the oversold zone. Definitely a pullback rally, or say the trend reversal rally, can be witnessed in the near term future. For the short period of time, the target will be at around 340 to 380 levels. No need to buy at the current market price only, where your buying average will come out at the same level itself. So if you're getting any dips towards to 280, and so if the markets remains uncertain over a period of time, then that levels will be attractive level to take a long positions. But at the current levels, you can definitely hold on your long positions for a target of 350 to 380 levels on the high side.
Got the view, Swati, and definitely one that we do address quite often, but given what has happened with this counter, it also warranted as well. But next question from V. Murli from Bengaluru, again an interesting one. He's asking how long the new trade deal with the US comes into effect. Murli, this is of course a lot of guesswork, but it will take some time to iron out these details. The market is of course reacting to the severe pressure that these stocks have been over the last few months. So some respite from that is definitely right now visible on your screens. He's also asking, in anticipation of this market moving up further, can he now buy some of these counters which are benefited? Now, Astha, he's sent across an open-ended question. So while you mentioned on Apex Frozen and Avanti, in the textile space and chemical amongst other key winners, anything that you like, a couple of names that you can suggest to Murli?
Sure. In the textile space, we are very much liking Arvind Limited. In fact, we have recommended it today, but it has already opened at a 20% upside. So right now, idea here is Arvind Limited is such a counter where what we have seen in the bottom line as well as there was a growth of around 15 to 17%. So in that environment where we all knew that at that time, the tariffs were really acting as a dampener, Arvind was able to post good numbers. In fact, their margin have also shown some sort of resilience. So I believe that this is one of the best counter, which is as of now is well placed in the textile sector because results are already declared. So Arvind Limited is one of the counter. Apart from that, in fact, we are liking Vardhman Textile as well as Wellspun Living. But all these three counters are really showing very, very strong momentum today. So idea here is just wait for settling them out and then make any sort of entry in these three counters. So in the textile space, we are very much liking all these counter. We are very much positive on EMS space as well. And Sirma SGS is the counter which we are really placing our bets on right now. So in the EMS space, Sirma SGS is looking very good. Here, results are also excellent. So there is no harm in taking entry into this counter because the result uncertainty is also over. So EMS space is also looking good to us. And in fact, in the energy or power space, we are liking Power Grid also. So these are few of the counters which are really looking good to us. And IT, all of the above is looking very, very strong at this point of a time. So one should also look upon IT counters in which latent view analytics is looking very strong to us.
All right. Okay, Swati. Okay, Astha. So that's the view coming in with regards to where, Astha is bullish on. Astha, I'll just club this, question and answer that you gave with one more question that we have, which is from K Guru, who is writing us from Chennai. You gave a couple of names, but he's asking for specific 2 mid-cap and small-cap names for the next 2 years. What would your 4 picks be? 2 in the mid-cap, 2 in the small-cap.
So in the mid cap, I think I have recommended few of these counters. So definitely, latent view, as I've already told, it is looking very strong to us. So I think this can be one of the mid cap counter where one should look upon. Apart from latent view, Arvind, I have already told. So I believe that these are the 2 mid cap counters. Now in the small cap space, we are just going through some sort of a result analysis. So right now we believe that in the small cap space, just wait for some more results to come in and then we'll recommend. Otherwise, spaces like power, EMS, these are looking very, very strong to us. Looking after the kind of news flow and in fact budget. Okay, one counter in the small cap which is just coming to my mind is Moschip Technologies. So it is basically a semiconductor company, and here we believe that this company is also looking very strong to us, and the market cap is also 4,046 crore. So in fact, Moschip is one of the counter in the mid cap or a small cap space which we are liking at this point of time.
Right, got it, Astha. But let's go across to our first caller for today, and Mohan is dialing in from Warangal. Mohan, a very good morning. Welcome to Ask Profit. What's your query?
Thank you. Thanks a lot, sir. Thank you for meeting you, sir. I want to know what is the future of the transformers and rectifiers, sir. Okay. It's announced very good, excellent results also, but even though it is not going up, what is the reason and how it could be the future? What? Please explain me.
Sure, Mohan. And of course, the stock's reacting thankfully positively today, up almost 7.8%. But do you have a long-term view or a short-term view, Mohan?
Long-term view.
Long-term, okay. Astha, on transformers, there was the debarment from World Bank, and hence the stock's been in that corrective phase. Should Mohan continue to hold?
Right. So talking about transformers and rectifiers, this is an Ahmedabad-based company, first of all, and it is a prominent player in the manufacturing of transformers, we all know. Now, they have got a very, very strong product range also. And in fact, there was certain news due to which we have seen some sort of pressure in the stock prices in the prior times. But now, if I talk about the financial performance, it seems to be little okay. 30% rise they have shown in their top line of Q3 of FY26. While if I talk about the operating profit as well, the margins were strong. We have seen rise in the operating profit of 30% as well. So what we believe that what results they have shown is looking very, very strong with a 30 to 40% rise in all the 3 main items of the P&L, that is top line, bottom line, operating profits. So yes, transformer and rectifiers is looking good to us, and one can make entry into this counter as well as keep the holding if they have already this counter in their portfolio for a longer term. Price target can be suggested at around 280 to 290 odd levels.
Okay, all right. So that's the view coming in on transformers and rectifiers India. But the next question that we have is from Shelja, who's writing us from Hyderabad, asking about Fari Energies. She's got 7 shares at the levels of 2868. Wants to know the upside potential for the next 1 month. Swati, today, of course, it's flying on the back of India-US trade deal, but would you recommend her to continue to hold this counter for the next 1 month?
Yes, definitely. The way the counter has shown a momentum, even though the deal was not announced, but the trend is definitely positive. I believe that the stock is trading in the upward rising channel. We believe that it has a strong potential to reach up to at least 3,400 to 3,450 levels. So long positions can be hold on if you want to manage to keep the profit stop loss. 3,000 is acting as a push levels provided by the gap of support as well. So by maintaining that as a stop loss, you can definitely hold on for a target of 3,400 to 3,450.
Got that view, Swati. But another query that's coming in, very interesting one also from Bala Subramaniam from Bengaluru. Now he's asking that, we've seen the India-US trade deal happen now, and IT stocks is what his question is on. Is there a right time to invest is what he's asking? And which one is better for the long-term perspective? Astha, what would you recommend?
Yes, one can make investments in the IT stock as of now also. And what we are liking the most in the IT space is first of all, Infosys, Coforge, Persistent. So these are few names. Infosys in definitely large cap IT, Coforge and Persistent in the mid cap IT, and as I've already told, Latent View. So I mean these are some of the IT counters which we are liking most. And any dips if come in these counters, then definitely they are a good buying opportunity.
Okay, all right. We've got our next caller. Devraju is calling us from Bengaluru. Devraju, hi, a very good morning to you. I believe you have a question on Trent.
Hi, ma'am. Good morning.
Good morning.
Ma'am, right time to buy in Trent stock in short term, 3 months, ma'am.
Okay, 3 months is the time period that you're looking at. Swati, I'll come to you on this one. Today, slightly, we are seeing an uptick of 2% on Trent, but from a 3-month perspective, would you be a buyer?
The trend is likely to be show the rally in the near term future because it's showing a positive divergence on the daily chart. So I believe that yes, at the current levels, at least 20-30% of a quantity you can add on at the CMP. I believe that the if stock manages to take a support of 3700, 3750 levels, those are the crucial support level. If it's managed to respect that level and maintain a positive closing about 3850, then this rally is likely to be extended towards to 4400, probably in a month or two at such. So definitely you can go for a long positions with a small quantity, and you can add on if you're getting any deeps towards to 3750 to 3700 levels on the downside. So the view is positive for a target of 4400 levels.
Got the view, Swati. But another question for you, Swati. It's on Larsen and Tobrova, and Gitanjali, who's a regular viewer from Navi Mumbai, is asking if it's a good time to enter this stock. Now, seen some correction, what would you recommend?
Yes, I will suggest to enter at the current market price only because even though the market was correcting, but the LNT has not shown a major selling pressure in this particular stock. Small correction has been witnessed, but the trend has remained intact on the positive side. If you look towards the monthly chart also, the counter is under the formations of the flag pattern, and if it manages to give the breakout of at least 4200, which is acting as a very strong resistance zone from the last 1.5 month, if it manages to give the breakout of those levels, a new rally can be entered into this market, into this particular stocks, and will reach a counter towards to 4500 levels. So my view is positive. You can take a long positions at the current market price also, and if you're getting any dips towards to 3800, you can add on.
Okay, all right. So that's we coming on LNT. The next one is on Aarti Industries. Nagesh from Bengaluru is having 200 shares bought at the levels of 638. He wants to know whether he can hold or exit the counter. Asta, I'll come to you on this one. This is also a likely beneficiary of the India-US trade deal. What would you recommend? Can she continue to hold from a long-term perspective?
Sure. It is the likely beneficiary, and the major attraction of this company is what its results are, because the results are very, very strong. And what we have seen that they have shown a very strong jump in their bottom line. Now, talking about the valuations also, they are quoting at a price to earning multiple of around anywhere between 35 to 40, because I am not able to take the today's stock momentum in that things. Then also I believe 35 to 40 is somewhere the price to earning multiple is going around. Industry price to earning multiple is at around 45. So on the valuation perspective also, I think the RT Industries is not as expensive, and hence yes, we recommend buy on dips because today it has already shown a rise of 12%, and in the opening session it was almost 17-18% up. So if any dip come, definitely the RT industry is looking very attractive to us. Maybe at around 410 odd levels, one can make fresh entry into this counter.
Got that view, Astha. But another question that's coming in is from Kirti from Hyderabad. She's holding shares of Sona BLW, bought at roughly 100 shares, and she's currently at a profit. So she's not mentioned the buying price, but currently sitting at a profit of almost 7,500 rupees. Asking if she can sell today and re-enter is what is her question is, and any chance to correct from these levels. Now, Swati, let me come to you because this counter has been down and about over the last few months. First, probably buying spree. What is your view on this counter? Is it a good time? Is it that this could have some momentum, some leg up from this rally, or is it could be a very short-lived, given that the trading history hasn't been very kind to itself?
My view is definitely positive. This rally is not a short-lived rally. New trend is coming up into this market. Why? So because on the monthly chart, if you look towards the line chart, also the counter has given the breakouts of an inverse head and shoulder formation. So whenever we get a breakout of inverse head and shoulder formations, we see a new trend or a new fresh buying into this particular stocks, and it has a very strong potential to reach up to at least 600 to 650 levels. So those who are having any long positions, they can definitely hold on, and those who are interested to initiate the long position, any dips towards to 500 will be the attractive level to take the long positions for immediate target of 600 to 650. So the my view is positive. You can hold on this particular account.
Got the view. Now another question that we're getting in, and we have been actually getting questions on Tata Power actually a lot. S. Sankar Narayan today is asking a question. He holds roughly 100 shares at 400 rupees per share, asking what he can do with this particular counter. Astha, should he continue to hold?
Sure. Tata Power is looking strong to us, and one should definitely hold this counter, because what we believe, although their result performance was not very, very strong in the Q2 of FY26, but I believe in the long term, they are now started increasing their solar footprint. So that is definitely helping the company in posting good set of numbers going high. And we believe that solar rooftop can be one of the major growth drivers for the company. So yes, Tata Power is looking good to us, and recommending a hold as well as buy on this counter with the price target of 400.
Okay, so that's the view coming in on Tata Power. But with that, viewers, it's time for a rapid fire round. Swati and Astha, you both know the drill. So I'll start with the first question, which is coming from Basavaraj, asking about Power Grid. Should he hold more or maybe buy more at the current price? Swati, what would you recommend?
I will suggest to hold the at the current market price for a target of 300 rupees.
Office is the other one. Our viewers holding at 600 rupees. That's Satya Nagira viewer. Astha, should he continue to hold?
I'm not very much positive on this co-working space, and hence I recommend just exit from this counter and enter into any counter which is related to EMS or power.
ONGC is the next one. Reenu from Bengaluru is holding 270 shares. What are the levels of 246 for the next 1 to 2 months? What are the charts indicating, Swati?
Charts a little bit on a sideways momentum, but you can definitely hold on since the market it's trading at the current market price by keeping a stop loss of a 240 for a target of 280 levels.
KP Energy is the other one, and Astha, our viewer actually, Debashi, bought it at 630 in November 2024, and he's averaged now at 310. Should he continue to hold? Any view on the counter?
So now 310 is not far away price. So definitely a hold is recommended rather than booking losses, and just hold this counter.
Okay, Geo Finance is the next one. Can we buy at the current level? Santosh from Chennai is asking this. Swati, your view?
Yes, you can buy at the current market price. Counter is showing a positive momentum from the oversold zone for a target of 320 rupees.
Indian Hotel is the other one, and our viewer Ekambara is holding shares at 710. He's asking if it's the right time to slowly start averaging right now. Astha?
Averaging can be done, but not buying at the current level is recommended.
Okay, the next one is on Bharat Dynamics. Jayakrishnan from Kerala is asking if he can continue to hold the counter from a medium-term perspective. His buying levels is 1501. Swati, your view?
For medium-term outlook, it's a little bit cautious. I will suggest if you're getting any rise towards 1450 or say, you can book your exit your long positions. But for the fresh longs, I believe that the 1200 will be the good levels to take a fresh long position.
A 1 year view on Biocon. Astha, is it continue to hold Shriram at 3? He's holding it at 397. Astha, on Biocon, if you can hear me.
Yes, I can hear you. Biocon is looking good to us. Stay invested in this counter or buy a new quantity also with a price target of 410 to 415.
Okay, Anant Raj is the next one. From the budget news that's come in, should I continue to hold is the question that our viewer has for the next 3 years. Astha, your view?
Yes, definitely continue to hold this counter with a price target of 650 to 700 in the longer term.
Suzlon bought at 54. Swati, should he continue to hold?
Yes, definitely you can hold on the long positions. Immediate target will be 55 to then 60 levels can be seen.
Okay, the Ask Profit show cannot be over without a Hindustan Copper query. Venkat Ramani from Bangalore is asking whether she can hold, add, sell. What should she do? Swati, your view on the charts?
I will suggest to hold on the long positions by keeping a tight stop loss for 580 rupees for a target of at least 650 to 700 levels.
Well, thanks so much for that, Swati, as well as Astha, for helping us solve all these stock-related queries in a truncated session. But viewers, do tune in at 1:30 today. We are doing an extended version of the afternoon Ask Profit edition. So from 1:30 to 2:30, we'll solve all your stock related queries because we've gotten quite a lot of them and it marks a very important day. So do tune in. We hope to see you at 1:30 again. For now, it's a goodbye, but KYC comes up next.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम।
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today in our show, I'm going to get a very special company. It's in the agrochemical space. I'll be giving you some hints. Then you take the name of the company. This one is the company we're talking about. It's an agrochemical company. It's also a beneficiary of the Indian-US trade deal completion. The Q3 gross margins, they have risen, but the last 6 months were not good for the company. And it's of course a crop protection chemical company. The stock is down 32% in the last 6 months. It's a total, you could say, agrochemical player, and there are a handful of them. And the answer is Sharda Cropchem. That's the company we'll be talking about, and this is the company we'll be featuring in the KYC segment. But why are we calling this company and why in KYC? This industry itself has seen a lot of cycles, and now it seems like there are some green shoots happening in this cycle itself, and we'll ask the management what led to the strong growth in Q3. Was it the volume, was it the pricing, or is there something else in the international expansion front? Also, another question we'll be asking the management and why we are getting the company in KYC is the volume growth and the margin guidance. Will that be above the 35% mark? Volume growth has been around 20%. So that's where the questions will be arising. The third reason why we are calling this company in KYC is, if you could just show the third reason for KYC, is apart from the volume growth movement, this also includes your other companies as well. And these queries which are there, especially for Sharda Cropchem, this includes your global expansion plans. That is very much important as well. But nevertheless, these are the important points that we are trying to get the companies in. And yes, the geographies, where's the outperformance coming in, and the benefit, of course, the most important thing, the India-US trade deal. On the show, we'll have Ram Prakash Bubna. He's the chairman and MD. He will be responding to all of our queries, be it the trade deal, be it the company specifics, and yes, is there a big up move happening in the agrochemical space or not? Remember, it's a very cyclical play, so it'll be very much interesting to have a chat with Ram Prakash ji. But apart from that, let's move on and focus on about the company. This is very much important to understand. Agrochemical company at times becomes too technical for investors, but I'll try to make it very simple going ahead. It's an intellectual property driven company. There are IP rights even in the agrochemical space. That is something to watch out for. They do marketing and distribution of wide range of formulation and generic active ingredients. So it's like a total ecosystem of agrochemical space. Apart from this, the clients are there in more than 80 plus countries, and that is why these trade deals, when they get completed, it offers some kind of stability to even this kind of a business model. That's why it augurs well for Sharda Cropchem. They have procured roughly 3,000 odd registrations, and they have filed around 1,076 applications for the future registrations as well. That is where the IP rights are protected for a company like this. The capex was roughly 400 crores in 9 months FY26. We will be looking at the future capex plans as well from Ram Prakash ji, and the revenue breakup, agrochemical, that's still having the majority of it. Roughly 83% of the revenue is coming from this segment. The balance one is at around 17% for this space. Apart from that, segmental revenue, how does that actually stack up? And this is just only taken for the agrochemical space. There are three types of that. Herbicides, that's the 43% year-on-year growth which has come in, and that stood out on the Q3 numbers. Apart from the segmental revenue growth which was posted in Q3, let's move on to the other important data, and that includes the geographical revenue. This is the most important thing to look at. Why North America? Right now, recently, the India, European and the US trade deal has been completed. So these two regions, they are comprised of 87% of this total revenue. So these two is very much important for Sharda Cropchem going ahead. So this is the entire geographical breakup revenue I have given, but the recent triggers are also very much important. Strong Q3 numbers have been there, driven by the agrochemical segment. They have done really well. Let's get into a little bit of details into it. The Q3 volume growth, that stood at around 14% and there was a change in the product mix also. Gross margins are seeing a strong improvement. Roughly 35% is something which the street is expecting that to be there going ahead. But the benefit, that's the most important thing from the trade deals with the European Union and USA. That is what we are looking at. And of course, the Europe and the LATAM region, that's where the volume growth, LATAM means Latin America, that is where the volume growth was very strong in 9 months FY26. So this is the entire picture for Sharda Cropchem. But I would like to make you sure that you understand how the KYC format works. KYC has around 8 parameters where we get in a company. This includes income statement, balance sheet, cash flow and return ratios to talk about the numbers. But apart from the numbers, also there are other stories to look at. That includes street trade, how stocks have moved, shareholding, especially the institutional portion, valuations, we are comparing them with different peers in the agrochemical space, and last but not the least, the outlook, be it the company, be it the industry. So these are the 8 rating parameters. The first one is the income statement. Income statement, remember the Q3 numbers have been very strong, so I've added that and I've given the combined number in the 9-month FY26 numbers. The revenue, they have seen a decent growth coming, and if you annualize it, of course Q4 is at times lumpy also, this goes 4,000 crore plus if you estimate for FY26. Decent growth coming in the PAT and the EBITDA front as well, and the gross margins is something which is very much important to look at, and that has also shown a good strength. But remember, the business model of a company like this, you are not going to have a linear move. There will be cycles, there will be lumpiness, and that is where at times the concern comes in. And FY24, you see how low the margins were, just 10%. Now it has gone up to 16.4%. Yes, it's in an up cycle, but because of the business model, there might be volatility if you judge the company on the quarter basis. So income statement is a neutral rating. Let's look at the balance sheet, and in the balance sheet I have simplified it. Rather than giving you a lot of numbers on the screen, I'm trying to give you the top takeaways from the balance sheet itself, that how things have moved, and largely we see the equity size has gone up, but the cash and liquidity, that is a very important point. That's around 826 crore. That means there is a good cash deployment, or maybe you can expect some kind of a dividend or a bonus announcement. But the working capital days, that has also done well. This is a good ratio. The liquidity ratio is improving and the working capital day is also improving. So that is showing a good strength. And trade payables, however, that's on the higher side, and that might be a little bit of concern. So out of 4 points, 3 points have been strong, but net neutral with a little bit of positive liking on that. So we have done income statement, we have done balance sheet. The third one is also very much important, as the cash flow segment. And the way this business model works, there are variations in the trade payables, trade receivables, and that is why the cash flows will not be very uniform in a business model like that. And this is where the operating cash flows, we were looking at them, they are doing really well, it's decent. And remember, these are the FY25 numbers, by the way, and these are the net cash flow numbers, and that is where the variation comes in. But net, looking at the business model and the overall operating cash flows, it's still on an up cycle, and because of that, I will be giving this a neutral rating when it comes to the cash flows. But let's look at the return on ratios. The first one is the return on capital employed, and you see FY24 was, you could say, a very impactful year. That's just 3% down. It's 21 odd percent, starting to increase. It's around 16%, but a healthy one should be 20 odd percent. The 9-month number does suggest that, and that is why it's on an up cycle. So it's a decent one. And let's look at the ROE numbers also, how they have panned out. The story remains the same. This has also gone up. The 9-month numbers are on the higher side. Largely, if it maintains that 20% return ratio mark, then it's quite, you could say it's a very good company, but there is a seasonality impact, and that is why return ratios, to keep it a balanced perspective in KYC, I would be giving this a neutral rating. So we have spoken about the neutral rating, and also we are speaking about the shareholding pattern. How the shareholding pattern has changed, that's also very much important to talk about. Is there institutional at play? FIs, you see, they have increased their stake, but slight profit booking has come in. They doubled it and now they have reduced it to 4%. There's nothing to be concerned about because it's been largely flattish. The promoter stake is still, you could say, flat. Public is there. DIs is also a slight decrease is there. But net nothing much to actually consider about. Nothing has much changed, and that's also good. That's because stability in ownership is also something which I like. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about the street cred. Street cred is nothing but the returns which have come in to the investors. Last 6 months, that's the volatility which came in, the trade deal overhangs which were there, and the stock fell 32% in the last 6 months. Year to date, the stock has again rallied back. It's up 27%, signaling a good sentiment. And last 1 year, the stock has, despite the volatility, has doubled. So that is a very good news, and congratulations to the investors who are holding the stock for this period. In last 5 years also, it has been a multi-bagger. Stock is up to 191%. So this has been a very strong kind of a momentum for this street cred, but I would still give it a neutral rating because there might be some volatility and profit booking in the counter for the days to come. But come on, let's talk about the valuations. And when we talk about the valuations, largely the agrochemical players come in, and these are the different bigger names also, medium names also, and we have taken a 12-month forward P ratio to understand where does the company stand in terms of valuations. And remember, it's a cyclical industry, so all the industry players move together. Of course, there's some little bit stuff change definitely, but Sharda Cropchem, it's at 16 times its 12-month forward P, and that you compare that with PI Industries, it's on the higher side, 28 times. UPL comes in at 17 times, and if you see, other two stocks are also very much important. This includes Rallis India and Dhanuka Agrotech as well. That is still, it's coming at the cheaper level, but then Dhanuka Agritech and Rallis India also almost there. So that's definitely, it's one of the cheapest players in the agrochemical space. So it's a very positive rating and a good thumbs up when it comes to Sharda Cropchem when the valuations are in focus. That means right now also there might be a ripe entry time for this counter. Let's talk about the outlook, the 8th rating counter. FY26 margins, they are expected to remain at 35%, and remember the gross margins, they have been increasing both YOY basis and you could say sequential basis as well. The second important point for the outlook is the return ratio. They may see further improvement, and there's always a saying, ye dil mange more. Of course, a 20% return ratio, you can expect that to go up to around almost 30% and it can sustain. And if it sustains, you can see a re-rating in the stock. Sustained volume growth of 20% plus, that's what the investor presentation had stated. So we'll ask a little bit more about that from Ramchandra ji and the beneficiary of the US-India trade deal announcement. Now, how much the benefit comes, by when it comes, what are the total benefits in terms of money, that's something we'll ask the management. But net, it's a neutral rating I would like to keep for the industry. But yes, the cycle is turning towards the agrochemical space, and certain picks were certainly expected to do more. But let's give you the ratings, how the ratings stand, and let's just put out the numbers. There is a good part about the numbers, there are some kind of a negative also, but largely it has been very much neutral. All the 4 numbers I talk about. But remember, there's an upcycle momentum going on in the agrochemical space, and that is where the attractiveness comes, and that's why I have called this company in KYC. Let's just show the other parameters, what is there. Is it that gloomy? I don't think so. Let's just show the valuations. Valuations, we have shown a strong thumbs up coming in. Outlook has been largely neutral going ahead, but in all, it is not bad and it is improving, and that is where I give 4.5 out of 8. It's one of the on the higher side on the normal average rating when I talk about this company. And apart from this, let's talk about the management who will be joining us, and look at that age, 57 years of experience. Ram Prakash ji is having in chemical, agrochemical and related business, like a sitting encyclopedia, and his education from IIT Bombay. So we will be asking him a lot of questions on the business as well as the industry. But joining us is Ramchandra Bubna ji from Sharda Cropchem. He's the CMD and a huge industry stalwart as well. Ramji, I would like to ask one important question. Is the India-US trade deal is done? before we start on your earnings. What benefit comes to the industry now, and where does India stand?
India stands in a better position, but as far as we are concerned, we are not very much affected positively or negatively because our products are not freely tradable products. Our products are have to be approved by the government of USA, and there are not many companies who seek these kind of approvals because they are very expensive, time consuming, and not very certainty. So the customer have to buy only from the approved sources. We are one of them, and all the tariff that we are charged are being passed on to our customers, and they very readily and gracefully accept it.
All right, and Ram Prakashji, coming back to the earnings, the Q3 numbers were on the strong side. I was just checking the numbers, be it the volume growth, be it the margins. First, I'd like to know, what led to this strong volume growth, where the geographies were doing well?
See, the European Union geography has been doing very well, and the euro-dollar exchange rate has also been very favorable to us. And the climate has been also very good. The demand has been excellent. That has helped us to achieve these figures in Q3, and it will continue in Q4.
So just to put that in perspective, Ram Prakashji, that gross margins, what are the current levels and what kind of margin outlook we can expect going ahead?
The same, around 35%.
Okay, so the 35% remains the gross margin target for FY26 as well.
I would say 35.
All right, and the volume growth, Ram Prakashji, what kind of expectation we can have? Is 20% plus we can see on a blended level?
Yes, please.
Okay, all right. So that means 20% volume growth coming in as well as a margins outlook of 35%. And how the global pricing looking like, of the agrochemical space? Is some kind of a pressure which is already bottoming out? Some larger peers did mention that the pricing is coming back. So how much conviction is there that the pricing is coming back?
Sir, in our opinion, the prices are on the rise. The rise is a little slow, but they are continuously rising because we had a very bad phase in 2024, and the industry is coming out of that bad phase, and there's a lot of scope for the prices to still go up.
So there is a scope of prices to go up as well. I was just checking on the working capital days. There's been a significant improvement, 148 days in the month of March. Now it's around 70 days. Any other further improvement you can expect in the working capital days, and what is leading to that?
So the main thing is that we are getting a lot of support from our suppliers. The suppliers are extending us 180 days clean credit, and even if sometimes the payment gets delayed, they don't complain. So that is a very big support. And second thing is our customers are also paying on time because the industry is doing well, the agriculture is doing well, and that is rewarding Sharda Cropchem. We are receiving the payments on time, and we are receiving good credit from the suppliers.
Right, but Q3 has been strong, and you are suggesting that the Q4 numbers, that itself will also be keeping the growth, if not really strong, but at least the Q3 growth would be same. Am I right? All right. And sir, the cash and liquidity, that segment also we see the overall cash has gone up for the company from 558 crores to 826 crores. You are going to keep that for the working capital only, or is there some kind of an acquisition or any reward to the shareholders?
Mainly for the working capital, and more investment may be required for obtaining the registrations. So today we are spending about 450 to 500 crores. This may go up because these are very unpredictable. So we are also preparing ourselves for that.
Interesting on that. And Ram Prakashji, the capex incurred was roughly 400 crores in FY26 till now. FY27, what are the plans for the capex going ahead? Any kind of amount which has been earmarked?
Sir, it's very difficult to calculate it precisely because of the lot of uncertainties in the process of registrations. But it could be around 500 crores in FY27 also.
Yeah, that's pretty much interesting. The company is having client in more than 80 plus odd countries. I checked the registrations, that's roughly 3004 registrations, and you're filing 1076 applications for these registrations also. What's the outlook on this? And for our viewers who need to understand what these registrations means, if you could just explain that also to us.
Sir, the registrations are something like an approval, or you can say in common man's language, license. And every government in every country wants to prevent unauthorized or wrong products into their country, because the implications of a wrong product or a harmful product are very serious in agrochemical industries. So the governments want to only allow those products which are safe for the human handling, for the soil, underground water, and the agricultural products that are produced. So this is a very complicated, and it is essential. And the most stringent geography is Europe, and the next most stringent is United States, where the rules are followed and seriously implemented.
I was just seeing the product segments. There are 3 product segments in your agrochemical space. Insecticides and fungicides, they went up 20%, that's fine. But what caught my eye was herbicides. That went up 43% on a year-on-year basis. This kind of growth for herbicide segment, Ram Prakash ji, will it sustain in Q4 also?
As we are seeing the trend, it will sustain.
All right, and the numbers which you spoke about, the European region, you are getting benefit also for our viewers to understand that the euro is in a very favorable position as compared to rupee, and that's what the beneficiary is, this company. But the LATAM region, that's also showing a good volume of growth, and at times that helps a lot for our stocks in the agrochemical space who are having this exposure. What's your view on the LATAM region? That's called the Latin America.
It will go up. It will go up from the current level, because we are venturing into more and more products and more geographies. Brazil is one of the most important countries in Latin America, and we have increased our share in the Brazil quite considerably.
Interesting. And Ram Prakash ji spoke about that the products, new products are coming in. Now, product mix, does that change going ahead? Current product mix, what is there? And maybe 5 years or 3 years down the line, the product mix, what will it be? And if it is going towards the value added, what kind of incremental information you can share with us?
See, there's a lot of invention and a lot of development in the technology, and more products are being invented and introduced by the multinational companies, which are more safe and more effective for the crops and for the environment. So we are also following up that trend. The multinational companies who introduce a product have a protection by patent for the first 10 years. And as soon as that product goes out of the patent, we are waiting to register them, or we start the process of registration even before they go out of the patent.
All right.
And this is a good margin and good opportunity.
Great. That's a very important thing Ram Prakash ji have shared with us. But thank you very much sharing the growth prospects of the industry and your company, and best of luck for the future and for Shahada Cropchem. Thank you very much, sir.
Thank you so much.
So that, of course, just to give you the recap about this conversation which we had and the KYC ratings which I have given, largely Q3 numbers were on the stronger part, but remember, it's a cyclical industry, but green shoots are coming, and that's why the stock price has also gone up in the last 1 year. Stock nearly doubled. The valuation still attractive if you look at it, especially when you compare them with the other peers, and the outlook itself is also pretty much decent. Overall, we have given the total KYC ratings of 4.5 out of 8, and that is for your entire reference. That's all, folks, for today at NDTV Profit and KYC. Stay tuned for more companies I'll get for you.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV, bringing this subject forward, would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards on the NDTV network.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
Awaited India and US trade deal has finally taken shape, with US President Donald Trump announcing that the US will cut reciprocal tariffs on India to 18%. The thawing relationships are expected to warm up trade coffers as deal fine prints come out. Sea of green on Dalal Street as all benchmarks trade with gains. Nifty opens above 26,300 but settles to trade at range bound near 25,800. Broader markets outperform even as pharma, IT, auto, metals advance over 2% in trade. Textile, seafood, auto and auto anch stocks are rejoicing India-US trade deal. KPR Mills, Welspun, Living, Indocount, as well as Pearl Global and Apex Frozen, amongst others, hit the upper circuit today. Wave of buying from Chinese speculators supercharges the precious metals rally. Gold and silver sparkle bright after record losses in the previous two sessions. Gold climbs over 4.2% after a 4.8% fall in the last session. Hello and welcome. You've tuned into Markets at 12, and what a rollicking ride it has been for the markets. The much awaited India-US trade deal got announced late last night, and surprise, surprise, it came in at 18%. After a lot of speculation, 18% is welcomed by the industry, and there you see the cheer on the market as well. But remember, it's 2.5 to 3% gain momentum that the benchmark indices have clearly seen. Before we delve more into the market, rupee is one of the main strengthening headlines today coming in, which showcases the strength of the economy also, and with the US deal being struck and that particular clarity coming in. Remember that rupee had its strongest opening that India has ever seen in last 12 years, and the one-day, single-day gain of over 1%, the best seen since November 2022. So many headlines when it comes to rupee, and it is at 90 rupees to 20-30 paise against the dollar. That's a very pretty chart showing up when we talk about rupee. But all guns blazing when it comes to all the sectors and the broader markets outperforming when we talk about the markets. Let's get into the specifics, because the companies are going to benefit from this particular US trade deal. Lalit Khaitan, who is the CFO and whole-time director at Ramkrishna Forgings, joins us now. Lalit, always a pleasure to welcome you on NDTV Profit. Your first initial reactions, 18% reciprocal tariff at the current moment. How does your company stand to benefit?
Thank you. Certainly, this is a very pleasing announcement for the company, and we are going to benefit by this announcement. Yes. But let us wait for the fine print, because still we are an auto component player and we are waiting for Section 232 clarity. But hopefully, as far as what we understand and we read, everything has come under 18%, and that will be great for the exports.
That's right. Your stock, Lalit, is up over 10% in trade at the current moment. Your shareholders really like this particular announcement. 27% of your revenues are really basis the US market or the foreign market. how much were you incurring versus how much will 18% mean, barring the fine print, of course, that you mentioned that certain clause needs to be seen? What is the gain that you are estimating at this particular time with the data and the announcement that we have?
No, certainly. See, due to this tariff, there were a lot of disruption in export market, and our exports also went down. And if you look at historically, Ramakrishna Forging exports were 40%, and only due to this uncertainty, we moved to the territory of 29-30%. And hopefully, once certainty prevails, we will make it around back to our way to 40% kind of mix of export versus domestic, and that will certainly be healthy for the company in terms of margin and in terms of overall top line.
So you are mentioning that 29 to 30% is what you had reduced your exports by from 40%. Is 18% now reciprocal tariff that Lalit coming in? How is it going to impact the propensity of also your entire sector when it comes to the US business and the importance of US market in your area of work?
No. So certainly it will give a boost to the entire sector, as the US is a big economy consuming quite a good number of goods or a huge supply from India for the auto components. So it's going to be a big boost for the entire industry.
Right. Any specifics then from the fine print, Lalit, that you will be watching out for? And what are the technicalities that you would be really highlighting, which will have the final impact on your numbers and your performance?
See, certainly it looks done and dusted so far. What we read from the media and the news, that everything is 18% tariff, and on reciprocal side and punitive tariff also has been done away with. So if it is that, so I think nothing is special treatment for any sector, because there is some confusion on Section 232. So we will wait for the fine print, but it looks like 18% for all as far as right now.
Right. And also, Lalit, I also wanted to understand how much time do you see for the final impact of the tariff negotiations that have been announced late last night to come into the business? First, the deal will have to be legally probably scrubbed. All the exact details will have to come out, and then it will be implemented. How much timeline are you really looking at for it to start impacting your business and as well as your exports?
I don't think it will take much time, but still we need to understand it in little fine print. Let the fine print come out, then we will be able to understand how it will be implemented. As right now the reports are saying it will be implemented immediately. So let us understand that, because if it is implemented immediately, the timeline will be certainly early. And if there are any technicalities, then we have to examine for that and wait for that. Otherwise, it looks like it will be quite fast, because inventories has already moderated. People are there just buying as whatever is there. So certainly pent-up demand will come up in US market.
Right. Pent-up demand also is something that you can cover the ground with. In the initial stages with whatever you have lost in this interim when the tariffs were very high. But Lalit, one more understanding that I wanted. There have been several FTAs that have been really signed by the Indian government because of the US tariff negotiations taking time so far. So EU has been done, Oman has been done, and several others. Has it opened your market considerably for newer markets as well? And do you see lucrative prospects in other places? And does that change your mix of geography and newer market approach for potential growth?
No, certainly when we have entered into the other trade deals, that is beneficial for the country. Specific to Ramakrishna Forging, US and Europe are the two major territories we were looking at. Certainly that Europe has helped us little bit, and US will help us move. So overall, it will be only win-win in all the trade deal. For RKFL, it is US and Europe. These are the two important territories.
Right. And Lalit, just before I let you go, any implication of the budget on your company per se, as you see it in the fine print?
No, it's neutral for us.
All right, Lalit Khaitan, thank you so much for joining us right here on NDTV Profit. So that's the impact coming in from one of the exporters because of the US trade deal. The stock is up over 10% in trade. Let's take it to another company also which stands to benefit, has been struggling because of the constraints of high US tariff and now is set to benefit from it. Gyanesh Chaudhary, who's the CMD of Vikram Solar, joins in now. Gyanesh, welcome to NDTV Profit. First, tell me how big a development is this and what it means for your company and the sector.
Thank you, Nisha, for having me. I think this is much awaited and it's a great time for India. We just recently concluded the US-EU trade agreement and now this. It's going to change the landscape of how India approaches the international markets. And for large manufacturers in the energy equipment sector like us, we see phenomenal strides coming forward.
That's right. Vikram, 60% of your revenues are from the export market. That's the mix that you have between domestic and exports. Over the last few months, while there was uncertainty and higher tariffs in the US, first of all, out of the 61%, what proportion, and I'm guessing it would be a majority from the US. So what proportion was from US and now how much will get reinstated and benefit?
So because of the tariff and various other stringent import clauses that were set forth by the US CBP, we saw that our international business was diminishing significantly. In the last year, it was quite compromised. And with this change in tariff regime and overall resilience in the Indian manufacturing ecosystem, the kind of investments and growth that we are undertaking to make sure that our upstream value chain is also secured within India, we see that this will act as a huge catalyst towards changing this scenario now.
And also, Gyanesh, now that it's been specified that this rate really is applicable immediately, do you have a technical understanding of when can you start exporting at these rates, these tariffs, and what are you bracing up for? And the final, most important question in this is what's the bottom line? When is it hitting your performance matrices and improving your performance?
So we were expecting this to happen in the last quarter, while we see that this quarter will see consolidation in all our pipelines and all our activities. We already have an order book of 10 to 12%, which is waiting to be consumed. So this year, the coming fiscal, we will see all of this pan out in the next couple of quarters, where our international teams will be on overdrive to make sure that we have caught up with the lost time.
That's right, caught up with the lost time, and there will be pending demand also. So probably you may also see an increase in the US share. And if you can also give a guidance on the share of revenue from the US and also what is the upside with these lower rates. A little sense on those numbers will be great, Gyanesh.
So typically, the solar equipment manufacturers compete with the Chinese markets, and because they are the largest outside of India in terms of product shipping. So we see that with this tariff clarity, we will be able to compete in the US markets much more efficiently. And also this China plus one or moving supply chains out of China has been a strategic initiative by the US administration. And we see that with this support, Indian manufacturers will again regain their competitive strength as well as market share going forward. Overall, we see that prices in US are stronger, considering there are strong traceability and other quality clauses, product clauses, which are initiated. So looking at all of these aspects, we see that there will be improved EBITDAs from exports.
By how much? Do we have a sense?
So typically we see 2 to 3% variation in EBITDAs from domestic versus international markets. So we hope to maintain those levels.
Right. And to be kicking in from the next quarter?
Hopefully, we have a pipeline and we should be able to meet those demands.
So you're saying an uptick in EBITDA of 2 to 3% expected because of this announcement from the next quarter performance?
Not necessarily from the next quarter, but from the next,
few quarters.
couple of. Yes.
All right. And Ganesh, now also there was the strong push by the US government for indigenization of their own industries and not becoming an import market. And since you have such a huge market of buyers over there, of course, you had announced the VSK Energy joint venture for setting up unit and manufacturing unit in Colorado, 4 gigawatts of capacity to align with Make in USA incentives. Give us a sense on where is that, how it's developing and what it means for the company.
So these announcements and relationships were developed a couple of years ago, but ever since we saw that the administration has a renewable energy stand, we kind of reevaluating our options. Now we as a company are very energized and very strengthened by the developments, and we will aggressively take up our domestic manufacturing plans going forward. As soon as we have them ready, you will be the first to know.
Right. So these developments will now pick up pace is what I'm understanding, Ganesh, now to strengthen the relationship further, now that US has also taken a step in the right direction on the tariff as well. But Ganesh, just one question before I let you go. Impact of budget on your company per se.
So the impact for the budget has been generally positive. I think the overall the fiscal outlay has been significantly moved towards infrastructure, energy, and energy security. And the government's continuous support towards this sector has also led to a lot of investments coming in. So we ourselves are expanding into the Tamil Nadu region for integrating our module manufacturing with cell, and now looking at going upstream continuously. So all of this supports investor confidence and also supports this industry with respect to how renewable is taking center stage and how India is taking the lead in that. So we are very happy with the developments of the budget. Obviously, there are certain support things which are in the fine lines. We are still working on what they will mean for us.
Right. All right, Ganesh, I have picked your brain on many aspects and futuristic guidance also at the current moment. These are early days. I'm sure you'll also figure out a lot of technicalities and go through the fine print. Thank you so much for joining in with your initial takes. And of course, the market is really cheering this particular move by the US government and the trade deal announced between India and US. Thanks so much, Ganesh, and all the best for your business coming in from the US.
Thank you, Nisha. Appreciate it.
Thank you. All right, let's move on then. And Amitron Electronics, that's the company we are going to talk about next. Mukesh Jairam Vasani is the founder of the company and joins in now. Mukesh, a pleasure to welcome you on NDTV Profit. But the first question, and our budget discussions have been eclipsed now by a bigger announcement, which is a much bigger boost and a fuel for our economy as well as the markets. Your first take from the corporate India point of view, what it means for India when we talk about the 18% reciprocal tariff from the US that has been signed.
Thank you, Nisaji. Thank you for having me on the NDTV platform. The budget and the new announcement about 18% tariff is a huge benefit for electronics industry, especially for our infrastructure in India and in US, both places. So it will help us a lot of clarity between long-term supply chain projects. It will help us build a better relationship and profit making, because now we build in US and build in India with this lower tariff. So it's a win-win situation, and it's good for Aimtron being a global footprint. As our goal is to be a Aimtron 2.0, our long-term vision is to be a global ESDM ODM partner with our OEM clients throughout the MNCs throughout the globe. So that is help us, and we recently just announced an acquisition, so that will help us also in Aimtron specific. It will help whole electronics industry, but definitely it will help Aimtron for sure.
Right, so you are very euphoric with Aimtron's, gains coming in from this particular development. But Mukesh, you'll have to give me some specifics on what is the kind of gain that you are expected to get from this with this acquisition and your business in terms of revenue percentage and the performance of the company because of this announcement and tariffs of 18%.
So both. Let me just give you first answer. First is this acquisition. The strategy behind the acquisition was selecting a Aimtron 2.0 vision. Last time I was with Somitji in an interview that we discussed about our a ESDM ODM partner throughout our MNCs, global MNCs. So in that scenario, this acquisition in US is kind of a reduced time to market, brick and mortar facility. We're adding new segment, but now adding to this 18%, it will grow our international business to Aimtron Electronics Limited. So let's see, initially we had about 60% of international clientele, but now because of the tariff uncertainty, we reduced that and we just changed the gear and we bring it down to almost 20%. But now the line up again after this announcement actually started last night. And it's again, we're going to change the gear and bring all the international customer back to India. And it's going to give you a better boost in our margin markup. As you know that always international customers give you better margin and markup. So this acquisition help us that way, a maybe cross-sell, we call it. Cross-sell means, low mix, high volume, we can take it from India, and high mix, low volume, we build locally there. That is our strategy behind it.
Right. You said that there will be a markup and you had to reduce dependence on the US sales from 50-60% to now 20%. So with this uptick, can you give a slight guidance of how much of EBITDA improvement and in how much time can be expected, at least a sense and a guidance?
So yes, the current acquisition is about a very steady growth of 18 million a year. So they are steadily grow in that same range. So it will help us to add additional 150 to 200 crore worth of top line with EBITDA. Right now is about a lower double digit EBITDA. We're gonna add on this, because of this acquisition. So the 60% of the international business, it will give us a impact after 3 to 6 months, because our cycle is about 6 to 8 month cycle on the new business flow and ship it. So that is we are expecting uptick in EBITDA a little bit higher, because of this international business.
3 to 6 months gap, but a clear uptick when it comes to your performance. Thank you so much, Mukesh Vasani, for joining us right here on NDTV Profit. Completely out of time, but we have a lot of companies really cheering this move and the impact on the performance. Thank you so much for joining NDTV Profit and stay tuned with us.
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
वकील साहब अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
मंजू सिस्टर,
देश का सोच रहे
और इसके फ्यूचर का नहीं सोच रहे?
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है।
तभी तो इनको अपने इरादे पूरे करने का राइट है। करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए। We plan for targets, but do we plan for time?
Today's workforce dreams fast, but peace of mind doesn't come from paychecks.
It comes from a plan to invest in your retirement.
The National Pension System, a trusted, flexible and fully digital retirement solution. It's simple to adopt and delivers high returns, helping employees grow their retirement corpus steadily. Smart companies adopt NPS Corporate. Smarter employees ask for it.
NPS जरूरी है।
Future security is teamwork. That's why.
NPS जरूरी है।
जब विकास जी के लिवर का ऑपरेशन हुआ तो पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर 50 लाख रुपए का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Imagine expanding your business to London or setting up a family office in Singapore and investing in Dubai. With Standard Chartered, you can grow your wealth anywhere, right now. Now's your time for wealth.
We plan for targets, but do we plan for time?
Today's workforce dreams fast, but peace of mind doesn't come from paychecks.
It comes from a plan to invest in your retirement.
The National Pension System, a trusted, flexible and fully digital retirement solution. It's simple to adopt and delivers high returns, helping employees grow their retirement corpus steadily. Smart companies adopt NPS Corporate. Smarter employees ask for it.
NPS जरूरी है।
Future security is teamwork. That's why.
NPS जरूरी है।
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल, बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
पापा, फीस ज्यादा है।
बेटा,
याद है बोनस के कुछ पैसे हमने दूसरे खाते में रखे थे?
2 साल से खाते में कोई लेन देन नहीं हुआ है, शायद इनऑपरेटिव हो गया होगा।
तो अब बैंक जाके या वीडियो केवाईसी से केवाईसी अपडेट कराओ, खाता होगा एक्टिव एकदम फ्री। चलो
कहाँ?
एडमिशन कराने, खाता हुआ एक्टिव।
RBI कहता है
जानकार बनिए, सतर्क रहिए।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
The global plastics industry comes together at Plastindia 2026, the world's largest plastics exhibition. Visit and explore opportunities from 5th to 10th February at Bharat Mandapam, New Delhi.
तेरा ये बिजनेस एक मास्टर स्ट्रोक है यार, है ना? पर मुझे लोन कौन देगा यार?
बैंक ऑफ बड़ौदा देगा तुम्हें MSME लोन। बॉब डिजी उद्यम के साथ 100% डिजिटल प्रोसेस, अप्रूवल इन मिनट्स। बैंक ऑफ बड़ौदा से MSME लोन लेना भी एक मास्टर स्ट्रोक है।
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
देख, इतना बड़ा आदमी मुझे इन्वेस्टमेंट टिप्स दे रहा है।
अच्छा, सिर्फ तुझे ही दे रहा है?
अर्ज किया है, दूर से लगा कि एक जाना पहचाना चेहरा हंसकर सच कह रहा था। पास जाकर देखा तो झूठे वीडियो के जाल में मैं फंस रहा था।
सेबी और एनएससी का कहना है किसी भी वीडियो में पलके और लिप सिंक पर ध्यान दें, सिर्फ ऑथराइज्ड सोर्सेज पे ही विश्वास करें। वाह, an investor awareness initiative by SEBI and NSE.
It's challenging to know which sector may perform next. Data, tech and AI help our fund managers spot suitable sector opportunities. Presenting Geo BlackRock Sector Rotation Fund. NFO closes the 9th of February 2026. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
नहीं भाई, कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRIs तक, Gen A से Gen Z तक, SBI सबके लिए है। Very good. SBI, the banker to every Indian. Truly.
Hello, Moto.
Hello and welcome to NDTV Profit. This is Hiral Dadia bringing you our all new offering, Trending Stocks. Actually, I'm not going to call it Trending Stocks. It's the trending deals that we're talking about. A trending deal of the decade, the India-US trade deal, is the trending story of the day. And with me is Sharad Dubey standing at the NDTV Market Pit with all the action in the markets today. Sharad, interesting day of trade. I mean, we were talking about 1,000 to 1,200 point gap up opening. The way markets opened up, the kind of circuits that, small caps and, mid caps have hit, that is actually telling you that probably people's portfolios have moved.
Well, finally, we could say that the broader indices have done really well, and of course, we are expecting that the 1,000 point up move can actually sustain. But yes, the gap up opening was definitely there above the 26,300 mark, but slight correction, but normalizing. Still, Nifty is up 700 points. Nifty Bank also, the story remains the same. Most of the constituents are in green. That's also up 2.5%. Remember, today is an important Nifty expiry is also at play, and that is why you are seeing some kind of volatility definitely coming. There are key factors to watch out for as well in the markets. But to be honest, everything you touch is turning old almost. The short covering is likely to come across the large caps, and that's what we are seeing in the Nifty stocks. Apart from this, also, let's look at the Nifty expiry at play. That is why the larger moves are not coming in, and especially the last 90 minutes, either way, we can see a little bit more volatility coming in as well. But nevertheless, Nifty had its all-time high levels of 26,373. That's the level to look at. For Nifty Bank, the all-time high level 61,764. These are the key levels to watch out for, and if this sustains in the closing, tomorrow you might see record levels as well. Rupee has strengthened, bond yields have dipped. That's the macro picture coming, and that's actually impacting the markets. The broader indices are jumping. Buying is coming across the Smith section, and Hiral had mentioned about the export-facing companies. They have also done really well. So it's a euphoria all over the place in the markets right now. Over to you, Hiral.
Euphoria in the markets, and if that short covering picks up pace in the second half of the trading session, that is going to provide another fillip to the markets as well. But it's time to discuss the benefits that all of these export-oriented companies get. Sabu M. Jacob, CMD at Keytex Garments, joins in. Mr. Jacob, welcome to the show, and always a pleasure to speak to you on NDTV Profit. This is Hiral on this side. I mean, this was a moment that was awaited by all. From the textile industry to your, any export-oriented sector that you saw was waiting for a moment like this. Your initial comments with the kind of difficulties that you would have faced on the back of the 50% tariffs. Mr. Jacob, are you able to hear me?
Yeah, tell me.
Yes, I'm saying my question to you is your initial comments, because this was a moment that was awaited by all since quite some time. They've now settled in at 18%. What would this actually mean?
See, now for me, in the textile sector, 95% goods are coming from China, Cambodia, Vietnam, Bangladesh, and India. Last 1 year, we are facing big problems because we are 100% business was to America. So the tariff seriously affected our business. And I think this financial year, is going to be like, 30-35% impact on us, our turnover. But now I think we can recover with this lower tariff in the world because, the Vietnam is paying 20%, China is paying 30-50%, Bangladesh is 20%. So India is the cheapest in the world. So that way, even yesterday night, the signal started, a lot of business is diverting to India. I got at least 3 inquiries, big inquiries, even the yesterday night. So that means, I think for the textile industry, this is going to be the golden time.
Mr. Jacob, Sharad here, and of course it's a very good time for the industry, but company specific also. Does that entire, that FY27 guidance, would you like to give some numbers to it because there will be a good incremental support coming in the financials as well?
See, last year, we did around 1,400 crores. Now, we believe, with our Telangana operation also is going to be very active. And the final numbers, we have to work it out because based on the changes, we have to rework and, we are already started working. Maybe a couple of days, we'll be able to come out with the actual numbers.
So that's, that's what you're looking at so far. Now tell me one thing. You've mentioned that you've already got 3 inquiries. Major US brands is what you were serving from Gerber to Carter's, Walmart, Amazon, Target, Sam's Club. All of these are brands that you've been dealing with so far as well. With majority of your exposure coming in terms of US, what's the kind of growth that you would see in terms of FY27 there? I mean, what is that number that you would go back to if you have to look at the last 5 years?
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
Okay. So my question, Mr. Jacob, to you is then, because of the impact in terms of that 50% US tariffs, you were looking at diversifying your markets as well. At what stage are you in terms of diversification, number one, and how difficult or easy is it going to be for you to again shift focus to the US markets?
See, even we already launched our products in the online market. Amazon, Flipkart, already we launched. Okay. We are in the process of, opening up our own franchisees in Kerala first and throughout India. Okay. We are not going to stop with this agreement, EU agreement or American agreement. We are not going to stop our process because we don't want to take any risk in the future. So parallelly, we will work with the domestic market as well as the online market and also American and European market. So this is going to be a plan for, equal importance to America, Europe, and domestic market, online market. That's our plan.
Okay, so that's your plan in terms of your overall expansion as well. Now, if I have to look at growth in terms of your operating profit margins as well over the last couple of years, I mean, maximum you've seen a growth of what, around 34, 35%, 31%, and this was back there in 2015, 16 and 17 on your operating profit front. Margins at that time were also above 30, 35%. That was the kind of range that we saw. With this deal getting signed at 18%, do you see a possibility of getting back to those kind of numbers in terms of your operating profit, in terms of your margins and your profitability number as well? Because you did clock a number close to 136 odd crores in FY25. Probably that might not be a number this time around.
No, due to these 2 agreements, one is EU agreement and, now the US agreement. Definitely not only Kitex, every garment industry, I think, we hope, the profit can be increased, drastically, because the demand is going to be so huge. So naturally, everyone can, get more profit. So we expect not the level of 30-35%, but definitely there will be drastic improvements on our profit.
We will not reach 30-35%, but drastic improvement that could be coming in as well. And yes, there is a dual benefit coming in the form of the US trade deal and the EU FTA. So one is the mother of all deals, one is the father of all deals, and that's what is going to nurture all the kids over here in terms of the companies that will be exporting to the US. But thank you, Mr. Sabu, so much for joining us on the show. Always a pleasure to speak to you as well. Sharad, this has been an interesting conversation where you're talking about a drastic growth that could be coming in on the back of both of these deals, And the question is, how soon will this actually reflect in terms of the financials? FY26 somewhere is going to be on the back burner. And as the management also indicated right now, he's already got 3 inquiries in less than 12 hours.
That's a very big statement coming from the management, to be honest. And of course, other textile players are also doing well in the trade. We look at it, most of them are in upper circuit, so likely a trade for the viewers, it might not be possible, but definitely we'll be taking out other sectors also as well, because they are also buzzing in trade, and maybe there might be important positions to enter in as well. But moving on, let's talk about PV Fintech also. The stock itself, we spoke about it. The earnings were on the good side, but the street is definitely concerned when it comes to its acquisitions. And I had a chat with the management also. Listen in. Is the fundraise and the inorganic expansion here? Are you looking at US markets, UK markets? What are the important points here?
See, the US market is 30 times bigger than the Indian market. Of course, we are growing much faster. The European market is 15 times bigger than the Indian market. Again, we are growing much faster. But when something is 15 times, it will take us a bit of time to get there. I think we, as Policy Bazaar, have developed the most sophisticated insurance distribution engine that exists pretty much anywhere in the world. So the idea is, why not in one of these markets, look at a market leader, established market leader, who has enough profits, stable operations, and see if we can transform one of these into the next phase of its growth. Out there, in those markets, they have scale, they have stability, they have resilience and understanding of the benefits that platforms like us bring to the consumers and to the industry. We bring transparency, we bring choice to the customers. That is very well understood in those markets. And I think we can transform those into its next phase. Innovation is low. See, if you look at those markets, innovation in the insurance industry is extremely low. So India actually stands out in the innovation it has done in the insurance industry.
Yes, and Yashish sir, there are talks, in which the US-based company named Goosehead Insurance. Are you in talks with that company for acquisition? Is that correct?
See, first of all, if I was, I would never talk about it.
Okay, fair enough, sir. But definitely coming back to the earnings, the contribution and the adjusted EBITDA, that beat analyst forecasts also. I was just looking at the numbers. What's the outlook ahead now for the operational profits going ahead?
I think our company is fundamentally very strong. I explained it yesterday. People will buy insurance from any place which they believe is going to help them at the point of claims. Why do people buy car insurance from a Maruti? Because Maruti or Hyundai are able to help the customer at the point of claims. Because when the car goes into the garage, it is serviced by Maruti, it's serviced by Hyundai, they are able to do that. When you talk about the health insurance area, today Policy Bazaar is able to really help the customer at the point of claims. By being at that stage, and because we have got good disclosure, we are able to do that. And thus the customer is increasingly choosing Policy Bazaar. It has taken us 17, 18 years to get here. And of course, in the last 5 years, a lot of effort on the claim side, right? But you tell me, if you are person who's buying health insurance, you will buy from the person who can help you at the point of claims. Why would you buy from anybody else? And that is what is driving Policy Bazaar's growth. It's a very fundamental piece. It's not because we have a good website, a slick website, or anything of that sort.
Okay, so, that's the word coming in from the management of PB Fintech. And the reason that stock is under pressure is on the back of the fundraise plan, in spite of a good set of numbers that have been reported. And the fundraise, they've said the decision will be, I think, taken. The board meeting is on the 5th. And this will be with regards to looking at an acquisition. That was something that Somit Sarkar had bought to us as well in his Heard on Street segment. And that is a khabar which has been confirmed right now as well. But moving on, this is time for a rapid fire session now. Somil Mehta, Head Alternate Research, Mirai Asset, Sher Khan joins in. Sharad, you can take your part of the list and then I'll go to Somil with the other set. Over to you.
Thanks a lot, Hiral, for that. And of course, the first one is Adani Group of stocks. All of them are buzzing in trade. A strong up move coming in most of the counters. Somil, your views on Adani Group of stocks?
I think I'm more looking at Adani Port, Adani Green and Adani Enterprise. They are okay right now. They're trading below 200 daily moving average. They've reversed back. I totally understand, but the entire setup and the structure for Adani Port looks good to me. And I have positive views for Adani Port, and I think it should go above 1600, 1650 levels on the high side.
All right, standard disclaimer for Adani Group of stocks. Please remember that. But moving on, Gokuldas Exports. That's also in focus. Somil, your views on that? Yeah.
Apologies. Just give me a second.
It's okay. These are the textile plays which you are talking about, and Gokuldas Exports is our stock.
Absolutely. Gokuldas Export looks good to me. Positive view. I think long-term investment, absolutely great from here. I would not suggest a short-term trade or a medium-term trade, but yes, long-term definitely should be in your portfolio.
And are any monthly breakouts coming in for KPR Mills?
Absolutely positive on the stock. It has taken support at very crucial levels of around 800 levels. Now 800 becomes a base for the stock. On the higher side, I think it should go to 1200, 1250 levels. So that would be my target in the medium to long term.
Okay, and Aarti Industries, the chemical space is also buzzing.
Aarti Industries looks good to me. Broken out of an ending diagonal pattern on the upside, trading about 200 daily moving average, huge gap up, but it should only be traded as an investment. Like it should be in your portfolio for long-term investment, not for short-term trading, not for medium-term trading.
And what about Trident, Somil? Another textile player.
Trident, I would still wait for a breakout. The entire consolidation breakout is about 32, 33 levels. I'll wait for that. Once that has broken out of the, once this stock has broken out of this consolidation, I think it will be a good, long-term play. Probably the next target would be around 40.
And Somil, what about Bharat Forge? A good positional setup in the medium term?
Absolutely. Bharat Forge, absolutely positive on the stock. I've been talking about Bharat Forge and tracking the stock for a little while now. It is in the uptrend. I'll be expecting a target of above 1650, 1700 for Bharat Forge.
Okay, 1700 targets for Bharat Forge from Somil. Thanks a lot, Somil, for that. And Hiral, over to you.
Thank you so much for that, Somil and Sharad. In fact, talking about Bharat Forge, we have Amit Kalyani, GMD at Bharat Forge joining in. Amit, welcome to the show and always a pleasure to speak to you. This is Hiral on this side. What a time to speak to you. Good afternoon. I mean, this was a time, I think, that street, from markets to corporates, everyone was waiting out for this kind of a moment wherein the trade deal would be signed. A couple of conversations did say that this is probably just a psychological need of the hour, but the kind of rejoice that you're seeing in the markets is, I don't know what to even talk about it. What are your initial thoughts?
I think if you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, But India and America are extremely aligned. And I think this shows the strength of that alliance partnership and puts us back in the right context in a stronger position to, grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
Well, interesting on that. Good afternoon, Amit. Now, of course, there is the automotive segment also we talk about, but the defense space also is buzzing. Of course, there was a good budget announcement also coming in. But the India-US trade deal, now what happens for the defense-related businesses or globally for your company?
See, as a company, all of our businesses are globally oriented, including our defense business. And this whole rearm Europe is a very big opportunity for us to participate in the defense supply chain, both at a component, subsystem, and a system level. So we are exploring opportunities in that. And in US also, both export and make in the US opportunities are increasing. And I think that the question mark over tariff and how long is it going to last, what is going to happen, I think has finally been settled. I think it has been settled in a fairly I think reasonable manner. I mean, things happen by surprise. It came as a shock and it's gone as a pleasant surprise. So it's good, and I think we can resume thinking long term and reactivate whatever growth opportunities we see. And I think there are lots of opportunities. In fact, there are lots of things that were probably ready to go, which, were held back because of the tariffs. And I think that will see an acceleration.
Amit, my question to you is, would you be happy with that 18% or was your expectation slightly lower, number one? And two, when it comes to the exposure that you have in terms of US Class 8 truck market, how big a turnaround are you expecting on that front?
First of all, the US Class 8 truck market does not even represent a double-digit percentage of our revenue. So I'm not particularly, I think the US Class 8 market is cyclically doing okay. The bump that was supposed to be seen because of the pre-buy due to the emission norm changes is not going to happen. But what that also means is that the huge increase in cost because of that emission norm is not going to happen. So volumes will remain stable to strong going forward. And the US is now beginning to spend more and more money on infrastructure. And I'm not just talking about data centers, but all kinds of capacities in the US are going up, including basic materials like steel. They're expanding ports, they're building pipelines. So a lot of infrastructure spending is starting to take place. So this will provide a 3 to 4 to 5 or even longer term kind of boost to infrastructure and in turn to transport. So I think the US is in a sweet spot as far as that is concerned.
Okay. So Amit, my last question to you, running out of time. So with the tariffs, the reduction coming into 18%, will that be margin accretive for a business like yours? Or will it be a pass-through to US customers to see that you get those market share gains in whichever segments that you're offering? And two, in terms of cost of sales as well, how will that be impacted?
Let me just say one thing, Tamanna, that we expect to keep growing. And I think this will provide us a acceleration for our growth. And we continue to grow profitably.
So I think a growth driver in the offing as well, not only for Bharat Forge, but for the industry, and the commentary is coming absolutely positive. But thank you, Amit, so much for joining in. Always a pleasure to speak to you as well, but completely out of time. With that, it's a wrap on this edition of Trending Stocks from Sharad, the team that put the show together, and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
Brought to you by AU Small Finance Bank.
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
वकील साहब अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
सिस्टर देश का सोच रहे हैं
और इसके फ्यूचर का नहीं सोच रहे?
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है, तभी तो इनको अपने इरादे पूरे करने का राइट है।
पढ़ो पढ़ो, देश की कई बेटियों का फ्यूचर सिक्योर करना है।
करो पूरे अपने इरादे, अपनों से किए सभी वादे। SBI लाइफ अपने लिए, अपनों के लिए।
We plan for targets, but do we plan for time?
Today's workforce dreams fast, but peace of mind doesn't come from paychecks.
It comes from a plan to invest in your retirement.
The National Pension System, a trusted, flexible and fully digital retirement solution. It's simple to adopt and delivers high returns, helping employees grow their retirement corpus steadily. Smart companies adopt NPS Corporate. Smarter employees ask for it.
NPS जरूरी है।
Future security is teamwork. That's why.
NPS जरूरी है।
हर साल आपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
बैंक ऑफ बड़ौदा में करंट अकाउंट ओपन करना एक मास्टर स्ट्रोक है। बैंक ऑफ बड़ौदा, इंडियाज इंटरनेशनल बैंक।
It's challenging to know which sector may perform next. Data, tech, and AI help our fund managers spot suitable sector opportunities. Presenting Geo BlackRock Sector Rotation Fund. NFO closes the 9th of February 2026. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Today, Uttar Pradesh has become the country's largest and most trusted investment destination. So far, foundation stones have been laid for more than 16,000 projects involving investments exceeding 15 lakh crore. Well-planned initiatives in areas like the defense corridor and electronic manufacturing have helped UP shed its image as a Bimaru state.
सुशासन में ही निवेश सुरक्षित हो सकता है, हमारे युवाओं की आकांक्षाओं की पूर्ति का माध्यम बन सकता है।
Investment and infrastructure development are complementary to each other. UP has a portfolio of 330 infrastructure projects worth 10.48 lakh crore, which is the largest in the country. Of these, 128 projects worth 2.37 lakh crore rupees, that is about 39%, have been completed and commissioned.
उत्तर प्रदेश में आया हुआ 45 लाख करोड़ रुपए का निवेश का प्रस्ताव नौजवानों के लिए नौकरी की गारंटी का दस्तावेज है।
हर साल आपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
माही भाई कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
हर साल आपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
We plan for targets, but do we plan for time?
Today's workforce dreams fast, but peace of mind doesn't come from paychecks.
It comes from a plan to invest in your retirement.
The National Pension System, a trusted, flexible and fully digital retirement solution. It's simple to adopt and delivers high returns, helping employees grow their retirement corpus steadily. Smart companies adopt NPS Corporate. Smarter employees ask for it.
NPS जरूरी है।
Future security is teamwork. That's why.
NPS जरूरी है।
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Imagine expanding your business to London while setting up a family office in Singapore and investing in Dubai. With Standard Chartered, you can grow your wealth anywhere, right now. Now's your time for wealth.
हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। मोतीलाल ओसवाल के साथ समझिए बजट का असर आपकी ट्रू वेल्थ पर।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Hello, Moto.
Good afternoon, you're watching Lunchtime Trades with me Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour as well, all while you grab lunch. And there's actually a lot to discuss on the show today. You do have the markets. First things first, let's take a look at what's happening with the markets. This is of course a landmark day. You do have the father of all deals is what it's being touted in fact as. And you can clearly see the impact sort of being reflected in the markets as well. It's a sea of green that you're looking at on the Lal Street, all benchmarks trading with gains. When you talk about sectors, Nifty opened above 26,300, which settled to trade at range bound near those 25,800 levels thereabout, somewhere where it's also hovering right now. When you talk about Sensex as well, you're seeing quite the jump coming in for the Sensex. When you talk about the broader markets, you're looking at outperformance there, even as, you know, pharma as well as IT, auto, metals as well. You do have that advancement of over 2% in trade coming in for all of these. Let's quickly take a look at some of these counters as well that are in great shape right now. When you talk about Welspun India, that's up about 19.5%, almost 20%. Apar Industries, 19.2% uptake coming in. Philips Carbon in good shape. KPR Mills, RT Industries, LT Foods, Elgai Equipments, as well as some of your solar stocks as well. So the likes of Vari Energies that is doing quite well for itself, up about 12.5%. Vardhman Textiles, Trident as well, up anywhere between 11.5% to about 12.5%. So you have a bunch of these counters that are actually in focus. Textile stocks, solar stocks doing well for themselves. Double-digit gains coming in for some of those counters. But let's also talk about Transrail. That has delivered a strong set of numbers in the third quarter. You're looking at revenue also growing over 30% here on a year-on-year basis. Profit has in fact risen sharply as well. And you do have Puneet who caught up with the management. Let's quickly go close and listen into a slice of that conversation.
Very, very strong results that we've seen in quarter three. The 9 months number also reflects the strength that you've been talking about to us over the last few quarters. But let me just start off with the India-US FTA. It's been a key one for you. It's been a key one essentially across segments, multiple that were impacted. But both that as well as the India-EU FTA, do you see any benefit for Translate where you already started deploying some products? If you can give us some perspective on that to start us off with.
I think this is great news for the Indian industry, both for the EU deal and the US deal announced yesterday. So we welcome that wholeheartedly. We as a company were doing seed marketing in US and EU for our towers and conductors, product sales principally. And we believe that there will be an opportunity going forward as things settle down. And we truly welcome this opportunity now. We have set up a sales organization. We've done some seed marketing, product sales. So we will build on that in the next 6 and 12 months. And I think overall the market sentiment and the opportunity for all exporters, for all categories of business is great. The India sentiment and our infrastructure sentiment will be focused on these opportunities.
In terms of the quarterly results as well, it's been a very strong growth in revenue, almost 32%. EBITDA has grown at 28%. We've also seen the profits also go over almost 17 to 18%. So overall, it's been a good quarter for you. You also entered 3 new countries as well. So I just want to get your perspective on how is is this also just entry through sales offices, or is it that now you can expect to get orders from that regard? If you can give us some perspective, and how do you actually decide in terms of entering these new countries as well?
I think your question is very apt. So entering a new country requires at least a 6 to 12-month focus. Looking the geopolitical, understanding the labor laws, the way you have to execute. These are all EPC jobs we've got, and we are quite confident to do that. So we basically in MENA we have entered. We got a job in Abu Dhabi, Djibouti, and we got a job in Oman, which earlier had, and Tunisia. So principally, we look at each country, look at the country risk, and look at the utility and the funding agency. So it's a process of evaluation, the risk, and understanding how we can look at a profitable growth. So this takes care of a lot of localizing ourselves there, putting our teams there, and then entering the country. And once we enter a country, we intend to remain there and build a base and market share.
I also just want to talk about growth, right? Because you've done almost 5,000 crores of revenues in these 9 months. In just 3 quarters, essentially, you've done what you did in the last year. So is that expectation that the continuation of the 25 to 30% growth, is it sustainable over the next few quarters as well for you?
So with the current order book of 14,500 crores and L1 of 3,500, we are looking at an order book around 18,000 odd crores as of today when it fructifies. So we are good to go for the next 2 years in terms of the 2.5%, 2.5 times the revenue to order book and bill ratio. We also believe that the revenue and margin profile, as we are picky on which orders we pick and which orders we bid, is going to be maintained. So definitely 25 to 27% growth is what we are promising, and hopefully if we can stretch it, we are trying our best. We are positive post the monsoon, so we're looking forward to a good year.
Also, see your 9-month order book, Mr. Narang, it's been quite strong. The growth has been there, as you rightly said. While you entered civil, railway as key divisions over the last few years, the bulk of the order book is coming almost 89% coming from the power T&D segment. Is there a medium-term strategy to increase civil as well as railways? Because railways, we've seen in the past as well, a lot of companies, while they enter the segment, the order inflow from that side is quite subjective and not in your hands. So anything that you can offer on civil, where do you expect the share to go maybe in the next 3 to 4 years? And are the margins comparable to power T&D, slightly higher, or is it project dependent?
So in civil, we are actually doing heavy engineering-led jobs of bridges, tunnels, cooling towers principally. We are not into residential and housing and stuff. So we are looking at heavy engineering-led. We're building our pre-qualifications. And as we are finishing a good 4 or 5 jobs on bridges, we are in fact doing the longest bridge in India, Koshi River. So we are building a pre-qualification, and we will pick and choose our spots where we will bid, and we're looking at a good margin profile equivalent to what we do in T&D in domestic. Secondly, on the railway bit, we again have 3 to 4 small jobs. We are building a pre-qualifications. We believe that this is a growing sector, as you've seen the announcement in the budget. So we will look at OHE and construction in high-speed metro also. So we believe that the company is gearing up for the future with diversifying slowly but surely in the right segments, though our main business will remain T&D, 85 to 90%, but we are surely getting ready for the right opportunities in other segments.
Mr. Narang, also one question on margins as well, because on a 9-month basis, we've seen a slight dip coming at 12.2%. But largely, where do you see the sustenance of this? Is it that compared to last year, FY25, you will be maintaining those margins for FY26? And is that a similar strategy, as you said, with heavy engineering in civil, that the journey is upwards and onwards from here itself?
Yeah. So, if you would recall, I had given a guidance of 11.5 to 12% for this financial year, and we are maintaining and bettering that. Also, the quality of the order book, as we said, is margin focused, not revenue focused. So we believe that this 11.5, 12% is sustainable for the coming few quarters and more. And we truly believe that the company is also gearing up further for execution physically, and our factories are backing up the expansions, which therefore gives us a right diversified backward integrated mix to support our execution and therefore our margins.
Just one final question on your capex as well, because you've announced already that a lot of those capex in towers, conductors will start coming in from Q1 of FY27. Is the timeline largely maintained as well? And what does the capex actually essentially do for you? Anything that you will add in terms of entering new geographies and those orders coming in, is that the plan that once that capacity comes in, you will be able to do and achieve things which you haven't yet because of those capacity constraints?
So I think, again, very good question. The principal point here is when you are building capacities, you're looking at fulfilling your order book on time. So our brownfield projects for towers, 70% is already coming in place and the balance will happen in the next 2 months. Our new plant at Butiburi will also be ready and ramped up by March, April. So what we are saying is that to fulfill our order book on time and before time completion of jobs, we are fully ready to grow faster than what we have done, because the backward integrated product category will support us in this journey. Not only will it help to fulfill our execution timelines, it will help us to look at new orders for products overseas, and therefore it's a win-win for us as the factories are ramping up.
Alright, then there you go. That's the word coming in as far as Transrail is concerned. But let's also put the spotlight right back on gold as well as silver today, because you do have gold clawing back ground. When you talk about gold prices, climbed over 4.2% after that 4.8% decline coming in the previous session. When you talk about what's leading this sort of uptick that we've seen, it's actually a wave of buying that you're seeing coming in from Chinese speculators, supercharging this particular rally. And silver has also staged quite some rebound, because you're looking at a rise of about 8.1%. You're looking at that $85 an ounce level back in focus when it comes to silver as well. But let's also talk about the gold demand trends that are in focus right now on the back of total gold demand crossing 5,000 ton for the first time ever. That's something that you're looking at. Other than that, what's really happened here is that investment demand, in fact, remains the clear bright spot, and that is according to World Gold Council. Let's also take a closer look at some of the trends that are indicating for the fourth quarter as well as 2025 as a whole, and what the path from here on is going to be looking like. Sachin Jain, Regional CEO, India, World Gold Council, joins us on the show right now. Mr. Jain, thank you so much for taking time out, and a very good afternoon to you.
Thanks so much for having us on the platform. Really appreciate it.
It is a very interesting report that you have. You do have a bunch of brokerages that are taking note of this particular report, remaining positive nonetheless. But you do actually have UBS also highlighting that this sort of indication when it comes to demand is actually crucial in terms of the way that they're basing their forecast for gold as well, to be quite bullish above that $6,000 an ounce level. In terms of the key highlights here, what I wanted to firstly understand is that you're talking about how demand remains quite robust. Is it across the board that you're looking at? What are the key highlights when it comes to demand here?
Shansi, maybe I can give your viewers a bit of an idea of what's happening globally, and then we can talk a couple of minutes of what's happening in the Indian context. So as you mentioned, globally, for the first time, the demand crossed 5,000 tons. And that's very interesting, keeping in mind that the prices of gold last year were at an all-time historic high, which actually resulted that the net increase in the demand of gold from a value perspective was up 45.5%. So that's massive. Largely, this is led by investment demand, which crossed about 2,175 tons. But again, dramatically up on value. We saw a consistent demand on technology, and that's largely to do with the AI chips. And as AI gets more and more democratic, the faster chips are using more and more gold. The third and the most important area that has been is jewelry, where we've seen at a global level almost a significant 22 to 23% decline in volume term. However, in the value perspective, this is still up about 13 to 15%. And that's very important because a jewelry consumer behaves in a way where there's certain budgets that consumers come out with. And the other pillar of demand has been the central banks, which has been at about 873 tons. And very interestingly, this did not cross 1,000 tons, which happened in 2024. But where we ended, again, gives a strong throughput of what's happening in the world of strategic investments as countries are investing and central banks are investing. Now let's jump quickly in what happened in India. India, the demand for gold last year was about 711 tons. That's down from 802 tons last year, so about 10 to 11% decline in terms of value, in terms of volume. However, in terms of value, we saw quite an upsurge of about 30%. Again, if I break this down in jewelry and investment demand, in jewelry, we saw a 24% decline in terms of volume. And again, resultant increase in terms of value is about 13.5%. If you look at investment demand, particularly, we saw an upward trend of a good number in terms of, let me just read that out to you, was about 17%. And from a value perspective, it was 73% up. That is very significant and really reflects on the interest of the investor class. And lastly, very interestingly, whenever we've seen historically the price of gold going up, we also see that recycling in, which is in our terms is gold getting converted to cash or any other investment class, tends to become higher. However, we've seen that 19% decline in the recycling of gold, even at these historic prices, which firmly believes or indicates that consumers and investors believe in the category and are staying put. So that's broadly what's happened globally. And then I can deep dive on any questions that might interest you.
And what really stands out to me is that consumers seem to be choosing to retain their gold holdings, and this is despite those record prices that you saw coming in. If you go by the recycling numbers for gold, at least in that particular quarter that you're looking at, you do have that recycling trend that also stands out. We'll come to the jewelry weakness as well, but firstly, I wanted to try and get a sense of what you think about the numbers when it comes to recycling.
Well, I think from a recycling point of view, there are two things of recycling. One number that we don't put on in our research findings is consumers coming in and buying gold or old gold to new gold. And typically in up to 23, 24, as in year 23 and 24, we believe that the recycling was about 20 to 25%, and that we believe would have crossed 40% in 2025. Which means old gold getting converted to new gold. And that's a great sign that, gold is not just sitting in the lockers. People want to, upgrade their old designs to new designs, and that's great for the industry. That's one part. But the fundamental belief in the strength that gold holds is purely to do with the core drivers of gold and the pillars on which gold pricing is based on. And that's the current geopolitics that's triggering it, the de-dollarization that's triggering it, the global debt, which I think is a fundamental reason why the confidence on US dollar is reducing. And hence a lot of reserves are converting into gold. And that fundamental is going to be staying on for not just in 2025, but will stay on for longer. And I think hence the core pillars on which the gold price is built on strongly is in favor of gold. And even if you look at the last 2 or 3 weeks of volatility that's happened, we always at World Gold Council, we talk about gold as a long-term diversifier of your portfolio and a long-term strategic asset that makes your portfolio healthy. And I think if you look at, gold from that long-term longevity and that strength, I think it holds very strongly in the current economic situation.
And when we also double down on the entire categorization of demand, right, you do have investment demand that is quite important to look at. It seems to be the clear bright spot, isn't it?
Absolutely. I mean, if you look at what used to happen 30 years ago, I mean, just 3 decades, central banks were the net sellers and the main usage of gold was jewelry. Fast forward today, investment demand, central banks buying jewelry, technology is a different, it's a sectoral shift of the consumption. But as you mentioned about investment demand, last year, as in year 2025, a calendar year, the investment demand crossed $6 trillion US. I mean, just pause and think about that number. If I were to translate that in INR terms, we're talking about 18,70,000 crores worth of gold that got transacted on a daily basis. And that makes gold as the most liquid asset on planet Earth. So you're absolutely right that investment demand is a very important sort of segment. It's growing, and I think with gold getting in more and more technological savvy, I believe in the coming time gold will be the new gold, and there will be a lot of confidence in technology by which this will be a comparable asset class to any other modern asset class, which will be accessible, which will be authentic, and could be sort of fungible across countries, across industries, across people, and those are things that are coming up.
Well, absolutely. And Mr. Jain, largest asset by market cap for a reason, right? That's gold for you. But quickly before we let you go, I just wanted to get a sense of what the picture is going to be looking like from here on. The sense that I gather is that jewelry weakness perhaps is likely to persist. But what are you, understanding in terms of demand going forward as well? What are the trends indicating to you, just to wrap up?
I think, I wouldn't say jewelry demand is weakening because, of course, from a volume point of view, it's going down, which we've seen last year. But what we've not given to the consumer is a bit of pause on the pricing and so on and so forth. I mean, today a consumer walks into the jewelry store with a certain budget. The budgets haven't gone up with the same ratio as how the prices of gold have gone up, and that they have to catch up. But the interest of consumer on gold jewelry and jewelry in general is an all-time high. So that continues. Having said that, I think the investment demand will certainly go up. And I think modern assets or asset classes like ETFs, which today still are very popular in the financial circuits, but a simple human being or a simple Indian on the street that has a very low awareness of these forms of investment, which are great, which are regulated, are backed by physical gold. And I think these forms of investment will go and take a lot of stride.
Right. Well, absolutely. And, thank you so much for joining in and helping us understand, everything when it comes to demand, investment demand, jewelry demand, and all of the trends that are shaping up when it comes to gold as well. Thank you so much for joining in on this show. But you do have defense space that is largely in focus. And let's also go across to Mahima to try and understand the numbers. When it comes to Paras Defense, it's quite an interesting set here, Mahima.
Right, so I think the conversation is more about how budget has fared and the allocation that is coming from the budget. Hikes of 22% is what we've seen in this particular fine print coming in the finance bill. And to understand as to what this means for the company, we're joined by Amit Mahajan, who will take us through and help us understand as to what this budget means for defense sector as a whole, and also Paras Defense as a company. Mr. Mahajan, thank you so much for taking out the time. My first question to you is the capital outlay for defense this time has been around 2.2 lakh crore versus that of 1.8 lakh crore in FY, which was there for FY26. This is a jump of almost 22%. Just want to understand, how are you reading this for the entire sector and for Paras Defense as well?
The defense allocation of capital goods and the capital expenditure for defense has risen by almost 24%. And now that's a very, very big jump. Government, if you would have asked me as an industry or as a citizen, government has done enough when it comes to defense sector. They've already enabled a lot of triggers and given us a long-term business visibility. Apart from that, what this particular budget they have done is they've instilled that confidence on a long-term basis, where they are saying that we are not going to stop here. Defense is the largest ministry after finance to get the amount of money allocated for it. So definitely we need to be self-reliant and Atmanirbhar when it comes to critical technologies, and that's the confidence the budget has shown on the Indian defense industry.
Fair. Mr. Mahajan, from that 2.2 lakh crore of allocation, just want to get a sense as to how much of an acceleration are you expecting from your order book growth? And the second part of this question would be as to, are there some expectations that you had from this budget which were not catered to?
Firstly, I would want to take care of the second question. There should not be any complaints any Indian industry should have with the government as far as the defense or space sector is concerned. We are very, very well fed, and these expenditures that they have allocated now, there have been, in the last 1 year, we have seen that there have been emergency procurement, there have been, speed up of a lot of programs for our military preparedness. And that definitely creates a deficit. At the same time, it also creates a momentum for a long-term future. So these funds which have been allocated or enhanced will be first utilized for these deficit, as well as the speeding up of major programs which is happening, which is creating a snowball effect in a positive manner for the Indian defense industry, and the cash flows will be flowed in for that.
All right. So, Mr. Mahajan, then, you've given us, guidance for a strong pipeline going ahead, which is, between that 20 billion to 30 billion rupees in the next 18 to 24 months. Do you expect a change in that guidance, considering that, the defense allocation has come in or at the higher end?
I don't want to just, for the sake of excitement, tell you some other figures. What it does, it makes it more real. If there are any uncertainties when I am telling you 2,000 crores or 3,000 crores worth of opportunity, if there are uncertainties somewhere embedded into it, those uncertainties just go out and it becomes more and more real. These opportunities now are not just short term, but they also start looking long term, because the government seems to be very serious when it comes to the defense for the country. And the industry, according to me, is now gearing up for a very, very serious, big opportunity in front of us.
All right. One last question to you, Mr. Mahajan. You've guided for a 35 to 40% revenue growth and a 27% EBITDA margin in FY26. Any ballpark figure Okay, I think we seem to have lost the connection with our guest, but I think we'll take up this question with him some other time. But with that, we're completely out of time on this edition. Do stay tuned to NDTV Profit. Up next, we're going to take up all your questions. Do stay tuned.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story।
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your automate.
Hello and welcome to Ask Profit, the afternoon edition. This might be the first 1 hour edition that we're doing for Ask Profit in the afternoon, but it is such kind of a day that it warrants it. It's been a very, very strong session for the markets, the India-US deal, and we've been talking about it since the morning, got you that perspective from our, from the market veterans as well. And now to solve all your stock related queries, and we'll try to do that in the next hour or so. My name is Puneet Zaveri, with me is Mahima Vajrajani, and we'll take a very, very quick check of the markets are doing, because it's important to see if that relative strength on the index is continuing to maintain. So let's look at the heat map for the Nifty 50 to first start off with. You've seen key stocks in the heat map for the Nifty 50 largely continuing the strength today, and that is visible right now on your screen. So the heat map, we can pull that up, shows you the strength on stocks like Adani Enterprises, Geofinance, Sun Pharma amongst others, but largely 49 stocks of the Nifty 50 in the green. Ones now as we speak has turned in the green as well. So all 50 stocks in the green as we speak. The results for Adani ports also flashing on the bottom of the screen. It's been a good quarter for the company, both on EBITDA as well as profits. So stocks already up almost 7% as we speak. And this one is being as an additional kicker. When you look at the heat map for the sectoral index as well, gives you the perspective that the rally has been broad-based across the important key talking points. Realty has continued to be one of the areas of strength for the markets at this point of time, where you've seen that index largely lag in the last few months. Maybe this could be the trigger. Metal index continues to be in the green, continuing that positive momentum, while the others as well is maintaining that growth. Importantly, the FMCG, which was in the red for a bit, has now turned into the green as well. Overall, but Mahima, in the broader markets, that's been one of the other key areas of strength, right? Because the mid cap and the small cap, after a really long time, showing you the decisive move on the index today.
Yeah, most certainly. And I think, as I mentioned in the morning also, a lot of investors who've remained invested in the mid cap and the small cap space would be enthused today, because overall we saw negative returns in 2025 for the small cap. Mid cap also did not do much, but today is the day when we're seeing overall gains of 2.8% in the mid cap 150 and small cap 250 also on the similar lines of around that 2.9%. But the interesting part is with regards to a lot of names that are buzzing, and a lot of these names are buzzing on the back of the India-US trade deal. You have a lot of textile exporters which are doing fairly well, locked in the upper circuit. since the morning. You've counters like Gokuldas Exports, Wellspun Living, etc. Let's try to pull them up one by one and see as to how these counters have, upheld the gains. Garware High Tech, Avanti Feeds, Goldium is another counter that's now locked in upper circuit. Something like an ADF Foods is also locked in upper circuit. Indocount, Apex Frozen, Nercas, all of these seeing good gains. But on the flip side, you have something like the Reliance Infra, which is not doing very well, down by about 5%. Not much on the red side, of course. You have around 1,000 plus stocks advancing in the total market space as we speak. So that's with regards to where all of these names are concerned. But with that, quickly, let's go on to the queries that you have for us on the show today. You can either call us or WhatsApp us on the numbers that are flashing on your screen up there. And to answer all those queries, we're joined by Akshay P. Bhagwat, who's a Senior VP at JM Financial, and Avinash Gorakshakar of Avinash Mentor Research Services joining us now. Welcome to both of you, gentlemen. I'll take up the first question, which is coming in from Suresh, who's writing us from Pune, asking about undervalued small cap stocks that he can go ahead and invest into. He's got about 2 lakh rupees right now, and he says that whether he should go ahead with battery storage theme, NBFC, or healthcare sector, or maybe probably divide his money into these or one of these sectors. Avinash, I'll come to you on this one. A very good afternoon to you. What would your view be?
Yeah, good afternoon, Mahima. I think, undervalued is, has to be looked from a relative sense, because with the markets firing on all cylinders, now it's very difficult to actually say what's really undervalued, because only over a period of few days, I think the market will cool off and we'll see prices stabilizing. But I think within the hotel sector, if he's looking at investing his money for the next 12 to 15 months, I think Lemon Tree, Chalet Hotels, even Indian hotels look to be quite interesting. And within the auto pack, we like auto component players like Sundaram Fasteners, typically a Lumax Industries. And most importantly, I think the defense sector, I think, which has been in the limelight. I think even at these levels, stocks like Bharat Electronics definitely could be a better bet, I think, if you're looking to stay invested for the longer term. But I think exporters, you mentioned about the textile sector. I think Gokuldas Exports, companies like Arvind, Indocount, these are all companies which are going to benefit significantly, because a large percentage of their revenue comes from the US markets. And I think with now the trade policy finalized, I think the markets are cheering that the threat of, the import duties on the export goods was very high earlier. Now it's come down. So I think business will be back to usual, but definitely some improvement would be seen in the fourth quarter. So I think, these are all basically themes and stocks which I think the investors can definitely add on declines. In this market, most of these stocks have gone up. So we'll prefer that there's a mild correction, the market stabilize in the next few days. At that point, buying could be advisable.
Got it. Got your view, Avinash, and welcome to the show. We have a first caller also for today coming in from Andhra Pradesh, and Man Singh has a question for us. Man, good afternoon. Welcome to Ask Profit. What's your query?
Very good afternoon, sir. Sir, I am invested in Transrail Lighting, 150 shares around 620 rupees.
Okay.
Should I accumulate more number of shares at the current price, or should I wait for the dip? I can stay invested for 3 to 5 years.
And Man, did you enter this with a long-term investment horizon or a short-term investment horizon?
Yes, sir. I can stay 3 years, sir, up to 3 years.
Got it. Avinash, let me come to you then very quickly on Transrail Lighting. It's actually been a very interesting counter, because the results have been quite strong over the last 3 quarters, but it's been in a corrective phase. Should Man continue to hold this for the next 3 years? He's holding 150 shares at 600 rupees per share.
No, I think, Puneet, he can continue to hold. The company has a very strong order book. Even the numbers, as you mentioned rightly, Q3 numbers have also been quite solid. I think overall, the performance in terms of data points looks very interesting. But I think the reason the stock got hammered down was due to some corporate governance issues, which I think the management has clarified. So, I think the markets were not very happy that this clarification came after the disclosure was made by some analysts. But then I think, business is growing very rapidly. I think the markets will respect the data over a period of time. So I think if you can hold on for the next 12 to 18 months, it's a growing business. And I think the order book actually clearly shows that, they've got a lot of repeat business from their existing clients. So I think, if he can hold on for the next 12 to 18 months, he can definitely even add more, and definitely a good risk reward is possible. But the time frame has to be longer.
And, we also had the chance to speak to the management today at 1 o'clock, where I actually had a chance to speak to them on what's their outlook. It seems very positive. a lot of capex that's coming on stream in Q1 of FY27. So if you missed it, do catch that conversation on our YouTube channel. But another caller coming from Australia, Shailesh is now joining for a stock query. Shailesh, good afternoon. Welcome to Ask Profit. What's your query?
Yes, thank you very much for accommodating my query. I want to mention one fact. I have been, going through your channel and the information that you guys are providing on your channel. I'm consuming all the days. Actually, daily my to and fro office commute. So thank you very much for all the information that you guys provide through your channel. My query is regarding the Ramkrishna.
Sorry, I think Shailesh, we lost your connection, but thanks so much for actually joining in on a daily basis and actually calling us. We love hearing from our viewers. It's also very evening in Australia, so I hope you have a good evening. But let me take the stock query actually with Avinash again, because Avinash, on RK Forgings, there was that corporate governance issue yet again in terms of inventory management, and then the stock price got a hammering in Q4 of FY25. So since then, it hasn't actually recovered while there has been a multiple disclosures that have come in. Do you think that Shailesh should continue to hold this counter?
Well, I think, see, from a longer term perspective, Ramkrishna Forging is a very large forging player. It's second to Bharat Forge. And I think, they have gradually diversified into the railway segment. In fact, they have tied up with Titagar for manufacturing of wheels for the railways. And I think this unit is also going to start operations in the year FY27. So typically, I would say that, yes, I think the third quarter numbers were not very encouraging. There was some inventory issue, which the market could not digest initially. But I think as things stand, I would say that at these levels, most of the negatives are priced in. And most importantly, hopefully with the auto sector now doing well, Class 8 trucks also doing well, because this company also has a large exposure in the US, truck market. So typically, I think, again, holding on for the next 12 to 15 months makes it more advisable. There's no need to get panicked because this is a large company. And I think over a period of time, all these negatives would get completely neutralized. But I think you need to give in 12 to 15 months and continue to hold.
Because of you, Avinash, the next question that's coming in is from Ram from Hyderabad, and he's holding, shares of Camlin 5. Sorry, this one I'll take with Avinash, but this one is on Aarti Industries, bought at 380 rupees per share. He's saying that the India-US trade deal is now done, and that's reflective on the stock price, up almost 15% as we speak. And ask if he can book profits right now. So I'm guessing he's bought it since quite some time. He's not mentioned when did he buy it, but he's asking if he should book profits or hold for 2026. Let me come to Akshay. Akshay, firstly, thank you for patiently waiting by. We're getting a lot of long-term queries today. But in terms of Aarti Industries, do you think that it warrants to be held on for another year? Because the last 5 years have been quite torrid for investors. Would you recommend him to hold?
Yeah, firstly, good afternoon to all. Yes, I think right now the momentum is kicking in the stock. The stock has been in a downtrend. There are signals on the charts that 350 is possibly the level where the stock is setting up its base before it launches yet again for an upside. So right now, as a technical trader, the key levels you need to keep in mind is the short-term view is positive. 480, 490 is the immediate hurdle or target one, which you can possibly estimate in a time horizon of 1.5 to 2 months. But from a longer term horizon, 500 is an important level. Once it takes off, you can look forward for targets till around 625. So longer term investor, hold for targets of 625. Short term trader, 1.5 month, your target is around 480. In both the trades, the stop loss which you need to maintain is around 340.
Got it, Avinash. Got it, Akshay. But Avinash, also your one quick view on Aarti Industries, because it's arguably one of the key stocks of the day. Based on the last 5 years has not been good for investors. Would you suggest to wait by, listen to what Q3 and Q4 is about the company?
Yeah, I think better to hold, Puneet, because chemical sector is turning around, and I think to a large extent, I think they also had a large exposure to the US market, and the company is into a heavy capital expansion phase. So I think probably the markets would be looking for some operating leverage to kick in, because once this new asset block becomes operational and hopefully the export market stabilize, then I think the market is expecting a very strong growth for FY27. I think fourth quarter will be important. I think we'll get to know the management commentary, but I think overall the damage earlier which was done is now more or less discounted in the price. And of course today being a day when this US trade deal has been announced, I think the stock has shot up. But I think maybe at lower levels, one could even think of buying the stock. It's moved up very fast. I think the investors who have already had it can definitely hold on. I think time frame needs to be at least 12 to 18 months to get the full benefit of the operating leverage which is expected ahead.
Got the view, Avinash, but another query that we're getting is on Camlin Fine Science, and this is from Sriram Raghuraman. He's holding 50 shares at 132 rupees. It's been another stock that's gotten that benefit. No, this is the wrong stock. Let's put Camlin Fine and Sciences, and stocks up in upper circuit today at 168. So definitely another big winner there. He's asking if he should continue to hold and asking for a fundamental view on the stock. So Avinash, on Camlin Fine, I'm not very well about what is their direct UX exposure. Maybe you can help us with that, but should he continue to hold?
I think Camlin Fine is into specialty chemical segment, and I think for them this US trade deal is definitely looking positive because large part of their exports come from the European and the US markets, and I think some clarity on this has given a kind of a boost to the stock. Even the third quarter numbers have been quite good. The management commentary has also been quite positive. So I think net, I think it looks that next year is going to be a much better year. So I think, the investor who has bought in at 132, the current price is about 165, 168. I think he should hold on. I think he should not exit immediately. We'll like to see how the fourth quarter pans out. But hopefully if things stabilize properly, then I think a further risk reward can definitely be possible. So I think it's better to hold rather than, selling out now.
Okay, all right. So that's the view coming in on Camlin Fine. But we've got our next caller. Happy is calling us from Delhi. Happy, hi, a very good morning to you. I believe the markets are also happy today. But pun intended. But
good afternoon, ma'am.
Good
thank you
afternoon.
for taking my call.
Yeah, our pleasure.
Ma'am,
Go ahead.
I would like to know, I just bought 120 quantity of Varun beverages because they posted an hour ago their Q3 profit rise of 33%.
Correct.
So from then I have seen this 2% fall. Should I continue to hold it or should I add more to average it or sell it because you can see more downside?
Got it. When you bought this, Happy, was it the fundamentals that you saw?
Fundamentals was not that good. I just bought it for a swing perspective that I'd hold it for 2 to 3 months.
Okay, got it. Happy. I'll take this up with Akshay then. Akshay, overall, if you take a look at the numbers, they're not as bad, right? It's been a good quarter, and this is despite of the seasonal, pressure that the company has seen because of extended monsoons, extended winters, etc. We've seen good volume growth coming in both in terms of domestic as well as international front. But with regards to where charts are concerned, do you think that Happy should continue to hold his position? He's sitting on a mere loss of around 1,000 rupees.
Yeah, so clearly, if you look at the post reaction to the news, I think there has been negative 2% downtick as I see right now. So clearly, the results are not taken in a good way as of now. What is important on the technical charts is the level of 430. This support has been respected time and again in the last 3 to 4 months. So there is where the important level lies. I would suggest not to buy or average more because the momentum clearly is on the negative side and the prices are signaling that the stock might test or try to breach 430. So hold as of now because supports are not broken as of yet. Maintain a strict stop loss of 420, and in case there is some recovery, then the best case scenario on technical charts is possibly the target of 490 to 500, which can be achieved still in a time horizon of 15 to 20 trading sessions.
Got the view, Akshay, and definitely, I think that might be the fastest query, right? He saw the results, bought it, immediately we were there to answer his query. So hopefully Happy, gets his response to that. I'm not going to try.
That makes you happy.
I'm not going to try on doing that. But overall, it's time to dive into, and definitely watch our investors for the stock. The earnings con calls at 2:30, and Mahima will definitely be listening to that. But time to dive into the BSE F&O market setup and the queue shaping up in trade today. Let's bring in Sharad for a quick snapshot.
Well, thanks a lot for that. And yes, markets are happy as well. Looking at the overall turnovers, they are showing strength, and almost it's a basket buying happening across the segment. Adani group of stocks doing really well. Adani Ports coming out with its numbers also. Reliance, SBI, all of them above the 3% mark. There's not a single red in the screen. Also, the same thing goes for BankX also. Both of BankX and Sensex had a strong gap up opening, and after that, we saw some kind of moderation coming in, and definitely there was an options data suggesting that this could remain, in a range bound. And throughout the day, it has remained range bound. You could say after the growth coming in for both BankX as well as Sensex. Stock specific moves also is very much important. Largely export oriented benefits which are coming in from the US India trade deal completion. Wari Energies and Adani Enterprises at the top of the pack. Both of the stocks nearly more than 10% up. Also, looking at the short covering candidates, Adani Group and Premier Energies make it looks like almost the same thing which we did earlier. Long unwinding candidates, they include, if you could put this thing, Blue Star. There's only one stock as the market is so strong right now. The amount of gainers you see is more than 90% in the F&O space as well. Nevertheless, short build-up is there, both of them on the earnings impact. PB Fintech, however, Street is concerned on their expansion plans, the capital raising and investment plans abroad. And Varun Beverage, we just discussed right now, that stock is also down 4% as the overall PAT numbers missed their estimates. So these are the important stocks buzzing in the F&O space.
Thank you for that, Sharad. And Bajaj Finance, also one key stock that you have to keep on your radar. Results come in today. And given the backdrop, might be a very interesting one. But the next query is on Blue Jet Healthcare. And Usha is writing into us for this query. She's holding shares at 783, so currently sitting on a loss. Asking if there could be any prospects from the India-US trade deal that could boost the company's fundamental performance. Avinash, on Blue Jet, it's been a counter that's hurt a lot of investors. Should Usha continue to hold? Would you recommend averaging down also, since it's corrected quite a bit from a buying price?
Yeah, I think the company has a very robust business model, a very strong management team, and I think the area in which they operate, a CDMO space, I think is growing quite rapidly. And I think with the US-India trade deal out now, clearly favoring India and obviously export players, it would definitely benefit Blue Jet. The company has a very strong kind of a business model, and I don't think any further downside at least is expected. But overall, I think if the investor can stay invested for the next 12-18 months, then I think it's a good stock to accumulate. I think the company should do significantly better in FY27. So I think despite the fact that the investor has purchased at a higher level, I would suggest that he should average at the current level and take the benefit of the current price and stay invested for the next 12 to 18 months. That better prospects are going to be forward for the next financial year.
Okay, all right. So that's the view coming in on Blue Jet Healthcare. But viewers, it's time for our rapid fire round. Avinash as well as Akshay, you both know the drill, so try to keep your answers as short as possible. The first question that we have is with regards to Indian hotels. Tej from Ireland is asking this question, wants to know if this is the right time to make a fresh entry into IHCL. Akshay, would you recommend that?
No, it is still negative.
NMDC for the next 3 years. Avinash, would you recommend buying right now?
Yeah, I think you can start nibbling into counter at the current time.
Okay, the next question is on Canara Bank. Jagdish from Visakhapatnam is holding 8,000 shares at the levels of 148. He's a short-term trader. What should he do, Akshay?
Continue to hold. 135 is the stop loss. 170 can be your positional targets.
Vaibhav Global held at 799 by Sridhar. Akshay, he's asking a short to medium term target.
Vaibhav Global, the short-term upside target can be 280. Medium-term target is subject to breakout about 280. In that case, the target should be 325.
Okay, Artemis Medicare is the next one. Harijit from Mohali is asking this question. He wants to know if you can continue to hold this counter for the next 6 to 8 months. His buying price is 248. Akshay, your view?
No, better to exit.
Pino Payment bought at 294, Akshay, by Shankar. He's asking a short-term target on this one.
Fino Payment, I think I'm not getting this on my... Okay, I got it. Fino Payment Bank, see, I think it's negative. It's better to exit. The best case scenario is 225.
Okay, the next one is on SPI. Gautam from USA wants to know if it makes sense to make an entry right now from a long-term perspective. And Avinash, your view?
Yeah, I think you should definitely add, slowly, but definitely it should be an addition in the portfolio.
Piramal Pharma is the other counter, and our viewer Preeti from Bangalore is actually holding shares at 188. Let's pull up that counter. she's asking if she should wait and continue for the next 6 months. So it's currently at a loss. Akshay, what would you recommend?
Avoid. It is still negative on technical charts.
Okay, Excite Industries is the next one. Venkatesh is holding at an average price of 400. Can he average more from long-term perspective? Avinash, your view?
Yeah, I think he should hold on. I think looking at the buoyancy in the automotive sector, I think this definitely should move up. In fact, we can even average at current levels.
The company also held its conference call today. Some weak commentary on telecom, but expecting better performance in the domestic business. The next one, CG Power, bought at 715 by Mahalakshmi. Avinash, what should she do?
I think continue to hold on. Here, the bigger trigger will be the semiconductor business. You know, that is going to be the focus area going forward.
Okay, the next one is on Suzlon or ITC or Geo Finance. Which one should I buy from a 2-year perspective for better returns? Avinash, your view?
I think ITC has been beaten down very badly. I think most of the negatives are in the price, and I think it's a business which is going to grow despite restrictions. So ITC could be, possibly be bought at the current time.
Geo Financial bought at 356. Akshay, should she continue to hold?
No, better to take an exit around 275.
Got it. Well, Akshay as well as Avinash, thank you so much for helping us solve all these stock related queries. Appreciate your time here on the channel. But time for a very short break, viewers. The next half an hour, a lot more stock related queries. Do stay tuned.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। देखे होंगे
Rajesh, the next question that's coming in is on Dixon Tech. Now again a stock that's up and about in trade today. Largely you could say some of the trade deal impact, its biggest client in the phone space, Motorola, also does use it for exports, but he's asking a short-term view and this is coming in from Sunita. Rajesh, on Dixon Tech, lot of correction from the highs. Should she continue?
Of weekly formation we are seeing, it's like a morning star pattern. So as of now there is a strong reversal in place. Hold on to it, can add also on the downside 10,200 or you can say 10,000 is the immediate support. The stock can expect a bounce back towards 12,500 levels. So overall a reversal candidate, so can add on to it.
Okay, all right. So that's the view coming in on Dixon Tech. We've got Ramesh calling us from Andhra Pradesh. Ramesh, hi. A very good afternoon to you. I believe you have a question on KP Energy.
Yes, ma'am.
Go ahead, ask your question.
I'm holding 200 shares, madam. Average price is 380 rupees. Should I accumulate more and do average? I can invest it for 3 to 5 years, sir. Even though it posted some more good results, sir, but the stock is correcting.
Okay.
So what should I do now? Should I add here 50% of it? I currently invested 1 more lakh in this stock. I wait or invested about 30,000 at the current price.
All right. Okay, got your question. I'll take this up with Prashant. Prashant, it's a fairly small company, 1,900 crore market cap, but part of the KP group. Do you have a view at all on this one?
I think yes. With respect to fundamentals, I think the valuation looks very much attractive with a very low valuation of 12p and price to book value of almost like 4. The ratios are very attractive. This is not in my research universe to have a fundamental outlook, but again, considering the industry which is into infrastructure, energy, development and all, I think the long-term outlook is really good, but there is some kind of risk associated with the short-term outlook.
Okay, all right. So that's the view coming in on KP Energy. But you know what? Adani Defence and Aerospace today announced the signing of a memorandum of understanding with Leonardo, which is an Italian global company in aerospace, defence and security. This basically is to develop, manufacture and sustain a helicopter manufacturing ecosystem in India. On the sidelines of the event, my colleague Danish spoke to Jeet Adani, director of Adani Defence. Let's listen in.
You know, for the group, it's a reaffirmation to the commitment of being being an important player in the overall aviation ecosystem. You know, not just across service or airports, but also was manufacturing. And we want to give an end-to-end service to our clients across airlines, across armed forces, and be able to, serve the country better and create more economics for the people of the country.
That was my colleague Danish, of course, getting us that key perspective. And viewer standard disclaimer, the channel that you're watching is part of the Adani Group. And so was Adani Defence, of course. This is on PG Electroplast. A key stock yet again, a lot of investor interest in this one. Hitesh from Mumbai is holding 35 shares at 519 and he's asking basically that even on such a good day, why is the stock down and out? Now actually it was up and about in the start of the trading session, has seen some correction, but Prashant, on this counter, while the Q3 results were quite strong, we are waiting the management commentary in the con call, but would you be a buyer right now, and what would you be watching out for?
Waiting and watching out for the management guidance, the way how they are going to take it forward for the next 1 year, 12 months from the current levels. The valuations are still expensive at this point of time, trading at a 60p and 6.5 to book valuation. So such kind of company with respect to electronic manufacturing services, still we need a lot of support from the government. Even in the budget, there was some kind of allocation done for EMS as a segment. So for me, as a long term, I'm very much bullish, but short term, I think valuation correction can come with respect to their earning growth versus the price growth which recently has happened. But I need to wait and watch and take a best call. But time being, hold for long term.
Got that view, Prashant. But next caller coming from Hyderabad, Madhvi is dialing in for a stock query. Madhvi, good afternoon. Welcome to Ask Profit. What's your query?
Good afternoon. So I'm holding GK Energy at the rate of 152 rupees. 200 shares I'm holding. The stock went up to 239 and again it came back, it's fallen sharply. So I would like to know the near-term price point, and is there any negative news in this company, or fundamentally I would like to understand how this company is.
Good, Madhvi. We don't discuss this stock too often, but let me just try it. Prashant, by any chance, do you track this counter, GK Energy? Currently trading at 103, and it is a recent listing as well. So I don't think we can get a technical view, but by any chance, do you track this counter?
No, I think because of the limited data, it's very difficult to have kind of very long-term outlook on this. But considering the 3-4 quarterly earnings, I think this is a decent company right now. What went wrong? I think one should go and do some detailed research on this company. But time being, it's some kind of high-risk, high-return category stock.
Got it. So hopefully that does help you, Madhvi, in this on this particular counter. But another one that we're getting a stock query on is on PB Fintech actually. Now this counter is down and out today as well. And our viewer actually Lalita from Bengaluru, who is a regular viewer, bought it at 1920. So she's asking on this particular counter if she should continue to hold buy, or if she should continue to hold her shares. What's your view, Prashant? Again, a counter that's not cheap but is seen.
Again, valuation is a concern for me at this point of time. 100 plus price to book valuation 10 times, and the earning growths are very much limited. So I need to have some kind of exponential earning growth which can help me to justify this kind of valuations, which is missing at this point of time. So if she's asking for an advice, I think it's the right time to exit at this point of time.
Okay, all right. So that's the view coming in on PB Fintech. We've got our next caller. Sanjay is calling us from Mysuru. Sanjay, hi. Very good afternoon to you. How can we help you?
Hi, good afternoon, ma'am.
Good afternoon. Go ahead with your query.
KPIT Technology in right time to in 3 lakhs investment short term, ma'am.
Short term. Okay, you want to invest, right? So I'll take this up with Rajesh then. Rajesh, before I go on to Rajesh, actually, Sanjay, how much would this be as a percentage of your portfolio?
Performance from I don't see any major strength in this counter. Yeah, definitely some kind of bounce back can be expected. So can add a small bit of position. The stock can move back towards its 200 DMA towards 1200 levels. So can add a small position with a stop loss of around 940 levels. But the immediate target would be around 1200 only.
Got the view, Rajesh. The next question that we're getting is on Aether Industries. Now, this is of course the chemical maker. And our viewer Ramesh is actually asking what he should do with this counter. He's holding it at 801, bought 100 shares. So he is in a profit. Prashant, on this counter, what should Ramesh do?
Very positive on the specialty chemicals deal with India and US. I think chemical industry will get a lot of boost, and the industry was expecting with respect to volume degrowth because of the a high tariff. I think that will be very, very beneficial for a specialty chemical, and obviously I think there will be like 15-20% of exposure to the US, which will be now a high visibility, and there can be higher margin expected going forward. I think that was the reason why the stock has really outperformed from November to till date, but today due to some kind of market reaction and profit booking attempt, the stock is down, but continue to hold. I think even valuations are justified in the way the company is delivering the earning growth.
Okay, all right. So that's the view coming in on Aether. The next question that we have is on IEX, and this is from Joseph, who's writing us from Kochi, asking about this counter from a short-term perspective. Is bought at the levels of 135 and 2,500 is the quantity. Rajesh, your view?
So the counter is in oversold zone and some kind of support is there. So today also we are seeing some bullish formation. So in the near term we can expect a move towards 135 to 138, but the overall chart structure remains weak. So I wouldn't suggest him to hold for a long. As of now, hold for a levels of around 138, 140, but around those levels, try to exit your positions.
Got the view, Rajesh. But another caller coming in from Bengaluru. Anurag is dialing for a stock query. Anurag, good afternoon. Welcome to Ask Profit. What's your query?
Thank you. Good afternoon. This is Arunab Singh here. My query is regarding TTK Prestige. I bought 10 shares at 1,028 from December 2021.
Okay.
So I wanted to know what should I do with those shares because I'm in a loss at the moment. And it has been consistently down till it hasn't reached my level yet.
Yeah.
So can you please advise what should I do with those shares? Should I sell them? Should I hold them? Or is there any other advice that I can be given?
Got it, Anurag. Well, let me take first of, because you've been holding it for the last almost 5 years now. So let me take a view from Prashant. Prashant, on TTA Prestige, is it that there is a chance of it coming back to where Anurag has bought it, almost 1,000 odd rupees, or what would you recommend? Is it advisable to probably buy right now, average out, or should he just continue to hold it, and what would you recommend?
I think it's a better way to exit this point of time, and I think the price of what he has bought would be difficult for me to ever analyze to double from the current levels, considering the high competition, the way TTK Prestige is into. So if he would like to take a risk and hold it for some time, I think 600, 650 can be a level where can we see some kind of bounce again. There should be some kind of earning growth which should be better than expected in terms of street expectations, but looks very difficult with respect to the high competitive business. So for me, it's a clear exit at this point of time. If you want to take risk, I think short term you can take at least for 600, 650 levels.
Okay, all right. So that's the view coming in on TTK Prestige. We've got our next caller. Ravana is calling us from Kochi. Ravana, hi. A very good afternoon to you. I believe you have a query on Suzlon.
Yeah, good afternoon. This is Ravana. Actually, I'm holding Suzlon Energy 7,000 shares at the price of 8 rupees. Could you please advise, shall I hold this stock or shall I average it? Because it went 86, then it came down to 45.
Okay, first of all, Ramana, I mean, really appreciate that you spotted the counter at that price point and you've been a patient investor and you've continued to hold it and sitting on profits of around 2.8 lakh rupees. Prashant, I'll come to you with this question. Is it time to book partial profits? What would you recommend?
I think yes, book some partial profits and look for some higher gains up to 55 rupees in the very short medium term. So 55 can be another level where he can again have some kind of additional partial booking profit at those levels, and rest 50% he can hold it for the level where it has earlier went in last year, like 70, 75. So overall, the story of the wind energy still looks good. Government needs such kind of alternative energies which can be support their demand and supply. But obviously, yes, due to some global issues and due to some kind of export opportunities which are under pressure due to this tariff war. So I think that was a clear indication of downside. But now I think the uncertainty is very clear and the visibility of the long-term growth is still open. So, but yes, there should be some kind of partial booking profit at this point of time.
Got you, Prashant. But viewers, time for the rapid fire round on this edition of Fast Profit. Prashant as well as Rajesh, keep your answers on buy, sell and hold so that we can take as many queries as possible in the next 3 minutes. This one's on AU Small Finance Bank. Vignesh is asking that if he should continue holding his 63 shares, Prashant. He's bought it at 706.
I think book profits.
Okay, Vedanta is the next one. 2,000 shares bought at the level of 290. Should I hold or sell? Rajesh, your view?
Book profits.
The next one is on ICICI AMC. Actually, Rajesh, let me take this question with Prashant because he wants to enter this particular counter. He wants to invest 2 lakh rupees. Should he do that or buy HDFC AMC instead?
Both stocks at the same time.
Okay, the next one is from China, who's writing us from Andhra Pradesh, asking about the best NBFC stock that she can go ahead and invest into for the next 3 years. Prashant, your pick?
I think Bajaj Finance should be the one stock one should focus
on. Godfrey Phillips bought at 3109 and she's currently sitting on a loss because of the increases. So Prashant, should she continue to hold?
I think exit should be the best option.
Okay, Rajesh Exports is the next one. Charan from Bengaluru has bought at the levels of 408. 318 is the quantity. Rajesh, should he continue to hold?
I think exit should be the best option.
Okay, Rajesh Exports is the next one. Charan from Bengaluru has bought at the levels of 408. 318 is the quantity. Rajesh, should he continue to hold?
Hold for a bounce back, expecting somewhere around 300 levels.
IDBI bought at 115. Rajesh, should she continue to hold for the next few months?
I didn't get the symbols.
IDBI Bank.
Yeah, definitely hold on to it.
Okay, the next one is Hoodco. The viewer has been holding it and wants to know if you can continue to hold it for the next 15 odd months. Prashant, your view?
Yes.
Aether Industries, we did take a fundamental view, but Rajesh, is a good time to buy into this counter right now is what Shrikant is asking.
Yeah, can buy. We are expecting to move back towards strong upside is expected, so we can add on to it.
Econ International is the next one. From a short to medium term perspective, exit or hold? Richa is asking this question. Rajesh, your view?
Yes, hold on to it.
Action Construction Equipment, Prashant, the results are due today. Our viewer actually, Kamlesh, has bought it at 958. Can you recommend him to continue holding and anything he needs to watch out for from the results?
I think yes, continue to hold. I think there should be a good upside up to 1,000.
The next one is on LG Electronics. Naveen from Hyderabad is holding 39 shares. Wants to know if it can continue to hold from a short-term perspective. Not enough data on the charts, but Prashant, your view?
Yes, hold on for short term to 600 target.
Devyani bought at 191, Prashant, by our viewer Mohan. Should he continue to hold?
No, exit.
Okay, Genus Power is the next one. Prajwal Gowda wants to know if you can continue to hold this from long-term perspective. Prashant, your view?
Hold on for long time.
Dr. Bharat from Iluru is asking if you should. What is the future of endurance tech? I think he wants to enter this counter. Prashant, what would you recommend?
Long term, yes, buy at this point of time.
Office Solutions is the next one. Siva from Hyderabad wants to know if you can continue to hold this from a short-term perspective. Rajesh, your view?
I'm not tracking this counter.
Okay, all right. So that's. But quickly, Prashant, your view on this one? Office Solutions?
I think just continue to hold.
All right, okay. So that's the view coming in on Office Solutions. But Prashant as well as Rajesh, thank you for helping us answer all those queries. With that, viewers, completely out of time on this afternoon edition of Ask Profit. But do stay tuned. India Market Close up next.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real news, tech that you can actually use.
Social Your Tech Show.
Is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide, and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या?
It may not be the 1,000+ point gain that the initial open had suggested, but you'll take it. Close to 700 point gain for the Nifty 50, and we're holding around this mark. This is India market close. My name is Alex Matthew. With me is Sharad Dubey and Hiral Dadia, and we'll take you through the next 1 hour of trade. What a day it's been for the Indian equity markets and for the bulls and for the long-term equity holders in India. Let's take a look at the heat map for the Nifty 50. And all of this is on account of the trade deal being signed between India and the US. Adani Enterprises, Adani Ports, the top gainers on the Nifty 50, a host of financial names up and about. Remember, this is not just the external facing companies and sectors that are set to benefit. You will also have allied sectors that benefit. So to that extent, one can assume that Bajaj Finance, Shriram Finance will also benefit. Indigo, a bunch of these stocks. In fact, the only stock in the red and just about in the red is Nestle. Most stocks trading in the green. And you know what? The broader markets also are telling a similar story where you have close to 3% or thereabouts gains for the mid-cap index, around the same mark for the small-cap index as well, 3% or thereabouts. And as a result of all of that, the advanced decline ratio and the market breadth will be a very pretty picture. 56 is the number at the bottom, and it's more or less at the widest point of the day today. But there is only one story. It's not about individual stocks today. It is about the story of India and US signing a trade deal that's been in the works for some time. Hiral, what are you seeing on the sectoral front?
It's very interesting, Alex, because today the question was whether we should have a sector of the day, a stock of the day, a bull versus bear, but I think nothing holds water at this hour on the back of the father of all deals and the mother of all deals that have been signed in the last couple of days. Let's just quickly pull up the sectoral indices. Everything that you see on your screen is in the green. Gains are in that range of 2.5-3% from the auto pack to real estate, which is up really 5%. So that's the kind of, range that you're seeing in terms of individual sectors as well. There's not a single sector which is taking a beating. If you see in terms of individual counters, names like Wellspun Living, 19% up move, Apar Industries, KPR Mills, Aarti Industries, PCBL, LT Foods, LG Equipment, Trident, all of these are up in that range of almost 12 to 19 to 20% in trade. What's losing out? A PB Fintech. Now, the earnings have been spectacular for this number. Fundraising plan for a inorganic growth, an acquisition. I think that's what the street is not taking in the positive stride, and that's the reason why you're seeing pressure there. Aegis Vopak trading under pressure. Varun Beverages also down in trade on the back of the set of numbers that have been reported in the third quarter. The expectation itself was weak, and that Soumit Satkar had got to us in our cover as well, that there are sell flows coming in on the HNI desk on the back of an expectation of a weak Q3, and that's what has come in there. Chennai Petro, Intellect Design, Global Health, Avaz, a few of the other names which are seeing some bit of pressure in today's session. But the overall mood, absolutely positive. The question from here on is going to be how. I'm very excited, in fact, Sharad, with regards to what the FIs are going to do today. And that's the conversation, and that's that number that I'm waiting out for.
Yeah, that 88 number was there. It was unchanged for last 3 trading sessions. But hopefully, we can get that, in a lower numbers as well. But it's a Dhurandhar deal. That's what Tamanna has coined it. And interesting it is. But the only people who haven't made money are going to be the call writers. And really, they have taken to the cleaners. But how the market is shaping up, and you must be wondering that the market was a very significant gap up. And why is it not holding up? There's a reason for it. Today is the Nifty expiry is there. And that's why there is larger up moves are being limited. And largely, we might see some fresh positions tomorrow as well. So that's something which the street is very bullish on traders, especially the options data is suggesting a positive momentum, but do not expect a big move in the last 60 minutes. Or kind of a profit booking might come in, but it's a very less chance. India VIX is down 5%. That's another reason for that bigger moves not coming in. It's near the 13 levels. Short covering likely across the large caps. That's something which you'll be looking at the FNO data for. The delivery base buying is something which the street is bullish on. Rupee has strengthening, and it's keeping on strengthening. Some RBI interventions are also coming forward. Bond yields are dipping, and the broader indices, Alex also pointed out, 10:1 ratio in the favor of the bulls, the SMIDs, the small caps and the mid caps. That's where the action is coming. So overall, it is very strong. The Nifty all-time high levels, it's near that levels. We are, especially in the opening, the 26,373. The key support, of course, I'm talking about the larger ones. It's in the 25,000 range. Then in the short-term one, this goes up. Nifty Bank all-time high levels. That also comes in at roughly 61,764. So overall, the setup looks good for the market, but some follow-on buying might come after the Nifty expiry also goes.
That's what we should be watching out for. Thank you, Sharad, for that. That following buying is something which is absolutely crucial from here on. But as Sharad mentioned that this is a Dhurandhar deal which has been sealed, and the Lal Street has been sharing it as well. What is that sectoral impact for a bunch of sectors? Let's listen into the word coming in from the likes of a Bharat Forge to a Pearl Global to a Aarti Industries as well as Keytex Garments.
If you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, But India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context, in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity, and it takes away any overhang that one may have.
Who are importing from India, we are subject to pay this additional 25% of penalty tariff. For competition who are mainly in 19 to 20% range, we will a reciprocal tariff of 25%. So that will give almost a different tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports or I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on now, this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
This was something that the industry long awaited, and it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
So how quickly can the rain clouds shift away and the sun come through? Well, you heard from the managements of all of these companies that are external facing, and they seem to be saying or singing, "Here comes the sun." Let's go across to Kunal Rambia just to find out what key levels you should watch out for on the key indices that we're tracking today. Kunal, good afternoon rather to you, and thanks so much for taking the time. What Sharath was pointing out just a short while back, you have the Nifty expiry playing through. Is that what is keeping us curtailed at this point?
Good afternoon, Alex, and thanks for having me on the show. So yes, as far as Nifty is concerned, yes, today is the expiry, and we witnessed such a big announcement coming overnight, right before the expiry day itself. And today being an expiry, it's obviously difficult for the Nifty to show us the new highs and sustain at that level. And the level where we actually halted was the level which we witnessed during the beginning of December, which was 26,350. Similar high was seen somewhere on 5th Jan, 26,350, and today's high is almost at the same level. So the key levels to watch out will be 26,350 on the upper side, which will act as a strong resistance for the time to come. At the same time, since witnessing strong support at 25,575, I think that's the level to watch out as a support for now. This range-bound movement is likely to continue for next 10 to 15 days before we see a new rally coming in.
And Kunal, what about your picks here? This market, anything you're touching, that's going up in the trade, export, and literally Nifty 50, 49 constituents are in the green. Will be difficult to pick, but for a trading or a positional point of view, if what would be your two technical picks?
See, Sharad, again, going a bit, defensive. So as far as the announcement is concerned, but the counter which I like the most at this point in time, and which we are discussing on our channel since 15-20 days, is MRPL. Again, this counter is right now trading at 179, 180. I think this counter has the potential to show us the levels of 225, 230. So with the stop of 170, one can certainly initiate a buy on MRPL. The second counter which I like again the most, but is Advanced Agro Life. Now this counter is in the range of 120 to 135. Today it made a high of 132. Right now it's trading at 129. So I think with the stop of 120, this counter can also be looked into from the short-term to mid-term perspective. The counter name is Advanced Agro Life.
Okay, Advanced Agro Life is what you're watching out for. Let me also get in Sunny Agarwal. Sunny, welcome to the show. Always a pleasure to speak to you. We're talking of a Dhurandhar deal that has been signed. Multiple sectors that are seeing, maximum gains in today's session. Some locked in upper circuits, so I think investors don't have an opportunity to even look at it to enter. But from a fundamental perspective, if you have to look at textiles, if you have to look at, seafood exports or auto hank, which is the best bet that you have, which, in which a stock has been beaten down, valuations are also reasonable, and the opportunities come their way now?
Good afternoon, Hiral, and thanks for having me on the show. I think, definitely today we have seen a very good recovery in textile and seafood related companies. But what I feel is that since we are talking about the sector which is beaten down, where we feel that earnings continue to look better going forward, auto ancillary seems to be relatively well placed. So In fact, during our budget report also, we recommended Belrise Industry as one of the stock to buy post-budget. So I think auto ants, so all the companies which are supplying products to two-wheeler passenger vehicle segment, as well as tractor segment, those all companies we feel will continue to deliver a healthy earning growth for, going forward. A case in point, SGS Enterprises have reported a very good set of numbers. Precall has reported a very good set of number. Lumax, which predominantly supplies product to Mahindra and Mahindra, continue to look pretty good. Swaraj Engine, we feel again a subsidiary of Mahindra and Mahindra, where although the December quarter was slightly muted in terms of earning growth, but we feel the valuations are pretty reasonable. VSC Tiller again has reported a very strong set of volume growth even for the month of Jan. So we feel VST dealer post corrections look attractive. So I think auto is a sweet spot to be in. Obviously driven by domestic demand and at the same time pushed by global OEMs to make India as an export hub. So obviously road trigger as far as all these auto companies are concerned.
Okay. All right. So we've talked about a bunch of these stocks. Let me ask about the metal plays, because Kunal, in the recent past, the kind of volatility that you've seen in the underlying commodities has resulted in this entire basket going through a state of flux. So if you are Braveheart and if you would like to trade these, then what is the advice that you would have?
See, again, Alex, to have the brave heart, it's very important to actually, ride the rally. I mean, as far as Hindustan Copper is concerned, I think we saw the first breakout somewhere near to 375. Now, if you end up buying somewhere at 700 levels, then obviously it's going to be a scary time, right? But at the same time, what I advise to all our viewers on the regular base, on the regular discussion of ours is keep trailing the stop losses and take the opportunity during such panic situations to add the positions. Now, just let's take an example of Hindustan Copper, which is trading at 622. I think the good bottom we saw was day before yesterday near to 585. That can be the good level to keep as the stop loss and initiate the new trades. At the same time, if someone is already holding, that should be the trailing stop loss. We are not going to able to capture the top and the bottom, but I think this is the way to play with the metal. Trend is absolutely intact. Stay invested with this sector.
Right. So that's the view on the metal space, where you've seen tremendous pressure, but the rebound took place in the underlying overnight and today, as a result of which you're seeing the basket as a whole do particularly well. But let's focus in on the results space and speak about Chalet Hotels. And we've got Mahima joining in to speak to the management and find out how it was in the outlook going forward as well. Mahima?
Right, so Alex, overall healthy growth in terms of where both revenue and EBITDA growth stood. Hospitality business is where the robust growth is coming in from, and operationally also this quarter looked very strong. Now to understand, more intricacies of how results have been like in Q3 and how Q4 is shaping up, we're joined by Shwetank Singh, MD and CEO of Chalet Hotels, joining us now. Shwetank, my first question to you is with regards to your revenue per available room. That growth largely this quarter has come in from your average room rate increase, but occupancy is seen a slight dipping. Do you expect this trend to continue?
So whichever way you look at, the macros are very heavily in favor of the industry, and so the general macros of the country are brilliant. So what is happening essentially is that growth is coming from all quarters. Not only is the free individual traveler traveling more, because as travel and tourism becomes less discretionary and more a way of life, that means more shorter trips, longer weekends, etc., and therefore occupancy is being boosted across the country in most leisure destinations. The fact that there is an improvement in infrastructure overall, and the recently concluded budget, we saw a 12 lakh crore investment coming into infrastructure, so that should further boost the infrastructure and therefore add to this trend. So that's helpful as well. If we look at the corporate earnings throughout the country, in general, the corporate earnings are an upward trend, and there is a direct correlation between corporate earnings and MICE travel. So that's on the upward trend as well. And socials in India will never go out of fashion. So the big fat Indian wedding stays where it is. So overall, this trend is set to continue. The recent, of course, the clearing up of the trade wars is also very helpful. Because that would mean more international traveler coming through. And India being such a strong economy, India is being discussed in most boardrooms of
companies of any significance. Therefore, that should be a positive overall. So hence, we don't see any slowdown in the trends, and we expect the industry to continue to year on year. And the final fact that is very helpful is that the supply is still behind the demand, and therefore arbitrage is also helpful.
Okay, got it. Shweta, MMR markets, they've seen a good growth of 25%. Again, here it was largely led by our ARR increase, but and this growth is largely led by Bangalore as well as Hyderabad and Pune. Do you see a structural shift here?
No, so MMR has been our mainstay for a long time, and it continues to be a very important part of our portfolio. What's been interesting to note is that we have, for this particular quarter, beaten the larger MMR market quite significantly, and also outperformed most of our competitors in our comp set, despite the market being very challenging, and we having our own challenges with construction going on, especially at Powai. So that's been very interesting to note. The larger MMR region, the beyond the MMR region, what's contributing to the portfolio is also very interesting to note, because it's always been a part of our larger strategy to diversify both geographically as well as between leisure and business segments. So that was a conscious call that the company had taken, and that's beginning to bear its fruit. The south of the country has been very strong for the market as well as for us, and that's coming through. But most importantly, even our leisure destinations are starting to sort of kick up the performance to where it was expected to be. And with Athiva, especially in Khandala, stabilizing, and the additional 130 rooms stabilizing in Bangalore, we expect this growth trend to continue, and for regions beyond MMR to contribute significantly to our portfolio.
Got it. So Shwetang, then as inventory additions accelerate for you, will strategy tilt more towards protecting your occupancy, or will it be towards maximizing your ARR?
So look, this is a difficult question to answer, because typically these trends tend to be in direct correlation to the market that you are in, and more specifically the micro market that you are in. So the market is what dictates this. But at the end of the day, we have to be cognizant that it is the RevPAR that drives revenue, which is a multiplier of occupancy and ADR. And we normally tend to reflect the market, but outbeat the market on that particular metric. Case in point being Bangalore today. If you see, our ADR growth is upward of 25-27%, whereas the rest of the market would be around 18-20%. So that's where we have taken an ADR strategy. But some of our resorts have still not stabilized, and the occupancies are below what we expect them to be. And if one of our resorts is today in the late 40s and we expect it to stabilize at 60-65%, then we will take occupancy route. RevPAR drives revenue.
Okay, Shwetang, got that view. And back to you, Alex, in the studio. I think it's been a good quarter, and that's reflected in the stock as well.
Thanks so much for that, Mahima. Interesting conversation that you had with the management of Chalet Hotels. Let's talk about Adani Enterprises. The results have been declared, and the stock continuing to trade at very close to the high point of the day. Profit number has come through, and this is something that you should watch out for. 5,627 is the net profit that has come through in the quarter, compared with 50 exceptional item. It is a one-time gain on account of the Wilmar sale, right?
That amount is more than 5,500.
So 5,526, I believe, or thereabouts, is what you have gotten, or very close to that mark. Over 5,000 crore is what you've gotten on account of the sale of that stake.
Right. Sunny, I want to get your views on this. Adani Enterprises, a strong set of operational numbers coming in, and today also the stock up almost 11% in the trade. How are you viewing the Adani Enterprises and Adani group of stocks?
Yeah, so coming to Adani Enterprise again, Sharad, I need to delve into what has happened into the various segments. But definitely it seems that if I look into the new businesses, I think the Navi Mumbai airport has turned operational. So that should start contributing, and that would have contributed also during this quarter. So that is something which I look forward to. Again, there wind turbine capacity there, we have seen some expansion that can lead to some addition. I think on infra also we have seen a lot of new projects going on stream. So to be very honest, I need to go through the presentation and let's see which sectors have contributed. But broadly, prima facie looks like, as discussed earlier, stake sale in AWL would have led to an extraordinary gain this time at an console level. But having said that, I think long term, anyway, the view continue to remain constructive as we see many new businesses being incubated in Adani Enterprises, and the value locking is something which may come up in the next 3 to 4 years. So that's definitely can add a lot of shareholder value in medium to long term. Apart from Adani Enterprises, I think Adani Ports and cement business, especially ACC, looks relatively well placed when it comes to cash flow and earning growth potential. Adani Port, in fact, today reported a very good set of numbers, so backed by a very robust volume growth. So Adani Ports continue to remain our top pick among the Adani group. And Cement Pack also have reported muted number during this quarter, but seems that next year will be relatively better, wherein the industry will post volume growth of 6 to 7%, and backed by a shift in power towards the renewable energy that is leading to a cost saving as far as power and fuel cost is concerned. So overall, industry should move forward in terms of EBITDA per ton as we go into FY27. So within Adani Pack, ACC and Ambuja both looks well placed to deliver a healthier earning growth.
Okay. All right. By the way, standard disclaimers here. NDTV Profit is part of the NDTV Group, which is owned by the AMG Media Networks, which is part of the Adani Group. But quite a bit of action in the Adani Group of stocks today. Right. Of course, earlier in the day, Sharad and Hiral, we had Adani Ports results, both the top line as well as the bottom line growing by over 20%. The data coming through on the cargo handling as well, the latest data strong.
That's also very strong.
Double-digit growth,
yes,
right?
12% year on year. So that's a very strong. And a lot of folks where actually the asset-heavy nature is there of Adani Ports. So a lot of bullish calls are coming in the technical space as well.
Let's find out what Kunal Rambia has to say about the list of stocks, because they're all up and about today. Kunal, would you initiate at these levels for any one of these stocks?
See, Alex, honestly speaking, Adani Port has again reached the previous high of 1525, so not really comfortable initiating a fresh position on this. But Adani Enterprise is looking good to me only because this counter has actually held on to the levels of 2100 from May 2023 till January 2026. Recently, last 15-20 days, counter declined below that level, but it has reclaimed that level. So I think the risk-reward ratio is favorable on Adani Enterprise. So with the stop of 2100 or say 2050, one can definitely initiate a buy on this, and the targets can be 2400.
Okay, so that's with regards to where Adani Enterprises goes as well. Now, a couple of stocks that we should be discussing as well. I mean, it's going to be a quick rapid fire that I'm going to take with Kunal Rambia. Kunal, Transrail Lighting, that stock is up nearly 9%. Again, this is on the back of Q3 numbers. They do see some benefits when it comes to the US markets as well. With a 9.5% up move, would you still be a buyer?
No, it's still making a lower top, lower bottom formation. I'll wait for the follow through buying. Otherwise, it's an exit opportunity. Buying above 560 would make sense.
Okay, so that's Transrail Lighting. What about a Varun Beverages? I mean, a sharp downtick on the back of a weak Q3 number is what we've seen. And this is on the back of reduction of purchases of stock in trade. And the finance cost reduction is what has led to a profit beat. But clearly, there is selling pressure. What are charts indicating?
Again, sideways consolidating counter since almost a year. Support is at 440, resistance at 520. If it reaches near 440, we'll have to wait for the consolidation to initiate the buy.
Next one, PB Fintech, QIP announcement coming in, and of course earnings was also there, but street not liking the fundraise or the inorganic opportunity. Mention your views on that, Kunal.
I think, Sharad, this can show us the levels of 1320. So avoid as of now. If someone wants to short, can short with the stop loss 1525.
It's a short candidate, PB Fintech. Sirma SGS, another stock EMS was after budget and a strong numbers also. Kunal, your view?
Sideways consolidating counter, but the uptick was really very strong. Today's high is a strong resistance. Any tick above 870 can be a buy with the target of 925, 930.
Okay, and specifically in the auto ank space, there are quite a few buzzers. Anything that you're spotting that is interesting there?
I'm very comfortable with Tata Motors passenger vehicle actually very closely. I think this uptick which we have seen in the counter can remain for a longer period of time. So with the stop loss of 350, it's a buy, and the targets can be as high as 450 to 475. I'm talking of next 2 to 3 months. So watch out for this counter. It can be a good derivative counter also. Long futures and short strategy can be a good strategy on this.
Okay, but do remember that Ramkrishna Forging, Sona BLW Forge, these are all companies that have exposure to the US market and all of that. We have to slip into a very quick break. We've got more stocks to talk about, and we have to figure where things settle at the end of today's trading session. Do stay tuned for that.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सेज माय स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम।
Welcome back to India Market Close on NDTV Profit. Now, shifting focus slightly from the trade deal. I know all of us don't want to, but we have to. Corona Remedies has reported numbers. Let's quickly pull up that stock and see what the counter is doing in trade, because margins have seen some bit of an expansion. EBITDA is up around 19%. Profits 8.5%, 2.5% up move is what you're seeing in terms of the stock as well. In fact, it's a strong set of numbers. It's mainly the profit number which has seen a mild dip of around 8% coming in there. Bhavin Bhagat, Chief Financial Officer at Corona Remedies, joins in. Bhavin, welcome to the show and always a pleasure to speak to you as well. This is Hiral on this side. My question coming to you is the growth that has come in this time around. What does that tell you for the full year going ahead? And I know you don't have exposure when it comes to the US markets, but Europe is something that you're exploring big time. So with the EU FTA coming in, what's that fillip that you're seeing overall from Q4 to FY27 perspective, taking cues from what you've reported in the third quarter?
Thank you so much, Hiral. First of all, very good afternoon to you. And thank you so much for inviting me over here. I would like to brief you about the numbers, what you mentioned, that what we have given endeavor to the investors at large, that our revenue will grow by 15% and the profit after tax will grow by 20% on a year-on-year basis in coming 3 to 4 years down the line. Now, you asked about the question about the EU GMP approval and the EU Philip, what we are going to have in our kitty. Would like to tell you that yes, our dossiers are being filed. We are in the process of getting the EU approval. But having said that, our domestic business will contribute 96% or 95% in coming year, that is FY27. And having said that, our EU revenues will start after 2 to 3 years down the line.
Okay. So, Bhavin, if you have to look at FY26 and the newly compliant international regions that you're looking at as well, what percentage of your revenues will start coming in from the international market in the fourth quarter, if any, and how much are you targeting in FY27?
So right now, as far as FY26 is concerned, we have targeted almost 4% of our total revenue, which will be coming from the international markets. But if you ask me about FY27, it would be in the line of 4 to 5% of the total revenue will be coming from the international markets. Because as I mentioned, that our real exports will start after 2 to 3 years down the line, because our products and dossiers are in filing stage as far as the EU registration is concerned. And recently, we got an EU approval from the 5 countries, which will open the 25 billion market in coming years down the line for us.
And Bhavin, when it comes to utilizations, your Bhaila plant has received international certifications as well. So what is the current capacity utilization? And are there any further plans when it comes to CAPEX for FY27?
Yes, our current capacity utilization is 95% as far as the Ahmedabad Bhaila plant is concerned. And as far as the additional capacity is concerned, we have already unlocked 40% additional capacity by expanding 600 kg line into it. will further will meet our gap from the revenue side for coming 1 to 2 years down the line.
So good plans coming in there. Lots to watch out for. Thank you, Bhavin, so much for joining in. Always a pleasure to speak to you as well. So that's the management of Corona Remedies highlighting their plans going ahead. And what's led to this growth? The stock also trading at the day's highest levels. Let's also get it. Ajit Mishra, SVP Research at Religare Broking, and we do have Sunny Agarwal. Ajit, welcome to the show, and always a pleasure to speak to you here on the side. Your view when it comes to Corona Remedies, and along with this, you're seeing some benefits coming in for the pharma pack also in today's session. Any topics that you have there?
Yeah, good afternoon, Hiral. So yes, we are seeing recovery across the board, and Corona Remedies recent listing. But as the chart suggests that the consolidation which the stock was currently experiencing, possibly we are set for the next leg of the up move, which could help the stock to inch towards record high zones. So one can continue to stay put. 1430 is what we are seeing as an immediate base. With that as a stop loss, one can continue to hold. Otherwise, in the pharma basket, we are seeing like stock like Divis, Dr. Reddy, wherein we are seeing strength. But at the same time, the momentum is missing here. So in case if somebody is accumulating them, then it's fine. But for the short-term momentum, banking, auto, and select counters from the energy basket is something that one should prefer.
Okay, all right. So those are the stocks that you should watch out for. By the way, we've all been searching for details of this trade deal that has been announced, and NDTV has picked up those details. In fact, Shiv Arur of NDTV has picked up that there will be no compromise on sensitive sectors in agriculture and dairy, which have been protected so far. They will continue to be shielded. Here's that report.
So top government sources have just told NDTV that there will be absolutely zero compromise on the interests of farmers, that the sensitive sectors of dairy and agriculture will continue to be completely protected. Market prices will dictate where India purchases its energy from. Very interestingly, they also tell me that India is committed to purchasing oil from non-sanctioned entities. So that is going to be a very, very big takeaway from the expected statement that's going to come out from the government very shortly, either today or tomorrow. Also, there's been a lot of talk over this $500 billion figure, and my sources explained to me that given how things are currently at about $80 billion in terms of bilateral goods and services trade between the two countries, a 5x or a 6x of that over the next few years will finally translate into the $500 billion figure that Trump just kind of dropped in his initial statement. Obviously, there are still many unanswered questions, but the critical points of farmer interests, agriculture and dairy continuing to be protected, India saying people interests will dictate where it buys its energy and oil from, and that it is open and committed to buying oil from non-sanctioned entities, potentially even Venezuela and elsewhere, make this the very, very big takeaways from what we're expecting to see in the statement. So a little additional understanding as far as the complexion and shape and contours of this trade deal, much more expected in the hours ahead.
Thanks a lot, Shiv, for that. And yes, we will be tracking the more developments coming in the India and US trade deal as well. But speaking about the strength of the deal coming in and the impact on the markets, we caught up with Gautam Duggar, the director and the head of research for institutional equities at Motilal Oswal Financial Services, for the market strategy as India and US sign this trade historic deal. Listen in. Gautam, now the leverage comes back to India. Now what happens? Overall macro picture, what changes now?
Hi, thanks for having me. So India's macro were anyways very resilient. I mean, we have been very strong on the macro front for some time now, growth, inflation, twin deficits, the way government has consolidated on the fiscal front over the last 3 years. Interest rates have come off. So I think macros were anyways very solid. This deal adds to the heft now because this was one missing piece. India was getting singled out on the trade front given the absence of deal with US. Now that in a week's time we've done the deal with both European Union and US, and on the US front we have moved from the most tariff nation to almost the lowest tariff nation. So clearly this removes a big overhang for the markets. not just equity, but also the currency markets, in my view. Second, I would treat this event more as an allocation event for global investors, because the global investors have been underweight on India of late, especially the ones who manage regional money. The kind of underperformance that India has seen in the last 15, 16 months, and the way other markets outperformed us by a margin of 30 to 40%, there was absolutely lack of interest to look at India, given that our earnings had also slowed. So now the picture changes, and it changes for the better, and substantially better, because now we have corporate earnings also coming back. Currency will also stabilize and recover a bit. On top of that, the headwinds because of the deal on both stock market front, economy front, the jobs front, that dissipates. So from that angle, I think this is going to lead to a lot of reallocation in the portfolios, at least at the regional investors' portfolios level.
Yes, so there is going to be a reallocation, but let's ask about the sectors also, especially the export-facing sectors, like textile, auto, ancillaries. Which are the sectors which are going to benefit a lot, and where do you see the risk-reward ratio favorable for the investors to enter now?
So look, purely on account of this trade deal, not many things changes from a bottom-up point of view, because the trade deal has relevance for very few sectors which are smaller in size for the market. So you have textiles, something related to gems and jewelry, something related to auto angs, and some durables and EMS here and there. But none of them are very big and material from a point of view of stock market indices. What, however, changes is the kind of the allocation angle that we just spoke about. Some of the bigger sectors also come into the play now. So financials, which is the most reasonably priced on risk versus reward, and not just banks, even NBFC, even the capital market-oriented names. We are quite positive out there on PSU banks, NBFCs, capital market theme. I think even consumer discretionary, we are very positive out there. We are underweight on consumer staples. In fact, we have a zero weight on consumer staple. Some of the sectors which benefit indirectly from this deal, I would reckon technology will come right up there, where we have changed the stance from underweight to overweight a couple of months back. And then there are a host of bottom-up mid-cap ideas which have been beaten down for one or the other reason. I think wherever you are seeing strong earnings delivery, market is ignoring even the stocks which are delivering good earnings. Now I think the picture can change out there, and you will have plethora of ideas to work with. The 15 months of consolidation has ensured that a lot of froth, even in the mid and small cap indices, has gone away. Not for a moment I'm implying that they are cheap. They're still expensive, with mid cap at 27 PE and small cap index at about 23 PE. But the froth which was there in September 24 and early part of 2025, a lot of that has moderated. So you have enough ideas when you look at portfolio construction from a bottom-up perspective.
Right.
We are overweight on auto. We continue to like auto. What does this deal do insofar as portfolio allocation is concerned is that it removes the overhang and stops the derating which we had seen. In fact, on a relative basis, India has never been more cheaper versus the emerging markets.
That's a pretty interesting take on that, and just the request has come in that the Q3, the street was expecting some earning upgrades to come in from Q3, and largely we have seen a lot of good earnings also getting lost in the sell-off. So will we see that Q3 earnings upgrade coming in, or Q4 some of them will get shifted too?
So look, right now we are seeing the pace of earnings downgrade. That intensity has come off substantially in the last 3 quarters. We had put out a note also to that effect a couple of weeks back, and we are seeing that trend continue in third quarter too. Almost 200 companies out of the 355 that we track have declared their numbers till yesterday, and they are bang in line with our estimates at about 13.5% earnings growth. The interesting nuance out there is large caps, after a very long time, are outperforming the mid caps on earnings versus expectations. Not that mid cap numbers are bad, just that the gap between the large cap and mid cap earnings growth, which is almost 2x for last year and a half. This particular quarter, we are seeing that gap in the growth narrowing in favor of large caps now. And small caps, obviously, they are having a turnaround quarter after 5-6 quarters of earnings decline. But we are still not in earnings upgrade. We are still seeing moderate earnings downgrade. For Nifty, for the 31 companies for which earnings have come in so far, at an aggregate level, we have cut the Nifty earnings estimate by about 0.4-0.5%.
So that's the word coming in terms of Motilal Oswal as well, with regards to what the strategy could be looking like going ahead. Ajit, it's 3:15, and it's going to be interesting with the kind of moves that we've seen today, if there are any BTST, STBT calls for tomorrow.
So, Hiral, we are seeing that stock like Power Grid, Petronet, which are not only holding strong. In fact, in the last couple of sessions, we have seen very strong, buying interest with the volume. So, we expect this resilience to continue. So, for Power Grid, it's currently quoting at 283. So, one can go long even at current levels with 275 as a stop loss and 295, 298 as a target zone. For the Petronet, a similar kind of a structure means almost a 1 year long consolidation phase is ended, and we are set for the next leg of the up move. There could be a bit of a consolidation every now and then, but the overall tone looks positive. So here one can look for positional buying at current levels with 285 as a stop loss, around 320 as a positional targets.
All right. That's important levels to watch out for Petronet LNG. But moving on, Dalal Street has been cheering the landmark India-US deal. But is this momentum likely to sustain? Listen into what market experts had to say about the impact of the deal on the sentiment in the market and the path they are charting out for Dalal Street in the near term.
The balance of payments could look better now. The trade deficit slightly smaller, inflow slightly higher. So on the whole, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive.
This is a celebrating time for all investors and for India as a whole. And it is not only about this US trade deal. It is about the series of events which have happened, including the EU deal, including the budget minus the STT.
This is the best time for even for foreigners to participate in this market. And stocks are mercilessly cheap, जिसको बोलते हैं, especially mid caps and small caps are 40, 50, 60, 70% down. So I think this is the best time for India, and we are again, I think worst is absolutely over. Whatever low index had made in last 3-4 months or whatever, I think that is the final bottom. This is what I feel as of now.
All right, heading back to earnings now, and Adani Ports is gaining in trade after delivering a strong performance in the third quarter. Consolidated revenue soaring as much as 22% on a year-on-year basis. We also spoke about the latest updates on the data front as well, on the cargo handled, and that is looking positive. The EBITDA margins also stood at around very close to that 60% mark. Let's listen into what Whole-Time Director and Chief Executive Officer Ashwini Gupta had to say about the growth and the path ahead for the company.
Hello, and thanks for allowing me to share APSEZ's Q3 FY26 results. As India's largest and world's fastest growing integrated transport utility, APSEZ has once again demonstrated exceptional performance and continues to build on its legacy of creating shareholder value driven by responsible capital allocation, operational efficiency, and elevated customer experience. During the quarter, APSEZ's revenue grew 22%, driven by growth across all business verticals. Logistics and marine business grew 62% and 91% respectively. International operations crossed the rupees 1,000 crore quarterly milestone, and domestic ports grew in mid-teens. YTD FY26, we continued to gain all India cargo market share, including the highest ever container market share at 45.6%. Importantly, we focused on profitable growth. During the quarter, marine and international ports EBITDA more than doubled, and logistics and domestic ports EBITDA grew 26% and 15% respectively. Driven by all-round EBITDA growth, I am delighted to increase the top end of our original FY26 EBITDA guidance by rupees 800 crores. We have a massive focus on capacity expansion. We recently closed the acquisition of the 50 million ton per annum NQXT Australia terminal. We have multiple initiatives underway across our Indian ports, including rupees 16,000 crore Vizhinjam Phase 2 expansion, liquid and container terminal in Mundra, expansion at Dhamra, Ennore, Kattupalli ports, and new Haldia terminal. We are increasing footprint of our asset-light logistics services to cover more trucking routes and higher international freight forwarding volumes, along with expansion in physical logistics network. Marine is another area of focus where we are adding vessels in the Middle East and Africa waters with definitive customer contracts. While pursuing large-scale expansion, we remain focused on responsible capital allocation and balance sheet strength. During 9 months FY26, we generated healthy operating cash and kept our leverage under check to below 2x. Moody's has revised its outlook on APSEZ to stable from negative while reaffirming its ratings. And moreover, Japan Credit Rating Agency assigned A-/stable rating to APSEZ, a notch above India's sovereign rating. APSEZ continues to set the benchmark for operational and sustainability excellence. Mundra became the first Indian port and among few global ports to handle a very large crude carrier that berthed directly at a jetty. APSEZ became India's first integrated transport utility company to adopt the TNFD framework, which is a global benchmark for responsible infrastructure development. Looking forward, we remain firmly on track to achieve 1 billion metric ton of cargo volume and our FY29 targets of 65,500 crores of revenue and 36,500 crore of EBITDA. I take this opportunity to thank our stakeholders for their invaluable contribution to our growth trajectory. Thank you.
So that's the management talking in terms of Adani Ports and the outlook going ahead. But let's pull up our Varun Beverages on the screens as well and see what that counter is doing in trade. And this is on the way the earnings have panned out. If you see overall, the kind of downtick, 2.5%, it did try making a short recovery, but I think completely failed. What they've said in the con call as well is that with favorable monsoon expected, the demand is expected to be better. Double-digit growth in India is not impossible. Calendar year 2026 will have a much better realization in the African markets as well. And growth at 22 to 23% is what they're looking at. If we maintain, they will be very happy. In March, they will be launching Nimbu's Jeera, and India will not undertake any capex this year. But the numbers on the back of Q3 have been weak. Sunny, your view when it comes to Varun Beverages?
Hiral, we continue to remain constructive on the growth potential of Varun Beverages. Predominantly, if you look at calendar year 25 was impacted by extended monsoon, and that has led to a tepid demand for summer product which Varun Beverages cater to. In addition to that, international business continue to scale at a rapid clip, wherein we believe that on a lower base, international business can continue to deliver a healthy growth. So looking forward to an healthy summer season, and that should augur well for Varun Beverages. Anyway, December quarter is a seasonally weaker quarter. So if you go back into history, December quarter is the seasonally weaker quarter and usually deliver a lower sales and EBITDA number as compared to the remaining 3 quarters. So I think any deep for a medium to long term investor is a good opportunity. We feel the fair value of the business is closer to 580-600 rupees if somebody has got an investment horizon of 12 to 18 months.
Vodafone Idea, that stock is up almost 6%. It's above that 11 mark as well. Ajit, I know it's a bit a risky trade and viewers should exercise caution in this counter, but your views on the technical aspect of Vodafone Idea?
So Sharad, yes, we are seeing bit of a stability. Means though the stock is still volatile, like hovering in this 10 to 12.5, 13 range. But of late, we have started seeing bit of a base formation around the short-term averages. So there's a possibility that this time around we might see an attempt of like a breakout about 13 mark and help the stock to inch toward, let's say, 18 to 20 zone. So it's bit ambitious, but yes, this is what the indications are. So in case if somebody is holding longs, they can continue to stay put. 9.5 should be their stop loss for the positional target of 16 to 18 in the near future.
Now, we are winding down to the end of trade and we have gains of 2.5% or thereabouts for the benchmark Nifty 50. There you go, so 2.6% or thereabouts. But really, there's one asset that is eclipsing this move. Not necessarily in percentage terms. It's not very often that a currency moves in this kind of manner. But we've moved from a peak of very close to 92 rupees to the dollar all the way to very close to 90 rupees to the dollar. And it might actually turn out that this is the biggest single day gain for the rupee against the dollar in history. At least till 2013, we verified that. We'll have to circle back and find out if this is the biggest single day gain ever. But it's par for the course based on what you've seen, because a large part of what was putting pressure on the currency on the downside was the lack of a deal with the US and the pressure on trade. Now, with that having resolved, you have once again the ability for exporters to look at the external sector. There's going to be participation by these exporters. The intervention, and this is a follow-on effect on account of this, it gains significant ahead of the RBI monetary policy and the meet with the Reserve Bank of India governor at the end of the week, is that the intervention by the RBI will necessarily have to reduce, or rather they won't have to intervene as much as they've had to in the past, and that will free up space on the liquidity front. That bodes well for the banking system as a whole as well. So all told, these are positive signs. Also, Sharad, Hiral, from the perspective of foreign institutions looking from the outside in, directionally, and we spoke to a currency expert this morning, he was of the opinion that we could well, over a longer period of time, be heading back to 88. So in a situation
That's
where...
a technical level, correct.
Right, so in a situation where a foreign institutional investor who's been either selling or sitting on the sidelines is looking from the outside in, we're at very close to 90, possibility of heading back to 88. The stage is set for more money to be deployed. It is a good opportunity.
Exactly.
A good opportunity. So I think the flows that will be coming in from the FIs, if they have to consider a move from 90 to 88, is going to be slightly gradual. You're not going to see that immediate influx that's happening into the Indian markets, I think. So that's going to be something that will be considered. And secondly, the granularities in terms of the US deal, EU FTA, which has been signed, everything comes into effect only after a year or something. So it's a 12 to 18 month gestation period coming in there as well. So I think the anticipation that yes, in the next 5-6 months, you're going to see that influx. Probably that will not be the situation. It'll be coming in bits and pieces in a very slow and steady mode.
But I think a lot of people will heave a sigh of relief to say that at least this selling will abate.
And not only that, Alex, the short covering, the data which comes in, that might also give us some indication as well how things are panning out in the FI space.
Let's go across to Ajit. Ajit, I'm just taking a chance and asking you this. Do you have a view on the currency at all, and are you looking at those levels?
So Alex, we were the only one who was depreciating against the dollar, because if you see the dollar index, we have seen a very sharp correction, and at the same time we were seeing that rupee was hovering around 92 and inching towards a newer high every passing day. With this correction, definitely it seems like that the overhang related to this deal is also behind us. So there will be a possibility that we'll gradually see that level which you were referring to, around 88. To be tested in the coming weeks. So yes, possibility of further correction seems much higher.
All right. Thank you very much, Ajit and Sunny, for joining with us and giving both technical and fundamental views over the markets and stocks. But coming to the closing, it's been a great start, and also it has maintained the momentum. Nifty and Nifty Bank both showing a strong growth coming in. Nifty comfortably above the 25,700 mark, and on the other hand, Nifty Bank, that has given almost 1,400 points up move coming in. Look at the advanced decline ratio, to see the breadth of how the markets have functioned, and advanced decline ratio is almost 10:1. Let's also point out the stocks in the Nifty index, what has been gaining. Largely export-oriented stocks have been doing well. Adani group of stocks, they are the top gainers also in the index. Adani Enterprises up 10%, Adani Ports up 9%. And you see it's a sea of green here, barring just 3 or 4 names, BEL, Tech Mahindra, SBI Life and Nestle, but nothing much of a concern. Let's look at the sectors where the buying has happened to see where the biggest momentum has been there in the screen. Of course, Realty, that pack has been beaten since last year, but now it's up 5%. Financial services, consumer durables, and you see most of them sectors, or literally all the sectors, are ending in the green today. It's the day of the broader indices as well. Mid caps and small caps, let's have a look, and there's a significant jump coming in Nifty mid cap index. That's up almost 3%, and the small cap index also, having a look, that's also up 3%. So that's a major relief to a lot of portfolios which you will be checking today. Also, apart from this, let's talk about the BSE 500 index, the stocks, how they have been moving, and stock specific moves, but a lot of upper circuits are there. You name it, be it the auto ancillaries, the aquaculture stocks, all of them are up in trade. Look at these numbers. Of course, there are some earnings impact also, but that's not relevant right now in the markets. PB Fintech, one of the top losers in the index, that's down almost 7% in the trade. Aether, some profit booking is happening. Varun Beverages, a little bit of weaker side numbers. So earnings impact is coming in a couple of these counters, but it's the day of gains, a very strong support, and rupee. That's also something I'd like to point out. Rupee has posted its biggest intraday strengthening since the data which we have seen since 2013, and look at that, it's near that 90 mark. This is one of the biggest news flows for the day. The Indian rupee, it has outperformed all the major currencies, all the emerging market currencies. So you should be looking at rupee and the expected FPI flows, and maybe the FI short covering data in the evening. But let's see what to watch out for tomorrow as well as post market hours. India's RBI market borrowing auctions come in. Also, apart from this, we'll be seeing a lot of macro data. These are the interim dividends moving ahead. We see these are the stocks which should be in focus, and earnings, that's where the interest will lie. But there are a couple of board meets as well, Devyani and Metropolis, important corporate actions coming in. 2 stocks, especially Lenskart, you should be focusing on. The lock-in is coming tomorrow. There might be selling pressure in the early part of the trade. Also, the earnings post-market hours today, of course, Pidilite and Kansai Nerolac, something you should be watching out for. But Bajaj Finance is something which the numbers haven't come yet. We will be tracking that. And for earnings for tomorrow also, largely mid-cap names are there. Apart from that, of course, NHPC is there. So back to the earnings season, but of course, the levels are very strong. That's all, folks, for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey sing. This is my story.
Good afternoon, viewers. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. The first news being, let's begin with the top news story of the day. After over a year of negotiations and diplomatic back and forth, the India-US trade deal is sealed. This marks India's fifth trade deal in 12 months. The landmark trade agreement resets one of the world's most important economic relationships. The deal, announced after Prime Minister Narendra Modi and US President Donald Trump concluded months of negotiations, cuts steep American tariffs on Indian goods to 18% and commits India to lowering tariff and non-tariff barriers under a new bilateral trade framework. Washington says New Delhi will halt purchases of Russian crude and increase imports of US energy and technology, while both sides expect stronger flows in farm goods, manufacturing and services. The focus now shifts to implementation milestones, digital trade pilots and deeper coordination in clean energy and critical technologies. Markets make a Dhurandhar comeback as investors salute India-US trade deal. Benchmarks saw a stellar rally as Nifty and Sensex both ended with over 2% gains. Broader markets also rejoiced the trade pact as mid and small cap indices both witnessed strong buying. It was a sea of green across sectors on the back of India-US trade deal. Textiles and shrimp stocks surged to upper circuit today, while IT and auto stocks also saw strong moves of up to 10%. Indian rupee appreciated more than 1.5% at 90.04 to the US dollar after the trade deal ignited investor optimism and spurred foreign inflows. Indian rupee became the best performing currency in Asia today. With more updates on the India-US trade deal, Prime Minister Narendra Modi said that patience has paid off in securing the long-awaited India-US trade agreement, telling NDA lawmakers in New Delhi that earlier criticism did not deter the government from pursuing steady diplomacy. The Prime Minister said the global order has been shifting in India's favor since the pandemic and stressed the need to push high-quality Indian manufacturing for global markets. And as Washington and New Delhi strengthened trade relations, US President Donald Trump described Prime Minister Narendra Modi as one of his greatest friends. Trump said the United States will immediately reduce its reciprocal tariff on Indian goods from 25% to 18%, adding that India will move to bring its tariffs and non-tariff barriers on American products down to zero. He also said PM Modi has committed to significantly increase purchases of US energy, technology, agriculture and coal, totaling more than $500 billion, calling the agreement a result of friendship and respect. Trump said the partnership between the two countries will grow even stronger, adding that PM Modi and I are two people who get things done. Meanwhile, senior government officials say they are awaiting full details of the India-US trade deal but expect meaningful benefits once the tariff cuts take effect. DA Secretary Anuradha Thakur said the agreement is the result of constructive dialogue and that its overall impact will become clearer as modalities are shared. Chief Economic Advisor V. Anant Nageswaran said lower US tariffs could provide a significant upside to India's growth outlook, with FY27 expansion now seen closer to 7.4% and a likely boost to capital inflows. Meanwhile, the DFS Secretary M. Nagaraju described the move as a positive development that will help Indian exporters as market access improves further. Trade ties between India and the United States are in focus, of course. A tariff reset means several American imports into India could now get cheaper, including pulses, dairy products and processed foods. Prices of laptops, electronics and other tech hardware may also ease, along with select packaged consumer goods and appliances. On the other side, Indian exporters gain better access to the US, with textiles, jewelry and engineering goods becoming more competitive, a move that could lower costs at home and boost exports abroad. While some goods are set to get cheaper, a few key imports from the US could still remain costly. Steel, aluminium and copper face high US duties, keeping prices elevated. Certain auto components are also likely to stay expensive as tariffs on them remain significant. For businesses relying on these materials, costs may not come down anytime soon. It's a big boost for the auto and auto ancillary space. A strong recovery in US auto demand is driving fresh momentum in forging orders, giving Indian suppliers a healthy tailwind. OEM traction in the US market is picking up steadily, and that's translating into robust long-term order visibility for domestic forging and components manufacturers. With global supply chains stabilizing and US demand accelerating, the outlook for auto and auto ancillaries remains firmly positive. Motilal Oswal sees the Indo-US trade deal as a major positive for Indian markets. Textiles, auto, defense and engineering services are the biggest beneficiaries, while consumer, durables, IT, financials and utilities also gain. Before the deal, India underperformed peers. Foreign investors withdrew billions of dollars and the rupee weakened. Post-deal, FII flows are expected to return. The rupee could recover and Indian exports become more competitive, with tariffs dropping sharply. Now, this follows other trade agreements highlighting India's rising global importance. Citi sees the India-US trade deal as a major boost for the economy and markets. Geopolitical risks ease, export risks fall as tariffs move in line with peers, and the China Plus One FDI theme could regain momentum. The deal supports policy effectiveness, improves market sentiment and may bring foreign inflows while easing short-term pressures on the rupee and interest rates. Equity market gains could also lift urban consumption while reducing concerns over India's perceived tilt towards China. Bank of America calls the India-US trade deal a major breakthrough. US penalties on Indian exports are being rolled back, while India will boost imports of American goods. Effective tariffs could fall to the low teens, giving Indian exporters a competitive edge. India will shift away from Russian crude towards US and Venezuelan oil, and BOFA expects this deal to support growth, with RBI likely done cutting rates. The Kremlin says it has not heard any comments from India on plans to stop buying Russian oil, according to spokesman Dmitry Peskov. Russia is closely monitoring developments, including statements from former US President Donald Trump, pardon me for that mistake, and is carefully analyzing all news on the issue. Let's get going with some business updates. Morgan Stanley has upgraded Syrma SGS to overweight, raising its target price sharply from 712 to 992 rupees. The brokerage says Syrma has delivered 4 consecutive quarters of strong, profitable execution, even as many peers in the electronics manufacturing space struggle to sustain growth. With the EMS sector drawing fresh attention post-budget, Morgan Stanley remains cautious on names like Dixon and Keynes Tech, but sees Syrma building momentum through consistent performance and operational strength. PB Fintech shares were under pressure today after the board announced it will consider a qualified institutional placement. Despite the market reaction, the company delivered a strong Q3, with core business performance being solid and margins expanding over 650 basis points. Contribution margin and adjusted EBITDA comfortably beat street expectations. Management also signaled an appetite for inorganic international expansion, adding a new strategic layer to the growth story. Transrail Lighting has delivered a mixed set of numbers this Q3. Revenue jumped 32.6% to 1,777 crore rupees from 1,340 crore rupees, and EBITDA rose 28.6% to 208 crore rupees. However, margins saw some pressure. EBITDA margin dipped 36 basis points to 11.3%. 0.73%. Net profit was also higher, up 17.7% at 109.7 crore rupees versus 93.2 crore rupees year on year. So strong growth on the top line, but some margin softness weighs on the overall picture. Adani Defence and Aerospace signs a deal with Italy's Leonardo to build a helicopter manufacturing hub in India. The partnership focuses on production, training, maintenance and support, boosting local aerospace skills. Following Adani's aircraft deal with Embraer, this move aims to make India a centre for modern rotorcraft and high-skill jobs. Adani Ports has delivered a strong Q3 performance. Profit is up 21.2% to 3,054 crore rupees compared to 2,520 crore rupees last year. Revenue has surged 21.9% as well to 9,705 crore rupees, while EBITDA has climbed 20.5% to 5,786 crore rupees. The company did take a one-time hit of 146 crore rupees due to labour code changes, bringing operating margin to 59.6%. In key management updates, D. Muthukumaran has stepped down as CFO and Adani Ports has appointed Sridhar Krishna Menon as the new Chief Financial Officer of the company. Adani Enterprises has posted a blockbuster Q3 with profit jumping multifold. Revenue is up 8.6% to 24,820 crore rupees, while EBITDA has risen 18.6% to 3,641 crore rupees, improving margins to 14.7% from 13.4% earlier. Net profit has surged to 5,627 crore rupees compared with just 57.8 crore rupees last year, powered by a one-time gain of 5,632 crore rupees, which includes 3,946 crore rupees from the sale of its stake in Adani Wilmar. Zydus Wellness has delivered a weak Q3 performance this quarter. The company has reported a net loss of 40 crore rupees, slipping sharply from a profit of 6.4 crore rupees in the same period last year. Revenues, however, more than doubled to 965 crore rupees compared to 462 crore rupees year on year. EBITDA came in at 61 crore rupees, up from 14.8 crore rupees, with margins improving to 6.3% versus 3.2% last year. Morgan Stanley maintains an equal weight rating on Coal India with a target price of 390 rupees. The company plans to upgrade executive pay sales, which analysts say is significant for profits. Back pay of around 3,400 crore rupees could hit this year's profit by roughly 9%, while annual employee costs may rise by about 1,000 crore or 2%. Kotak Securities downgrades City Union Bank to sell with a target price of 250 rupees, implying around 16% downside. Analysts say the bank's recent outperformance pushes its valuation above Axis Bank, even though it delivers a lower return on equity. They advise investors to wait for a better entry point. Bajaj Auto reports strong January numbers with total sales up 25% year on year at 4.77 lakh units. Domestic sales rise 26% to 2.08 lakh units, while exports grow 25% to 2.15 lakh units. Commercial vehicles see highest jump at 35% and two-wheelers sales increase 24%, signaling robust demand across segments. Indigo says it is prioritizing efforts to strengthen operational resilience after a major technology glitch disrupted flights and affected travelers recently. The airline's leadership said measures are underway to bolster its systems and prevent similar issues in the future. Indigo also highlighted that most flights have since returned to normal schedules and customer services have been restored. The carrier said it remains focused on reliability as it grows capacity and meets travel demand. Passengers impacted by the disruption are being assisted as per policy. Coal India has revised its executive pay structure, a move expected to cost the company around 3,400 crore rupees through 2026. According to reports, the updated scale will increase compensation for top management and may impact Coal India's overall wage bill in the near term. The company said the revision is intended to align pay with industry standards and retain talent amid a competitive environment. Analysts say the cost hit should be manageable given Coal India's cash flows, but it will keep expenses elevated in the coming quarters. Apple has achieved a record 28% value share in the Indian smartphone market as consumers increasingly shift towards premium devices, according to industry estimates. The milestone reflects strong demand for iPhone models across price segments, even as overall unit sales growth remains competitive. Analysts say the trend indicates a growing preference for higher-end smartphones among Indian buyers, supporting Apple's market positioning. The company's expanding retail footprint and promotional campaigns are seen as helping drive a higher value share. Elon Musk's SpaceX is combining with his artificial intelligence startup xAI in a strategic move ahead of planned mega IPO. Sources familiar with the matter said the deal will fold xAI's AI capabilities, including its Grok chatbot, into SpaceX's broader aerospace and satellite business. The enlarged company is expected to be valued at around $1.25 trillion as it aims to integrate space technology, AI, and communications under one umbrella. People familiar with the discussion said the merger is designed to strengthen SpaceX's financial and technological position before it goes public. Details of timing and structure are still being finalized. OpenAI is reportedly seeking alternatives to NVIDIA's AI chips as it plans for future computing needs, according to people familiar with the matter. Again, the company's leadership is said to be unsatisfied with certain aspects of NVIDIA's roadmap and wants to ensure access to diverse, high-performance hardware for its large-scale models. OpenAI is exploring custom silicon designs and potential partnerships with other chip makers to reduce dependence on a single supplier. The search comes amid broader industry efforts to expand AI infrastructure options and improve supply resilience. On to some important national stories. Air India has started inspections of fuel control switches on its Boeing 787 aircraft, the airline said, as a precautionary safety measure following global concerns over similar issues. The checks cover all 787 Dreamliner jets in its fleet and are being carried out in coordination with the manufacturer's guidelines. The move comes after reports of fuel control anomalies in some aircraft models, prompting operators worldwide to review components. Air India said flight operations are continuing normally and passenger safety remains the top priority for the airline. India's aviation regulator has ordered a special audit of BSR Ventures' flying operations after the plane crash that killed Maharashtra Deputy Chief Minister Ajit Pawar. The Directorate General of Civil Aviation, DGCA, said the audit will review the operator's flight safety, maintenance practices and compliance with aviation standards. The move follows the fatal accident and aims to identify any lapses in procedures or oversight. Authorities have already launched an investigation into the cause of the crash, and the special audit is an additional regulatory step. The DGCA said all aspects of the operator's flying activities will be examined. The Supreme Court of India, led by Chief Justice Surya Kant, strongly criticized Meta and its WhatsApp privacy policy during a hearing on an appeal against a penalty related to data sharing practices. The bench said it would not allow the privacy of Indian citizens to be compromised and signaled that global platforms must abide by Indian law or consider exiting the country. The court described the take it or leave it policy as exploitative and unfair to average users. It has issued notice in the case, asked for a response from the government and posted further hearings for next week. Kochi International Airport has rolled out India's first hydrogen-powered passenger buses as part of its efforts to adopt cleaner and greener technologies. The buses will be used to ferry passengers between the terminal and aircraft stands, reducing reliance on fossil fuels and cutting emissions. Airport officials said the move aligns with broader sustainability goals and could pave the way for wider use of hydrogen mobility solutions in Indian aviation. The initiative highlights Kochi Airport's push towards environmentally friendly operations. On to some important international stories now. US President Donald Trump says he is now seeking $1 billion in damages from Harvard University, sharply escalating his feud with the Ivy League school. The move comes after reports claimed his administration had softened its earlier demands. Trump dismissed those reports and accused Harvard of serious wrongdoing, adding that the case would continue until justice is served. Harvard has not publicly responded to the latest demand of Trump. NASA has stopped its Artemis second launch campaign after engineers detected a hydrogen leak during a crucial fueling test of the moon rocket. The team was forced to halt the countdown when sensors showed a persistent leak in the rocket's fuel connection, along with a valve glitch that made the system unsafe to proceed. NASA now says it needs more time to review data and run another rehearsal, pushing the crewed moon mission to March at the earliest. Bill and Hillary Clinton have agreed to testify before the U.S. House Oversight Committee as lawmakers prepare to vote on holding them in contempt of Congress. The agreement comes after months of resisting subpoenas in the investigation linked to Jeffrey Epstein. Now, their lawyers say the Clintons will sit for depositions on mutually agreed dates, hoping this will halt the contempt proceedings. But the committee's chairman says the terms are still unclear and it is not yet certain whether the vote will move ahead. The Rafah crossing between Gaza and Egypt has reopened after nearly 2 years, allowing a small group of Palestinians to return home and the first patients to be evacuated for treatment in Egypt. Ambulances lined up at the border for hours before the gates opened, with only a limited number of people allowed to travel as Israeli and Egyptian authorities continue strict screening. The reopening marks an early step under the ceasefire, but movement remains slow and tightly controlled. Pakistan faces a major setback in its standoff with the ICC as cricket boards around the world make it clear that they will not support selective participation at the T20 World Cup. While Pakistan plays to skip only the India fixture as a form of protest, the ICC has warned of serious consequences, including financial penalties and possible sanctions. Broadcasters, too, have raised concerns given the commercial weight of the India-Pakistan match. The Mumbai police has filed a case against the Dhurandhar film crew for flying a drone without permission in South Mumbai's high-security fort area. The FIR names the film's location manager accused of using a drone during shooting despite strict restrictions in the zone. Police says the crew did not obtain mandatory clearances before operating aerial equipment, leading to immediate intervention and legal action. The teaser of Dhurandhar 2, The Revenge, is out and Ranveer Singh is back in a fierce new avatar. The short clip shows him raining fire on Lyari, taking on the underworld with the swagger and aggression of what he calls a Naya Hindustan. The visuals are darker, sharper, and far more intense, setting the tone for a high-octane sequel that hits cinemas this March. And viewers, before we say goodbye, let's take a look at the top story today again, the Dhurandhar India-US trade deal. Dalal Street has been cheering the landmark India-US deal, but is this momentum likely to sustain? Listen in to what market experts had to say to NDTV Profit about the impact of the deal on sentiment in the market and the path that they are charting out for Dalal Street in the near term.
The balance of payments could look better now. The trade deficit slightly smaller, inflow slightly higher. So on the whole, an environment which is supportive of the currency. I think even for the equity markets, higher nominal GDP growth, higher real growth, I think that combination could be positive for corporate earnings. So I would say generally across asset classes, I think things are going to become positive.
This is a celebrating time for all investors and for India as a whole. And it is not only about this US trade deal. It is about the series of events which have happened, including the EU deal, including the budget minus the STT.
This is the best time for even for foreigners to participate in this market. And stocks are mercilessly cheap, जिसको बोलते हैं, especially mid caps and small caps are 40, 50, 60, 70% down. So I think this is the best time for India, and we are again, I think worst is absolutely over. Whatever low index had made in last 3-4 months or whatever, I think that is the final bottom. This is what I feel as of now.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
It's a done deal between India and the US. Prime Minister Narendra Modi says trade deal shows patience paid off. President Trump says USA's amazing relationship with India will be even stronger going forward. Ministers congratulate the PM Modi and President Trump. Nitin Gadkari calls it a defining step in India-US economic relationships. Ashwin Vaishnav said it's a win-win deal for both. CEA Anant Nageshwaran tells NDTV Profit that the deal will give a meaningful boost to growth sentiment. Also, DEA and DFS secretaries believe the deal eases global and national uncertainty. Corporates welcome the trade deal. Mahindra Group's Anish Shah says a tariff cut will boost the economic growth momentum in the country. TVS Motors' Sudarshan Venu believes the deal improves India's export competitiveness. Meanwhile, SpiceJet's Ajay Singh calls it a watershed moment for India. Market experts also hailed the deal. NSE CEO Ashish Chauhan says it puts India and the US together, while Kotak AMC's Nilesh Shah believes it removes a hanging sword over rupee equity and rates. Market cheers the India-US trade deal. Benchmarks gain over 2.5%, close after rising 5% intraday. Nifty rallies over 600 points to end above 25,700, while Sensex gains more than 2,000 points. All sectors close in the green. Rupee gains 1.6%, extends its rise to 90 rupees 04 paise against the dollar, makes biggest single-day gain versus the greenback with best performance compared to all major global currencies. Precious metals zoom in trade today. Gold gains over 6% after falling by 4.8% earlier. Silver rebounds to rise as much as 10%, going above $87 per ounce. Hello and welcome. You have joined us on Profit 360. I'm Nisha Podar, and today the big story is the historic India-US deal. And over the next half an hour, we'll tell you all that matters and the huge impact it has had on corporates, economy, markets, rupee, and everything else. So the big story today, the United States and India have finally sealed a long-awaited trade deal. And it comes with a major tariff cut. US President Donald Trump announced the agreement after a call with Prime Minister Narendra Modi. Now, in his post on social media late last night, Trump said the deal will bring down US tariffs on Indian goods from nearly 50% to 18%. Trump went a step further, calling Prime Minister Modi a friend and saying the US will now implement what he described as a reduced reciprocal tariff for India, dropping it from 25% to 18%. He also claimed that as part of this agreement, India would increase its purchase of American oil. And back home, remember, reactions poured in thick and fast at a meeting of NDA's MPS. Well, Prime Minister Modi said that the trade deal has created a positive environment and that patience has finally paid off for India. Commerce and Industry Minister Piyush Goyal also welcomed the agreement. He called it a significant step that would unlock the power of the two large democracies of the world, working together for what he described as has shaped the prosperity of their people, a big diplomatic and economic moment for both the countries, setting the tone for the next phase of India and US trade ties. So that's the big picture today, and we'll have much more on what to really look out for going forward. We are joined by Dheeraj Neem, who's the economist and forex strategist, and also Vivek Kumar, who's an economist at Quant Eco Research. Thank you so much, Vivek and Dheeraj, for joining in. Dheeraj, what does this really mean for India? A historic move there.
Look, I think very frankly, this comes at a very opportune time, especially for the financial markets and the rupee. But let me start with our assessment for the economy first. We had pegged India's FY27 GDP growth at 6.5% below market consensus and below official estimates. And a part of the reason was that we had expected that the US tariffs will stay elevated for most part of this year. So, of course, this is a greatly welcome development from that perspective. And we believe that along with the strong momentum in domestic demand that we have seen in the recent months build up, this actually reduces risks to export performance over FY27, and growth could actually be around 6.8 to 7%, as also the Ministry of Finance projected in the latest budget. So I think it obviously brings India's growth prospects close to potential growth. And at the same time, as we have seen the price action today, it allays some of the concerns about the rupee's further weakness, the pressures that had built up in the system over the last few months, as well as, of course, the equity performance that has shown with a bit of a rebound today that what a good sentiment can do.
This is clearly, as you said, Dheeraj, with all the aspects put forth, where all it has really impacted, it's clearly coming in as the biggest booster shot that India had got, with so many implications across the board when it comes to India's macro, micro, market and everything. Vivek Kumar, rupee one of the biggest highlights of the day, the strongest performance in 12 years, and also over 1% rise for rupee on a single day is no joke.
Well, absolutely. We've got to appreciate the fact here that rupee was fairly insulated from the macroeconomic side. So you had a growth inflation balance for the economy, which probably not many nations in the world could boast of. And at the same time, our current account gap was fairly curtailed. Despite that, rupee saw the depreciation that it saw in the last 3 quarters. And to a large extent, you could say that there was a tariff-related anxiety which was playing upon capital flows. There was a broader geoeconomic and geopolitical uncertainty which was also impacting your direct investment flows. Now, the tariff-related uncertainty is at least going to address the portfolio flows, so that part of the anxiety probably will cease to exist. You have better clarity, better visibility on in which direction is the relationship with the US is going to progress. So that's a huge positive for rupee. The direct investment flow is something which probably will take its own time to recover because the drivers in that case were completely different. So near term, it's a big positive for rupee, and we have seen that kind of reaction in the market, more than one big figure move in the currency in one single day. Going forward also, you could expect at least the worst case scenario for rupee that some of the analysts were building in, that will probably now get reassessed.
That's right. In fact, the kind of depreciation that rupee was seeing, it was a cause of concern, and that downside slide has been really substantially clipped at this particular moment. Now, hold your thoughts there, because a lot of really applause as well as impact, especially from the corporates who are going to earn much more, whose earnings were really depressed because of US being the largest market, being shut for us, being too expensive on the tariffs. So the corporate India is really cheering it. So the Dhurandhar deal is sealed, and Dalal Street has been cheering it as well. What is the sectoral impact for the bunch of sectors? Let's listen in to the word coming in from Bharat Forge, Pearl Global, Aarti Industries and Kitex Garments.
If you look at our own business, for the last 25 years, we've been a very significant player in the American supply chain. And like us, there are other companies that have a very strong connection with the US automotive industry and engineering industry and other industries as well. And somehow that came under a cloud for a little while, But India and America are extremely aligned. And I think this shows the strength of that alliance partnership and puts us back in the right context, in a stronger position to, grow our business. So I think this is good news. It puts a lot of clarity, and it takes away any overhang that one may have.
We're importing from India. We're subject to pay this additional 25% of penalty tariff. And compared to our competition, who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries. So these are the major apparel exports. I'm representing apparel exports. I'm talking more from apparel only. So this is what the advantage that immediately kicks in.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time. Another 5 years, I think you cannot, predict, what is the demand.
This was something that the industry long awaited. And it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
All right, so very, very positive commentary coming in from corporate India. Dheeraj, how do you see this in terms of the earning momentum, big market opening up, and also the pent-up demand for the many last months of about 10 months that India has exported lesser to US? That will also kick in. What is the kind of earnings momentum and the economic impact that you foresee for now?
Well, I really can't speak to the earnings momentum. Let that be an equity strategist's job. But from a macroeconomic perspective, I can certainly say that this deal has come well in time. Look, the front-loading effects on India's exports to the US were just beginning to fade quite notably. And, it would have been only a matter of time where the financial burden on the Indian firms which were exporting to the US became large enough for them to reconsider exporting to the US altogether. So I believe that the deal happening is quite at an opportune time where those worst fears have certainly been allayed. I am also keen to note that, a lot of optimism has been concentrated in the sectors which were otherwise, scheduled to get hit a lot more because of the high tariffs, because of the high 50% tariffs, including the likes of textiles, gems, jewelries, chemicals, etc. We note that these are low-tech sectors, but very, very employment-intensive domestically. And if they are able to save US demand on the back of this deal, which I'm sure they will be, I think it bodes really well for the distribution of economic growth, which India has otherwise been recording at stellar pace. So I think that not only from an headline growth perspective, this is a positive development, but also from the evenness or the distribution of growth that we will be looking at would be perhaps better than we have been fearing for the last few quarters.
That's right. And all of those earnings from the different sectors also that you mentioned, that's all going to add up to our GDP growth. So whatever we were penciling in, we are going to beat that number with this big relief coming in. Let me begin also by getting in our colleague who has been poring over this and also brings us the sectors which are going to specially be benefiting from this in terms of global competitiveness. Let me take it across to my colleague Rishabh Bhatnagar, who's joining in with all the details.
Right. While we're awaiting the fine print of the India-US trade deal, one thing that is begging for clarity is the fact that there are certain imports and exports from India that are still facing about 25 to 50% tariffs, and those are steel, aluminium, and certain auto parts as well. And why they are facing those heightened tariffs is because those tariffs were applied differently by the US government. They were applied under the Section 232, which is a National Security Act, and basis that these tariffs were applied to these sectors. So what we're seeing is that despite a trade deal having been agreed between the two countries, sectors like steel, aluminium, copper could still face tariffs as high as up to 50%. What we're seeing is that these Section 232 tariffs are usually not waived off in free trade agreements. That's at least what the policy is that the US practices. So that is something that we want clarity on. There's select auto parts that also face about a 25% tariff. So that's still more than the 18% tariff that India has managed to negotiate for itself. There's also zero tariffs as part of Section 232. There's also zero tariffs for pharma exports from India, for smartphone exports from India. It's a major one for Apple because they send a lot of smartphones that are built here in India, but they've shipped around the world and especially to the US. Those continue to remain at zero tariffs. There's certain electrical and mechanical components that those will also continue under the zero tariff regime under the Section 232. So still steel, aluminium, copper getting the shorter end of the stick, but we'll find out more as more and more details emerge.
All right, so that was a good sense on overall which sectors are impacted and what all clarity is really required. Vivek Kumar, from an economist's point of view, How big is this, and in how much timeline are we going to see real impact on the ground and on the economy and the key drivers for that?
I think that's a very practical point, Nisha, that you brought forward, which is what can be the timeline. We just completed a deal with the EU, and what we know is that the ratification of the deal is going to take anything which could be of the order of 12 to 15 months. Because of the nature of the deal, it has to be ratified by each member country in EU, and then possibly the implementation is likely to follow. So you're looking at a window of 12 to 18 months from now before the EU deal gets implemented. Now, in contrast, the US deal under Trump's administration has the possibility of getting implemented at a very short notice, because we've seen a lot of decisions in case of US have got centralized in the recent quarters. And if the president were to speed up things, he can possibly make that implementation work through within a span of 2 to 3 months. So this probably works in favor of India, because from an implementation perspective, there is the time lag that you could possibly associate is going to be extremely low in case of the US-India trade deal vis-a-vis some of the other trade deals that India has signed. By the way, India has signed almost 4 or 5 trade deals in the last 9 months. So that covers almost 42-43% of our merchandise export basket. That itself is a commendable task within such a short span of time. So I would probably look at everything. And since US deal has the likelihood of getting implemented sooner rather than later, probably the impact is going to be felt faster. Maybe you could see that accruing in FY 26-27 financial year. Our GDP growth estimate was in the range of 6.6 to 6.8%. Maybe with this kind of implementation, if everything goes smoothly, we could be touching the upper end of our forecast very soon.
All right, upper end of the forecast, and that's going to be really good news. But soon, by that, what do you mean? How soon could that be? Because my question started with the timeline.
Well, so yes, there is a lot of positives that we've discussed, Nisha, but there are things which are still sketchy. So, for example, a lot of details need to come out from the Ministry of Commerce in India as well as the US Trade Department in the US. And for example, things like if India has committed to buy $500 billion of energy, tech, etc., what else is India conceding in the trade deal? So you have to look at the overall picture. And to get a complete assessment, I think we'll have to wait for that detail to come through in the next maybe couple of weeks.
These are very early times, and we spoke to a whole host of corporates, and a lot of them were of the view that in 2 to 3 quarters they will see a significant improvement in their performance, profitability, especially because US is their biggest market and the pent-up demand will also kick in. So that's one thing that we have really seen, but of course many things in the fine print as well. Dheeraj, as a forex strategist, looking at the overall picture right now, where we wouldn't say that in this particular case, just because India wanted this big market opening for itself, that we really were desperate. It was a win-win situation where US was also equally under pressure to not let go of an alignment of the fastest growing economy in the world. There are so many global companies, US-based companies, who have a thriving business here and they invest. Now, looking at US sovereign debt situation, dollar debasement as one of the big aspects, and now our own rupee appreciating because of this booster coming in. Putting all this together, how do you view the forex trade and dollar rupee dynamics going forward?
Sure, I think that's $1 million question at the moment. Look, the dollar debasement theme, it's a very complicated idea at the moment. We could see some ingredients falling in place, but again, it's a very big thing to happen overnight. So we will have to really watch this space of the US macro policy and institutions to really understand if dollar debasement could really be a theme for the global economy. Having said that, we do hold a slightly bearish view on the dollar index, broad dollar index, through the course of 2026, and that's not very different from the market view either. And when you look at the price action for the broad dollar index recently, it broke below one of the very strong trend support levels, and that is where a lot of bearishness about the dollar in terms of sentiment has come in. The theme of dollar debasement has picked up a lot more voice in the recent sessions. But again, like I said, when you're thinking of debasement, you're thinking of days and months, not years after years. I mean, that's
all right,
how it
so
has
that's
to
a
play
big
out, and then
debate
it's called debasement.
for another day, Dheeraj. We will leave it at that at the current moment. Let's just rejoice what we have really got as a booster shot. Thank you so much, Vivek, as well as Dheeraj, for joining in. And over to my colleague Mahima, who's from the market pit, giving us all the action on how the market really cheered this big historic deal coming in. Mahima.
Well, so the streets have clearly cheered the India-US trade deal coming in. After 9 months, we've seen Nifty closing, above that 2.5%. We've closed well above the 25,700 levels. The next few days will be crucial to watch and see as to whether we are able to cross that 26,000 levels and how. But in terms of the overall, index, how it has performed, in May 25, Nifty had gained around 3.8%. After that, today we are seeing that 2.5% of increase. In terms of the top gainers on the Nifty 50, you have counters like Adani Port, Adani Enterprises, followed by something like a Geo Finance, which made the mark. In terms of broader markets, they've clearly outperformed the benchmarks today. Both mid-cap 150 as well as small-cap 250. Have seen gains of about 2.7 to 2.8 odd percent. In terms of where the stocks stand, the mid-cap 150 saw top gainers include counters like Apar Industries, KPR Mills, as well as Wari. All of these counters on the back of India-US trade deal. And for small cap, you had counters like Avanti Feeds, Welspun Living, Aarti Industries. All of these counters locked in upper circuit again on the back of India-US trade deal. So a lot of counters, were in focus today on the back of the India-US trade deal. Good news coming in. So this is the overall view of how markets have fared today.
Markets, rupee, and the corporate world and the overall economy really cheering and applauding the Indian government for this. With that, it's a wrap on this special edition. Thank you so much for joining in, and keep it with NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Today in our show, I'm going to get a very special company. It's in the agrochemical space. I'll be giving you some hints. Then you take the name of the company. This one is the company we're talking about. It's an agrochemical company. It's also a beneficiary of the Indian-US trade deal completion. The Q3 gross margins, they have risen, but the last 6 months were not good for the company. And it's of course a crop protection chemical company. The stock is down 32% in the last 6 months. It's a total, you could say, agrochemical player, and there are a handful of them. And the answer is Sharda Cropchem. That's the company we'll be talking about, and this is the company we'll be featuring in the KYC segment. But why are we calling this company and why in KYC? This industry itself has seen a lot of cycles, and now it seems like there are some green shoots happening in this cycle itself, and we'll ask the management what led to the strong growth in Q3. Was it the volume, was it the pricing, or is there something else in the international expansion front? Also, another question we'll be asking the management and why we are getting the company in KYC is the volume growth and the margin guidance. Will that be above the 35% mark? Volume growth has been around 20%. So that's where the questions will be arising. The third reason why we are calling this company in KYC is, if you could just show the third reason for KYC, is apart from the volume growth movement, this also includes your other companies as well. And these queries which are there, especially for Sharda Cropchem, this includes your global expansion plans. That is very much important as well. But nevertheless, These are the important points that we are trying to get the companies in. And yes, the geographies, where's the outperformance coming in, and the benefit, of course, the most important thing, the India-US trade deal. On the show, we'll have Ram Prakash Bubna. He's a chairman and MD. He will be responding to all of our queries, be it the trade deal, be it the company specifics, and yes, is there a big up move happening in the agrochemical space or not? Remember, it's a very cyclical play, so it'll be very much interesting to have a chat with Ram Prakash ji. But apart from that, let's move on and focus on about the company. This is very much important to understand. Agrochemical company at times becomes too technical for investors, but I'll try to make it very simple going ahead. It's an intellectual property driven company. There are IP rights even in the agrochemical space. That is something to watch out for. They do marketing and distribution of wide range of formulation and generic active ingredients. So it's like a total ecosystem of agrochemical space. Apart from this, the clients are there in more than 80 plus countries, and that is why these trade deals, when they get completed, it offers some kind of stability to even this kind of a business model. That's why it augurs well for Sharda Cropchem. They have procured roughly 3,000 odd registrations, and they have filed around 1,076 applications for the future registrations as well. That is where the IP rights are protected for a company like this. The capex was roughly 400 crores in 9 months FY26. We will be looking at the future capex plans as well from Ram Prakash ji, and the revenue breakup, agrochemical, that's still having the majority of it. Roughly 83% of the revenue is coming from this segment. The balance one is at around 17% for this space. Apart from that, segmental revenue, how does that actually stack up? And this is just only taken for the agrochemical space. There are 3 types of that. Herbicides, that's the 43% year-on-year growth which has come in, and that stood out on the Q3 numbers. Apart from the segmental revenue growth which was posted in Q3, let's move on to the other important data, and that includes the geographical revenue. This is the most important thing to look at. Why North America? Right now, recently, the India-European and the US trade deal has been completed. So these 2 regions, they are comprised of 87% of this total revenue. So these 2 is very much important for Sharda Cropchem going ahead. So this is the entire geographical breakup revenue I have given, but the recent triggers are also very much important. Strong Q3 numbers have been there, driven by the agrochemical segment. They have done really well. Let's get into a little bit of details into it. The Q3 volume growth, that stood at around 14%, and there was a change in the product mix also. Gross margins are seeing a strong improvement. Roughly 35% is something which the street is expecting that to be there going ahead. But the benefit, that's the most important thing from the trade deals with the European Union and USA. That is what we are looking at. And of course, the Europe and the LATAM region, that's where the volume growth, LATAM means Latin America, that is where the volume growth was very strong in 9 months FY26. So this is the entire picture for Sharda Cropchem. But I would like to make you sure that you understand how the KYC format works. KYC has around 8 parameters where we get in a company. This includes income statement, balance sheet, cash flow and return ratios to talk about the numbers. But apart from the numbers, also there are other stories to look at. That includes street trade, how stocks have moved, shareholding, especially the institutional portion, valuations, we are comparing them with different peers in the agrochemical space, and last but not the least, the outlook, be it the company, be it the industry. So these are the 8 rating parameters. The first one is the income statement. Income statement, remember the Q3 numbers have been very strong, so I've added that and I've given the combined number in the 9-month FY26 numbers. The revenue, they have seen a decent growth coming in. If you annualize it, of course Q4 is at times lumpy also, this goes 4,000 crore plus if you estimate for FY26. Decent growth coming in the PAT and the EBITDA front as well, and the gross margins is something which is very much important to look at, and that has also shown a good strength. But remember, the business model of a company like this, you are not going to have a linear move. There will be cycles, there will be lumpiness, and that is where at times the concern comes in. And FY24, you see how low the margins were, just 10%. Now it has gone up to 16.4%. Yes, it's in an up cycle, but because of the business model, there might be volatility if you judge the company on the quarter basis. So income statement is a neutral rating. Let's look at the balance sheet, and in the balance sheet I have simplified it. Rather than giving you a lot of numbers on the screen, I'm trying to give you the top takeaways from the balance sheet itself, that how things have moved, and largely we see the equity size has gone up, but the cash and liquidity, that is a very important point. That's around 826 crore. That means there is a good cash deployment, or maybe you can expect some kind of a dividend or a bonus announcement. But the working capital days, that has also done well. This is a good ratio. The liquidity ratio is improving and the working capital day is also improving. So that is showing a good strength. And trade payables, however, that's on the higher side, and that might be a little bit of concern. So out of 4 points, 3 points have been strong, but net neutral with a little bit of positive liking on that. So we have done income statement, we have done balance sheet. The third one is also very much important, that's the cash flow segment. And the way this business model works, there are variations in the trade payables, trade receivables, and that is why the cash flows will not be very uniform in a business model like that. And this is where the operating cash flows, we were looking at them, they are doing really well, it's decent. And remember, these are the FY25 numbers, by the way, and these are the net cash flow numbers, and that is where the variation comes in. But net, looking at the business model and the overall operating cash flows, it's still on an up cycle, and because of that, I will be giving this a neutral rating when it comes to the cash flows. But let's look at the return on ratios. The first one is the return on capital employed, and you see FY24 was, you could say, a very impactful year. That's just 3% down. It's 21 odd percent, starting to increase. It's around 16%, but a healthy one should be 20 odd percent. The 9-month number does suggest that, and that is why it's on an up cycle. So it's a decent one. And let's look at the ROE numbers also, how they have panned out. The story remains the same. This has also gone up. The 9-month numbers are on the higher side. Largely, if it maintains that 20% return ratio mark, then it's quite, you could say it's a very good company. But there is a seasonality impact, and that is why return ratios, to keep it a balanced perspective in KYC, I would be giving this a neutral rating. So we have spoken about the neutral rating, and also we are speaking about the shareholding pattern, how the shareholding pattern has changed. That's also very much important to talk about. Is there an institutional at play? FIs, you see, they have increased their stake, but slight profit booking has come in. They doubled it, and now they have reduced it to 4%. There's nothing to be concerned about because it's been largely flattish. The promoter stake is still, you could say, flat. Public is there. DIs is also a slight decrease is there. But net, nothing much to actually consider about. Nothing has much changed, and that's also good. That's because stability in ownership is also something which I like. So it's a neutral rating when it comes to the shareholding pattern. Let's talk about the street cred. Street cred is nothing but the returns which have come in to the investors. Last 6 months, that's the volatility which came in, the trade deal overhangs which were there, and the stock fell 32% in the last 6 months. Year to date, the stock has again rallied back. It's up 27%, signaling a good sentiment. And last 1 year, the stock has, despite the volatility, has doubled. So that is a very good news, and congratulations to the investors who are holding the stock for this period. In last 5 years also, it has been a multi-bagger. Stock is up to 191%. So this has been a very strong kind of a momentum for this street cred, but I would still give it a neutral rating because there might be some volatility and profit booking in the counter for the days to come. But come on, let's talk about the valuations. And when we talk about the valuations, largely the agrochemical players come in, and these are the different bigger names also, medium names also, and we have taken a 12-month forward P ratio to understand where does the company stand in terms of valuations. And remember, it's a cyclical industry, so all the industry players move together. Of course, there's some little bit stuff change definitely, but Sharda Cropchem, it's at 16 times its 12-month forward P, and that you compare that with PI Industries, it's on the higher side, 28 times. UPL comes in at 17 times, and if you see, other two stocks are also very much important. This includes Rallis India and Dhanuka Agrotech as well. That is still, it's coming at the cheaper level, but then Dhanuka Agritech and Rallis India also almost there. So that's definitely, it's one of the cheapest players in the agrochemical space. So it's a very positive rating and a good thumbs up when it comes to Sharda Cropchem when the valuations are in focus. That means right now also there might be a ripe entry time for this counter. Let's talk about the outlook, the 8th rating counter. FY26 margins, they are expected to remain at 35%, and remember the gross margins, they have been increasing both YOY basis and you could say sequential basis as well. The second important point for the outlook is the return ratios. They may see further improvement, and there's always a saying, ye dil mange more. Of course, a 20% return ratio, you can expect that to go up to around almost 30% and it can sustain. And if it sustains, you can see a re-rating in the stock. Sustained volume growth of 20% plus, that's what the investor presentation had stated. So we'll ask a little bit more about that from Ramchandra ji and the beneficiary of the US-India trade deal announcement. Now, how much the benefit comes, by when it comes, what are the total benefits in terms of money, that's something we'll ask the management. But net, it's a neutral rating I would like to keep for the industry. But yes, the cycle is turning towards the agrochemical space and certain picks were certainly expected to do more. But let's give you the ratings, how the ratings stand, and let's just put out the numbers. There is a good part about the numbers, there are some kind of a negative also, but largely it has been very much neutral. All the 4 numbers I talk about, but remember there's an upcycle momentum going on in the agrochemical space, and that is where the attractiveness comes, and that's why I have called this company in KYC. Let's just show the other parameters, what is there. Is it that gloomy? I don't think so. Let's just show the valuations. Valuations, we have shown a strong thumbs up coming in. Outlook has been largely neutral going ahead, but in all, it is not bad and it is improving, and that is where I give 4.5 out of 8. It's one of the on the higher side on the normal average rating when I talk about this company. And apart from this, let's talk about the management who will be joining us and look at that age. 57 years of experience Ram Prakash ji is having in chemical, agrochemical and related business, like a sitting encyclopedia, and his education from IIT Bombay. So we will be asking him a lot of questions on the business as well as the industry. But joining us is Ramchandra Bubna ji from Sharda Cropchem. He is the CMD and a huge industry stalwart as well. Ramji, I would like to ask one important question. Is the India-US trade deal is done? Before we start on your earnings, what benefit comes to the industry now, and where does India stand?
India stands in a better position, but as far as we are concerned, we are not very much affected positively or negatively, because our products are not freely tradable products. Our products are have to be approved by the government of USA, and there are not many companies who seek these kind of approvals because they are very expensive, time consuming, and not very certainty. So the customer have to buy only from the approved sources. We are one of them, and all the tariff that we are charged are being passed on to our customers, and they very readily and gracefully accept it.
All right, and Ram Prakash ji, coming back to the earnings, the Q3 numbers were on the strong side. I was just checking the numbers, be it the volume growth, be it the margins. First, I'd like to know, what led to this strong volume growth, where the geographies were doing well?
See, the European Union geography has been doing very well, and the euro-dollar exchange rate has also been very favorable to us, and the climate has been also very good. The demand has been excellent. That has helped us to achieve these figures in Q3, and it will continue in Q4.
So just to put that in perspective, Ram Prakash ji, that gross margins, what are the current levels and what kind of margin outlook we can expect going ahead?
The same, around 35%.
Okay, so the 35% remains the gross margin target for FY26 as well.
I would say 35.
All right, and the volume growth, Ram Prakash ji, what kind of expectation we can have? Is 20% plus we can see on a blended level?
Yes, please.
Okay, all right. So that means 20% volume growth coming in as well as a margins outlook of 35%. And how the global pricing looking like, of the agrochemical space? Is some kind of a pressure which is already bottoming out? Some larger peers did mention that the pricing is coming back. So how much conviction is there that the pricing is coming back?
Sir, in our opinion, the prices are on the rise. The rise is a little slow, but they are continuously rising, because we had a very bad phase in 2024, and the industry is coming out of that bad phase, and there's a lot of scope for the prices to still go up.
So there is a scope of prices to go up as well. I was just checking on the working capital days. There's been a significant improvement, 148 days in the month of March. And now it's around 70 days. Any other further improvement you can expect in the working capital days, and what is leading to that?
So the main thing is that we are getting a lot of support from our suppliers. The suppliers are extending us 180 days clean credit. And even if sometimes the payment gets delayed, they don't complain. So that is a very big support. And second thing is our customers are also paying on time because the industry is doing well, the agriculture is doing well, and that is rewarding Sharda Cropchem. We are receiving the payments on time and we are receiving good credit from the suppliers.
Right, but Q3 has been strong, and you are suggesting that the Q4 numbers, that itself will also be keeping the growth, if not really strong, but at least the Q3 growth would be same. Am I right? All right. Sir, the cash and liquidity, that segment also we see the overall cash has gone up for the company from 558 crores to 826 crores. You are going to keep that for the working capital only, or is there some kind of an acquisition or any reward to the shareholders?
Mainly for the working capital, and more investment is maybe required for obtaining the registrations. So today we are spending about 450 to 500 crores. This may go up because these are very unpredictable. So we are also preparing ourselves for that.
Interesting on that. And Ram Prakash ji, the capex incurred was roughly 400 crores in FY26 till now. FY27, what are the plans for the capex going ahead? Any kind of amount which has been earmarked?
Sir, it's very difficult to calculate it precisely because of a lot of uncertainties in the process of registrations. But it could be around 500 crores in FY27 also.
Yeah, that's pretty much interesting. The company is having client in more than 80 plus odd countries. I checked the registrations, that's roughly 3004 registrations, and you're filing 1076 applications for these registrations also. What's the outlook on this? And for our viewers who need to understand what these registrations means, if you could just explain that also to us.
Sir, the registrations are something like an approval, or you can say in common man's language, license. And every government in every country wants to prevent unauthorized or wrong products into their country, because the implications of a wrong product or a harmful product are very serious in agrochemical industries. So the governments want to only allow those products which are safe for the human handling, for the soil, underground water, and the agricultural products that are produced. So this is a very complicated, and it is essential. And the most stringent geography is Europe, and the next most stringent is United States, where the rules are followed and seriously implemented.
I was just seeing the product segments. You know, there are 3 product segments in your agrochemical space. Insecticides and fungicides, they went up 20%, that's fine. But what caught my eye was herbicides. That went up 43% on a year-on-year basis. This kind of growth for herbicide segment, Ram Prakash ji, will it sustain in Q4 also?
As we are seeing the trend, it will sustain.
All right, and the numbers which you spoke about, the European region, you are getting benefit also for our viewers to understand that the euro is in a very favorable position as compared to rupee, and that's what the beneficiary is, this company. But the LATAM region, that's also showing a good volume of growth, and at times that helps a lot for our stocks in the agrochemical space who are having this exposure. What's your view on the LATAM region? That's called the Latin America.
It will go up. It will go up from the current level because we are venturing into more and more products and more geographies. Brazil is one of the most important countries in Latin America, and we have increased our share in the Brazil quite considerably.
Interesting. And Ram Prakash, you spoke about that the products, new products are coming in. Now, product mix, does that change going ahead? Current product mix, what is there? And maybe 5 years or 3 years down the line, the product mix, what will it be? And if it is going towards the value what kind of, incremental information you can share with us?
See, there's a lot of invention and a lot of development in the technology, and more products are being invented and introduced by the multinational companies, which are more safe and more effective for the crops and for the environment. So we are also following up that trend. The multinational companies who introduce a product have a protection by patent for the first 10 years. And as soon as that product goes out of the patent, we are waiting to register them, or we start the process of registration even before they go out of the patent.
All right.
And this is a good margin and good opportunity.
Great, great. That's a very important thing, Ram Prakash, you have shared with us. But thank you very much sharing the growth prospects of the industry and your company, and best of luck for the future and for Shahada Cropchem. Thank you very much, sir.
Thank you so much.
So that, of course, just to give you the recap about this conversation which we had and the KYC ratings which I have given, largely Q3 numbers were on the stronger part, but remember, it's a cyclical industry, but green shoots are coming, and that's why the stock price has also gone up in the last 1 year. Stock nearly doubled. The valuation still attractive if you look at it, especially when you compare them with the other peers, and the outlook itself is also pretty much decent. Overall, we have given the total KYC ratings of 4.5 out of 8, and that is for your entire reference. That's all, folks, for today at NDTV Profit and KYC. Stay tuned for more companies I'll get for you.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
The expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decision. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह। दिस
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Big news, and I'm sure you've heard about it. India and the US have signed a trade deal. The nuances, the fine print of that will emerge over the coming weeks and days. But the good news has already been absorbed to a certain extent by equity markets, which have risen quite substantially. This is a major overhang that a lot of people have argued held equity markets and in extension your portfolios back all through 2025 and even in the start of 2026. The question is, where does this take us right now? Is the bad news behind us, and does that mean more good news for your portfolios? Let's find out. We're joined today by Trideep Bhattacharya, who is the President and CIO Equities Edelweiss Mutual Fund. Trideep, thanks so much for taking the time. Let me first ask you, did you anticipate that it would get done as soon as it did? Or when it did happen, because we've been waiting for it for some time. The point was that we waited for so long, a lot of people believed it was not going to happen.
Thanks, Alex, for inviting me to your show. Yes, indeed, the timing of it does come as a surprise. So one of the things that I've been saying for the last couple of months is that in this year, calendar year 26, we will go from trade conflicts to deal making. And in that context, the Indo-EU deal was the first one to come along, which was fine. Second, only after the United States. But what took everyone in the market by surprise is the timing of the US deal. Timing is one part. The other part is basically the extent or the number of 18%, which places us amongst the lowest tariff rates amongst the trading partners of the United States. I'm sure we'll talk more. So both of these, I think, are reasons to cheer.
So we'll talk about some of those implications for Indian equity markets. But Trideep, on the point of Europe, I read an interesting headline this morning from the perspective of the US. Whatever you can do, I can do better. What do you think about that?
Well, play with the words, but I think overall, in a matter of a fortnight, we've seen close to 50% of our exports, or even more than that, covered by deals, which is a very good outcome from a macro perspective.
Okay, so let's talk about it from the Indian equity perspective, and specifically from the mutual fund investor perspective, right? Because let's face it, the broader markets have seen tremendous pain, and the way that a lot of people have constructed their portfolios, just the hangover from the post-COVID-19 bull run, is that the tendency is to gravitate towards the broader market funds. And as a result of which, there's been a significant underperformance of portfolio over the course of 2025 and 2026. In fact, in 2026, Trideep, the small cap index, as of yesterday, had lost more ground than the full of 2025. So, does that pain abate? Does it reverse?
Directionally, yes. Though I would still start with the large caps and then gradually go on to the small caps, because let's evaluate the situation. This deal, or these two deals, come on the back of the premise that India had underperformed emerging markets by close to 40% over the last year. So, and all of a sudden, in a matter of a fortnight, the major macro headwinds, which was on currency, and the fact that we were not the favorites of the United States, or for that matter, globally, has changed. So the view of the constituent of the market which changes the most in this is FIIs. So from an FII market, on the back of a strong underperformance, when such a trigger or catalyst happens, usually the first favorite is the place where the FIIs goes, which is typically the large caps and the larger mid caps. And that would be followed by the small caps over a period of time. On net balance, what I'm saying is these two deals first will turn around the sentiment in FIIs, and that should mean a bit more buoyancies in large cap first, and then go percolating down to mid and small caps.
So what you're saying, Trideep, is that the up move from this point, and of course today you've seen a justified, not knee-jerk reaction. This is justified, if anything, right? But you're saying that the up move from this point is going to be predicated on what foreign institutions do?
I think well, not just that. For foreign institutions are about 16% of the market. So not just them, this would also kind of change the view of domestic investors who are actually mostly loaded in mid and small caps. But that change will actually happen gradually. The delta between yesterday and today is the FIIs and the lack of trigger, which was lacking. So hence the immediate movement in terms of sentiment would come from FIIs is the only limited point I am making. Net, what this does is it removes the macro negativity, which was around, the lack of deals coming through. Bear in mind that net, even over the last year, even with the US tariff, the impact was only about 30 to 50 basis points of GDP in terms of the actual numbers. It was more a sentiment impact, particularly in the context of globally, where a lack of a deal made us underperform global markets in a meaningful way. My sense is that underperformance versus global markets, which actually start to revise.
Interesting, because that impact on growth that a lot of people estimated between 25 and 30 basis points now becomes a tailwind, doesn't it? You add that to your estimates for the new financial year. But having said that, Trideep, I don't want to get into your own strategy as a portfolio manager. What did it look like running up to today? And are you likely to change the texture or the breakup of some of the schemes? Maybe we can start talking about the diversified schemes first.
Indeed. So I think the first thing, we are bottom-up investors, quite frankly, and whenever we see valuation mispricing, which we were getting to in some sectors which were more export-oriented, like for instance, IT being one of them, chemicals being another, auto ancillaries, globally facing auto ancillaries another. These three segments were gradually getting to more attractive valuations, and we were kind of anyway starting to nibble at them, given where they were available. What this does is this sort of an event fast forwards that sort of a transition, and that's where on fringes we have sort of acted upon to kind of make our portfolios more resilient in terms of the earlier sectors which were impacted more by the lack of such deals, and now all of a sudden the positive catalyst that this deals become.
Okay, let's talk about earnings as well, because Tradeep, you've seen a part of the earnings season pan out in the third quarter, right? And some of those signs are that what you saw in the second quarter in terms of margin expansion, where a few companies were reporting better than expected performance on the bottom line, led by margin expansion and not by top line. Does that change in that, just to put things very simply for my viewer to also understand, companies were not selling more things, they were simply earning more for every unit that they sold. So do we see that pickup in demand take place as early as the current quarter, which is the fourth quarter, or do we have to wait till a better part of the new year is done?
Very interesting question. And there are two or three facets to this. Let me kind of take in parts. We've been saying for the last 2 or 3 months that the three themes of 2026 has been one, from trade deal to trade, from trade conflicts to deal making, which now with the 2 deals coming through has come through. The second point that we have been making over the last few months is that the earnings upgrade cycle over the last 12 to 15 months has been kind of moving downwards. And we have seen an earnings cut of about 12 to 15%, 12 to 13% over the last year or so. Is finally turning or bottoming out. September quarter in that context was the first quarter where we saw 2 to 3% earnings upgrade coming through. This was mostly towards domestic-oriented companies, driven by partly a softer base and slightly better margins, which is what you were highlighting. I think post his deals coming through, while Q3 numbers are well struck and net we would see 1 to 2% earnings upgrades coming through. March quarter prospects get a little bolstered by, even to a certain extent, some of the export-oriented industries, where the outlook changes in terms of deal making. May not necessarily be in numbers, but they will start to see better order book situation, better visibility of trade, which will positively impact the multiples that they are trading at in the near term, and earnings over a period of next 6 to 9 months is what I would say.
Okay. I want to also get your view on the implications of the amount of issuance that is expected to take place in 2026, and whether that will be a mop for any additional liquidity that might be generated, or interest that might be generated to deploy, and whether that will take away from the market. Because if money is being deployed into these new companies that are looking to raise funds, or old investors that are looking to sell on Dalal Street for the first time, then one would assume that it will be difficult for the equity market as a whole to rise.
Yeah, it depends on the pipeline. The pipeline clearly has been negatively impacted in the last couple of months, given the macro negativity that has been kind of there. With the deals coming through, that I suppose that macro sentiment will improve, and so will the deals with IPO. But given that globally we've underperformed by close to about 40% over the last year, our valuations finally are reasonable, particularly on the large cap front as compared to 10-year average. I think the market has the appetite to take Indian paper. Of course, one has to distinguish between good paper and bad paper, and those selectivity investors will still have to kind of go through. But net, I think after a good close to 1.5 years, I see the sentiment towards India changing on the back of the Indo-EU deal, and the US deal is a key headline that I wanted to kind of communicate.
Yeah,
and hence in that context, FII interest should be there in some of these trade days.
Okay, so that is well communicated. But Tradeep, let me ask you this. Over the last couple of years, we've been stressing very importantly in a lot of conversations that you and I have had, and in conversations that I've had with a lot of other fund managers, which is keep your return expectations grounded.
If I were to ask you that question, if I were to have asked you that question last week, if I'm asking you this question just now, has that answer changed just a tad bit on the upside? And to what extent?
Well, to what extent? So ultimately, we are sort of, worshippers of earnings, if you may call it that way, as bottom-up investors. I think all this will translate into better earnings towards the back half of this year, not immediately. So immediately you will see in the P multiples over a period of time, you will see earnings estimates coming through. I do see an earnings upgrades hypothesis being strengthened over the next 9 to 12 months by about 2 to 3% incrementally on the back of these transactions coming through. But what this will do is this macro negativity of news headlines impacting India will now shift back to earnings from an Indian market standpoint, which is genuinely good.
Okay. So, but we're still talking about long returns of plus or minus, plus of about plus 2 to 3 percentage points over nominal GDP. Is that fair?
That's the change in earnings estimate. Ultimately, what you will do is the markets will put a multiple to it, and hence the returns will be maybe higher than that. But certainly, we do see a better earnings scenario over the next 12 to 15 months on the back of this.
Okay, very interesting. All right. So a lot of positives to take from that conversation. Srideep, thanks so much for taking the time, and I think it's a good time to be an investor in India, as it always has been. It's just reinforced by the kind of move that you've seen in the equity market today.
Thank you.
A lot of you will look at your portfolios at the end of today and it'll bring a smile to your face. Today more than anything else, and that's because the positivity that has come about after the signing of the US-India trade deal has flowed through into equity markets. But what learnings can you take from the last year and a half or so, and how should you adjust your portfolio strategy so that you can get the most of the rally that is expected to pan out over the next several months? I'm joined today by Mohit Gang, who's a co-founder and chief executive officer of Moneyfront. Mohit, thanks as always for taking the time. First, I'm sure that a lot of people might have called you, or you've spoken to some of your clients. What is the message that you're giving them today?
Oh, I think the message is there for everyone to take, Alex. Thank you so much for having me out here. And it's written on the walls that if you sit patiently, you wait for the opportune moment, there is enough and more money to be made in the markets. And if you are the one who gets perturbed with every movement of the market, has the itch to keep changing your asset allocation, has the itch to keep flipping your funds, keep redeeming out of it in bad cycles, and keep entering in when you think everything's going fine, I think you're not the one who will make money. So this is a timeless lesson which the markets have given to all of us. For last 18 months, we haven't done anything. We've just been in a tight range, some minor ups and downs and nothing much. And today, suddenly, with just one flash of a news, we don't even have time to enter the markets now. So this is classic markets, Alex.
Yeah, I was looking at it. 7th of August last year was when the initial 25% tariffs came into play. And 27th of August was when that penalty of 25% additional tariffs came into play. And the Nifty 50, as of close on the 6th of August, as of yesterday, the difference was that the Nifty 50 was up 2.1% from that point. And the broader markets were actually, the mid-cap index was down 2%, the small-cap index was down as much as 10%. Quite a bit of that has changed quite dramatically. Now we've gone above, once again, that level that we were on the 6th of August. But the portfolios that a lot of people had constructed, Mohit, had tended towards the small cap funds, right, at the start of 2025. And those have likely changed over the course of 2025 and heading into 2026. Do you think that's the case?
Oh, absolutely, Alex. I think on the back of a great 23 and 24, I think every investor and their relatives and their neighbors and everyone kind of got extremely overconfident in the market, heavily loaded their portfolios towards mid and small caps, heavily loaded towards micro caps, unknown names. and they were rewarded for a long while till 2024, and suddenly the script changed in 2025, and small caps were the worst performing bet on the street, as you rightly mentioned, and since then they've never seen light of the day. Honestly, I think, again, as I said, timeless lessons in investing, that you cannot get overconfident and over dependent on any single asset class, and you cannot be just going by the past returns always and thinking that same will continue in future. Heavily load yourselves into one particular segment or one particular market cap or one particular sector, right? So small caps still continue even today, even after the news today, Alex. I think small caps are under some kind of pressure just because the valuations have become extremely frothy, right? And again, last year, if you compare, large caps were the ones which gave investors at least some somber returns in an otherwise very despair kind of a situation, right? So if you were clutching onto the right stocks, if you had the asset allocation right, if you were having some amount of allocations towards large caps, the flexi caps, then you had a decent going even in 2025, and you weren't like heavily disappointed. But otherwise, it's not the case.
Okay, so let's talk about what you should do from this point on, because Mohit, the tendency in a underperforming scenario is to stop or redeem. And for those people that I think continued to invest through a systematic route, even if it is in small caps, they will at some point get the benefit of that, because they've been averaging or they've been buying when the unit cost is low. So a lot of people will actually see a quantum shift in their earnings, even if we see a 5 to 7% or 10% increase from this point on. So how would you construct your portfolio right now?
Oh, absolutely, Alex. Look, again, if you had been patient with your portfolio and actually were following your the right allocation strategy, which means that your SIPs continued to go through the course of 2025, whether it be in large caps, mid caps, small caps, depending on how your portfolio was shaped, then obviously you have accumulated a lot of units over this period of time. And now's the time those accumulated units will start rewarding you. Some portion today and maybe coming future months, I think, given at the backdrop of the EU deal and the US deal both happening. And then perhaps by the second half of this year, you should start looking at good corporate earnings also coming back. And the last year's base effect will also kick in. So you will have reasonable numbers this year, right? So the investors and their patience will get rewarded. What should one do now? The second part of your question. Look, I think I would still stick by my asset allocation strategy. As an investor today, I would like to put 80% of my portfolio into core strategic assets, which are long-term in nature, which are meant for my long-term financial goals and needs, like my retirement or some 10, 15-year kind of goals. The second portion, which is my tactical portion, will be 20%. It could be a little lesser for less aggressive people. But that's more for quicker plays and quicker check-in and check-out. But on the strategic part, which is the most crucial part of your portfolio, I would still be largely onto large caps, flexi caps, and large and mid-cap category. So almost 50% of my portfolio I'll put in that bucket, around 20% in mid-caps, some 10% international allocation, can swing by 5% plus minus. Some 10% commodities, can go up to 15, can swing by 5-10%, 5% plus minus, and maybe a little bit of 5 to 10% small caps. Still not very heavily going into small caps. The market setup has to convincingly be extremely rich on valuations, less frothy, and convincingly into a very good happy territory for one to take a larger allocation bet into small caps. And even from a very long-term perspective, I think having small caps limited to around 10-15% odd maximum in a portfolio is a very good way to manage and construct a long-term portfolio.
Okay, so this is very interesting. We are heading into the last leg of the financial year as well. And as they usually say, from a tax standpoint as well, this is a great opportunity for you to correct problems in your portfolio. If you need to rebalance, for example, and if, for example, hypothetically, you've got an overweight on small caps, which you shouldn't have, and if there is loss that you're seeing in that portfolio, you can just book that out and you can set that off against future profit. So this is a great opportunity for you to consider doing that. But I want to ask you within this, and I know that you're a proponent of passive also as a strategy. So out of all of this, where would the passive strategies come into play? And is there room for a multi-asset fund? Because there are people who've taken that commodity allocation and they've said they don't want to take that decision themselves. They want to ask the fund manager to do it. And so they've done it through that route. So where does the multi-asset fit in this portfolio?
The first part, Alex, on the passive side, passives predominantly will form the large cap portion of your portfolio. In the large cap bucket is where I would place my passives. The second placement of passives could be in the international bucket, because there again, I believe that it's very difficult to track so many markets globally. So it's better to have a basket of ETFs or an index-based route, right? And the other portion could be purely active. Now, the second part of your question, which was more related to, sorry, could you just repeat the second part? Multi-asset, yeah. So look, I think it's fantastic to have a multi-asset product in your portfolio if you really don't want to haggle too much between your commodities allocation, your fixed income allocation, your international allocation, so on and so forth, because these are smaller allocations and many a times we get confused as to what to increase and what to decrease in our portfolio. So leaving it to the choice of a dependent fund manager who's professionally qualified and doing this day in and day out, I think it's a fantastic choice. So yes, for investors who don't want to be active enough to take those bold calls, it's good to be lazy and have a multi-asset allocation in the portfolio. So you can combine your commodities, international, some portion of REIT InvIT, even fixed income by a large extent through a single multi-asset window. And I honestly think genuinely that's a great product in any kind of a portfolio, unless you are savvy enough or unless you have advisors who are like really confident to be dealing across all market caps and across all sectoral themes independently. I think otherwise multi-asset is a good choice.
You know, I was speaking to somebody just yesterday and that person was saying that in this kind of scenario, having a higher commodity exposure is not a bad deal. But the advocation was for gold and not for silver. Do you agree or concur?
Oh, absolutely, Alex. In fact, I have a very bold blog which I rolled out around 10-15 days back, saying that we are a bit bearish on silver relatively, and we are structurally bullish on gold. Right. So yes, I continue to believe that for multiple reasons, gold is a revolt against the system. It's a revolt against the US hegemony, against the dollar as a concept of a singular petrodollar currency of the world. It's a revolt against a lot of geopolitical events which are happening. Right. And central bank demand is much more steady, much more stable. The supply of gold isn't so abundant. It's not easily replenishable. And for 5,000 years of human history, gold has withstood all kinds of pressures and still stands tall as a currency and as a store of wealth. Right. So I'm structurally very bullish given the way the global setup is. So gold, yes, it's a bullish call relatively.
Fair point. All right. Well, that's how you should line up your portfolio strategy. And if there are excesses, this is the moment to correct them. Mohit, thanks so much for taking the time. Pleasure speaking with you.
Thank you so much, Alex.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching and do stay tuned. This is NDTV Profit.
आज हर भारतवासी देश भर में माननीय प्रधानमंत्री नरेंद्र मोदी जी का साधुवाद कर रहा है कि उन्होंने यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ एक बहुत ही बढ़िया ट्रेड डील, जिसका देशवासियों को कई महीनों से इंतजार था, संपन्न किया है। देश हित और जनहित को सामने रखते हुए एक बड़ा मजबूत भारत के भविष्य को चार चांद लगाने वाला ट्रेड डील माननीय प्रधानमंत्री नरेंद्र मोदी जी के नेतृत्व में कल रात फाइनलाइज किया गया है। मैं 140 करोड़ देशवासियों की तरफ से माननीय प्रधानमंत्री नरेंद्र मोदी जी का धन्यवाद करता हूं और आप सभी को बधाई देता हूं, क्योंकि ये वास्तव में भारत की अर्थव्यवस्था को, भारत के 140 करोड़ नागरिकों को, हर गरीब, किसान, मछुआरा, गांव में रहने वाला युवा, युवती, हमारी बहनें, महिलाएं, सभी के लिए ढेर सारे अवसर लाने वाला ट्रेड डील माननीय प्रधानमंत्री जी ने कल तय किया। साधारणतः तो हम पार्लियामेंट में बोलना चाहते थे इसके बारे में, लेकिन हम सब ने देखा वो भद्दा दृश्य, जिस प्रकार से विपक्ष, विशेषकर राहुल गांधी जी के नेतृत्व में कांग्रेस पार्टी और उनके मित्र पक्ष डीएमके, तृणमूल कांग्रेस, समाजवादी पार्टी, कितना भद्दा व्यवहार आज उन्होंने पार्लियामेंट में किया। माननीय अध्यक्ष जी की आसन तक पहुंचकर उनका अपमान किया। मैं घोर निंदा करता हूं विपक्ष की, राहुल गांधी जी की, जिसके कारण हम पार्लियामेंट के बदले आज आपके समक्ष यहां पे जानकारी देने आए हैं। हम सब जानते हैं कि माननीय प्रधानमंत्री जी ने अपने मित्रता के रखते प्रेसिडेंट ट्रंप के साथ जो उनके आत्मीय संबंध है, उसके मद्देनजर जो ट्रेड डील यूनाइटेड स्टेट्स ऑफ अमेरिका के साथ फाइनलाइज की है, वो हमारे सभी पड़ोसी, सभी आसपास के देश, सभी जो देश हमारे साथ स्पर्धा करते हैं, उन सभी देशों में सबसे बढ़िया डील भारत को मिली है। आप सबको, हम सबको मिली है, जो देशवासियों के उज्जवल भविष्य के लिए शुभ संकेत लाती है। हम सब जानते हैं महीनों से हमारी नेगोशिएटिंग टीम्स यूनाइटेड स्टेट्स ऑफ अमेरिका के अधिकारियों के साथ, मंत्रियों के साथ लगातार डायलॉग बनाए हुए थी, बातचीत में कर रही थी। कई सारे जटिल विषय थे, कई सारी समस्याएं थी। भारत के ऊपर 50% रेसिप्रोकल टैरिफ लगा हुआ था। उद्योग जगत को, हमारे किसानों को जो बड़ी मात्रा में निर्यात करते हैं, सभी को तकलीफ हो रही थी। हमारे मरीन एक्सपोर्टर्स, सी फूड एक्सपोर्टर्स भी दिक्कत में थे। वस्त्र क्षेत्र, टेक्सटाइल सेक्टर में भी आवश्यकता थी कि ये रेट कम हो। यहां तक कि कुछ दिन पहले तक विपक्ष के नेता भी हमें पूछ रहे थे कि कब होगा यूएस डील। और मैं हैरान हूं, ये डबल स्टैंडर्ड्स जो राहुल गांधी जी बार बार दिखाते हैं। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने कल इतनी बढ़िया डील भारत के लिए तय की है, जो इतने वर्ष, एक महीनों में हम तय नहीं कर पा रहे थे। उन्होंने अपने मित्रता के आधार पर भारत के हितों को प्राथमिकता देते हुए और भारत की तेज गति से बढ़ती हुई अर्थव्यवस्था को विश्व के सामने जिस प्रकार से पेश किया है, उसके चलते भारत को ये बढ़िया डील माननीय प्रधानमंत्री जी के नेतृत्व में मिली है। मैं पुनः एक बार उनके नेतृत्व के लिए, उनके मार्गदर्शन के लिए और जिस प्रकार से उन्होंने जनहित और देशहित को संभाला है, उसके लिए उनका धन्यवाद करता हूं। मित्रों, हम सब जानते हैं, पूरा देश जानता है किस प्रकार से माननीय प्रधानमंत्री हमेशा हमारे किसानों के लिए पशुपालन के साथ जुड़े हुए हमारे भाई बहनों के लिए, डेयरी सेक्टर के लिए लगातार चिंतित रहते हैं, उनके हितों की संरक्षण करते हैं। यहां तक कि हमने देखा इतना बड़ा ट्रेड डील, रीजनल कॉम्प्रिहेंसिव इकोनॉमिक पार्टनरशिप आरसेप, जिसमें कांग्रेस ने भारत को झोंक दिया था 2011-12 में, एक प्रकार से चाइना के साथ एफटीए करने का पाप राहुल गांधी ने किया था। उससे भी माननीय प्रधानमंत्री जी ने देश को बचाया और आरसेप से जुड़ने से इनकार कर दिया, जिसके बाद पूरे देश में राहत की सब चारों ओर से सूचना आई थी। माननीय प्रधानमंत्री नरेंद्र मोदी जी ने हमेशा एग्रीकल्चर और डेयरी, इन दोनों सेक्टर्स को संभाला है, उनके हितों को संभाला है और इस क्षेत्र में लोग और डेयरी, इन दोनों सेक्टर्स को हितों को संभाला है और इस क्षेत्र में लोगों को उज्जवल भविष्य मिले और मौके मिले, आमदनी बढ़े, उसके लिए लगातार काम किया है। कभी उनके साथ, उनके हितों के साथ समझौता माननीय प्रधानमंत्री जी ने नहीं होने दिया और मुझे खुशी है कि पूरा देश इस बात को समझता है, इस बात का उनको आकलन है और यूएस ट्रेड डील में भी भारत के जो सेंसिटिव सेक्टर्स हैं, एग्रीकल्चर को लेके, डेयरी को लेके, उनको संरक्षित किया गया है। हमने पूरे देश भर से आई हुई खबरों को देखा, चारों ओर उल्लास है। हमारे जितने लोग भारत के निर्यात में जुड़े हुए हैं, भारत के टेक्नोलॉजी सेक्टर से जुड़े हुए हैं, भारत में नई आधुनिक टेक्नोलॉजी लाकर या ग्लोबल सप्लाई चेन्स, ग्लोबल वैल्यू चेन्स का हिस्सा बनना चाहते हैं, ग्लोबल कैपेबिलिटी सेंटर्स लगाना चाहते हैं, निवेश करना चाहते हैं। अलग अलग क्षेत्र जो विशेषकर लेबर इंटेंसिव है, जिसमें लाखों करोड़ों लोगों को नौकरी का, रोजगार का साधन मिलता है, वो सब कितने उत्साहित हैं इस ट्रेड डील से। हमारे मछुआरे जो सी फूड एक्सपोर्ट करते हैं, उन्होंने जिस प्रकार से सभी कोस्टल रीजन्स में खुशी मनाई है, ये दर्शाता है कि ये ट्रेड डील भारत के उज्जवल भविष्य का शुभ संकेत लेके आई है। मित्रों, मैं मानता हूं कि इस ट्रेड डील से हमारे जो सूक्ष्म, लघु और मध्यम उद्योग है, एमएसएमई सेक्टर है, हमारे इंजीनियरिंग सेक्टर के सभी प्लेयर्स, चाहे ऑटो कंपोनेंट्स बनाते हो, एयरक्राफ्ट पार्ट्स बनाते हो, इंजीनियरिंग के अलग अलग प्रकार के सामान अमेरिका में बेचने का काम करते हो या भविष्य में करना चाहें, हमारे टेक्सटाइल क्षेत्र, हमारा जेम एंड ज्वेलरी सेक्टर, हमारा लेदर गुड सेक्टर, हमारा मरीन गुड सेक्टर, सभी को ढेर सारे अवसर, ढेर सारे मौके इस ट्रेड डील के माध्यम से मिलेंगे। बड़ा दुर्भाग्य है कि राहुल गांधी जैसे नकारात्मक सोच रखने वाले नेता देश को आज गुमराह या भ्रमित करने की कोशिश कर रहे हैं। मैं घोर निंदा करता हूं राहुल गांधी जी की। झूठ और फरेब के नाम पे वो लोगों को गुमराह करना चाहते हैं। उनको देश की तरक्की से कोई लेना देना नहीं। देश आगे बढ़ रहा है, विश्व की सबसे तेज गति से बढ़ने वाली अर्थव्यवस्था बना है, उनको उससे कोई दिलचस्पी नहीं है। उनका बस चले तो जिस प्रकार से यूपीए के राज में, कांग्रेस के राज में 10 वर्षों में उन्होंने भारत की अर्थव्यवस्था को ध्वस्त कर दिया था, फ्रेजाइल 5 इकोनॉमी बना दी, महंगाई से लोगों को परेशान कर दिया, विकास यात्रा ठप कर दी। उनका बस चलेगा तो भारत को फिर एक बार उसी प्रकार से देखना चाहेंगे। और मुझे नहीं लगता भारत का एक भी व्यक्ति, एक भी नागरिक उनके इस भ्रामक सोच के साथ अपने आप को जोड़ सकता है। राहुल गांधी जी एक नकारात्मक सोच के प्रतीक हैं और उनके साथ जुड़कर डीएमके पार्टी के नेता हो, तृणमूल के नेता हो, चाहे वो समाजवादी पार्टी के नेता हो, इन सभी ने शायद भारत के उज्जवल भविष्य, हमारे युवा युवतियों को जो नए अवसर मिल रहे हैं, जो हमारा उद्योग तेज गति से आगे प्रगति करने के लिए तट पर है, जो नए नए क्षेत्र, आर्टिफिशियल इंटेलिजेंस हो, सेमीकंडक्टर्स हो, क्रिटिकल मिनरल्स हो, नए नए अति आधुनिक जो क्षेत्र खुल रहे हैं, उसमें जो हमें यूनाइटेड स्टेट्स ऑफ अमेरिका से मदद मिल सकती है, जो वहां से हमें सामान मिल सकता है, हाई क्वालिटी हाई परफॉर्मेंस डेटा सेंटर्स भारत में आ सकते हैं, लाखों करोड़ रुपए का जो निवेश हम भारत में आकर्षित करने में जुटे हुए हैं। राहुल गांधी जी को क्या मिर्ची लगती है? राहुल गांधी जी को देश की प्रगति से नफरत है? राहुल गांधी जी को हमारी बहनों से, हमारे युवा युवतियों से कोई नाराजगी है, जो उनका उज्जवल भविष्य उनसे देखा नहीं जाता है? उन्होंने जवाब देना पड़ेगा देश की जनता को कि इस नकारात्मक सोच के पीछे वो क्या चाहते हैं। और मित्रों, मैं पूरी तरीके से निंदा करता हूं राहुल गांधी जी और उनके सभी पार्टी और मित्र पक्ष के नेताओं का, जो इस प्रकार की ओछी सोच, नकारात्मक सोच फैलाने का पाप कर रहे हैं। वो भारत का उज्जवल भविष्य नहीं चाहते। वो हर प्रकार से राजनीतिक अराजकता फैलाने की कोशिश करते हैं। पार्लियामेंट में आपने उनका रवैया देखा, उनका सोच पूरे देश ने देखा। वो हमारे आर्मी के जवानों पर कम विश्वास करते हैं, हमारे सेना के ऊपर प्रश्न चिन्ह उठाते हैं, हमारे उद्योग जगत के भविष्य को खराब करना चाहते हैं। मुझे लगता है अब समय आ गया है कि देश की जनता, राहुल गांधी जी हो, ममता बनर्जी जी हो, चाहे तृणमूल के अभिषेक बनर्जी हो, या तमिलनाडु के एमके स्टालिन, उदयनिधि स्टालिन, बालू, श्री बालू जी, श्री मारन जी, कानीमोजी जी, कम्युनिस्ट पार्टी के नेता, समाजवादी के अखिलेश यादव जी, देश की जनता इन सब नेताओं से माफी मांगेगी और उनको जवाबदेही ठहराएगी उनके इस नकारात्मक रवैये के लिए। वो जनहित के पूरी तरीके से खिलाफ है, वो देश की प्रगति, देश के उज्जवल भविष्य के खिलाफ है। अनाप शनाप आरोप लगा रहे हैं और जिस प्रकार के विषय उठा रहे हैं, एक नेता ने पूछा, अमेरिकी अध्यक्ष ने, अमेरिका के राष्ट्रपति ने पहले क्यों ट्वीट किया? अरे भाई, रेसिप्रोकल टैरिफ तो अमेरिका ने लगाया था, अमेरिका ने रेसिप्रोकल टैरिफ कम करना था। तो जब उनको टैरिफ कम करना है और 50 से सीधा 18% इतना कम हुआ, तो उसकी जानकारी तो उधर से ही आएगी। स्वाभाविक है कि उनको टैरिफ कम करना है तो उसकी जानकारी राष्ट्रपति माननीय डोनाल्ड ट्रंप जी देंगे। और इस मौके पे मैं माननीय राष्ट्रपति डोनाल्ड ट्रंप का भी धन्यवाद करना चाहता हूं, जिन्होंने प्रधानमंत्री नरेंद्र मोदी जी के मित्रता का सम्मान किया। उन्होंने माननीय प्रधानमंत्री नरेंद्र मोदी जी को विश्व का हमारे स्पर्धा वाले देशों में सबसे अच्छा बढ़िया ट्रेड डील दिया और आगे चल के भारत और अमेरिका के बीच संबंध और मजबूत हो और उज्जवल भविष्य दोनों देशों के लोगों का हम सुनिश्चित करें, उसकी शुभेच्छा दी। और मुझे पूरा विश्वास है कि ये जो ट्रेड डील की गई है, ये मात्र एक ट्रेड डील नहीं है, ये एक पड़ाव है भारत के उज्जवल भविष्य का। ये आगे आने वाले दिनों का शुभ संकेत है, जब भारत की अर्थव्यवस्था और तेजी से आगे बढ़ेगी। आज चारों ओर इसकी सराहना देखने को मिलती है। कल रात से ही जिस प्रकार से देश और विदेश में लोग इस डील की तारीफ कर रहे हैं, जिस प्रकार से चारों ओर लोग सेलिब्रेट कर रहे हैं भारत और यूनाइटेड स्टेट्स ऑफ अमेरिका के बीच ये डील, मुझे पूरा विश्वास है कि ये जो जनता ने ठुकराए हुए नेता हैं, द फेल्ड ग्रुप ऑफ disparate, disgruntled and rejected leaders of the Congress party and their friends in the DMK, Trinamool Congress, Communist parties, Samajwadi Party, the entire India Alliance leaders who have failed India very badly, who have failed Bharat in all respects, will be rejected by the people of India, who will teach them a lesson for their negativity and for their anti-India, anti-national thinking. Friends, we stand for the people of India, we stand for national interest, and today 140 crore Indians are celebrating a trade deal which is under final stages of detailing between the negotiating teams of both countries. We will be shortly issuing a joint statement by both countries along with the details which we will be shortly inking between the United States of America and India. And as soon as the final understanding of the deal is inked and the joint statement is finalized, technical processes are completed, full details will be shared. But I can assure the people of India, I can assure 140 crore brothers and sisters that this is a deal that will make every Indian proud, that will protect the interest of every Indian and provide huge opportunities for all the people of India and will protect the sensitive sectors, the interests of our agriculture and our dairy sectors in full respect, opening up huge opportunities for our labor-intensive sectors, export sectors in textiles, plastics, apparel, home decor, leather and footwear, gems and jewelry, organic chemicals, rubber goods, machineries, so many products, aircraft components. This is truly a deal that every Indian can be proud of. India is a fast-growing economy. We are the fastest growing large economy in the country, in the world. India's demand is continuously increasing. Our demand for ICT products, our demand for data center equipment, our demand for high quality technology and innovation, our demand for raw materials is continuously rising. And in that situation, this deal also opens up opportunities for India to get the best in class, world class technologies to further power the India growth story, the Indian economy. I commend this deal to every Indian, to 140 crore Bharatvasis. Thank you very much.
Well, you heard it from the Commerce Minister, Piyush Goyal, addressing media over there. Now thanking the Prime Minister for bringing us the deal with the US. Of course, there was a barrage that was set against the opposition for the kind of statements that have been made, and he justified why it was Donald Trump, the American president, who went out first to announce this deal. And this happened last night. He says, of course, it was the Americans who had to announce the deal because they were the ones who had imposed the higher tariffs. So it was just right, he says, for the Americans, for American President Donald Trump to put out that entire deal first, before the Indian side did. But indeed, as far as the statements coming through from Piyush Goyal, the Commerce Minister, in that media conference are concerned, he says the teams have been negotiating. The US officials have been at it along with the Indian officials for months, he said. And indeed, he has talked about the many issues and the complexities that were involved in getting this deal through. He says some technicalities have to be gotten through, but also he very clearly mentions that there will be a joint statement. The US and the Indian side are going to have a joint statement about this deal. So not much more clarity coming in. All the details of the deal, they haven't come out yet. And I believe from what the Commerce Minister is saying, this will come out only when the technicalities are through and when the two sides are ready for a joint statement. But he says, overall, he says, this is going to be very good for the labor-intensive sectors. And they are going to be excited about this deal. He talks about industrialists and farmers who are suffering. But let's go across to S.C. Ralhan. He's joining us right now to decode what the Commerce Minister has said. Mr. Ralhan, good to have you with us. What's your understanding of what we've heard? Because we were expecting more clarifications, more details of the deal, but we don't have that yet. It would likely come in a statement and a joint statement later, which is what the Commerce Minister has indicated. But what are your key takeaways from what Piyush Goyal has just mentioned? Mr. Ralhan.
Yeah.
Mr. Ralhan, I was just about asking you from Piyush Goyal's side, when he talks about this deal having gone through, but there are technicalities, and he says there is going to be a joint statement. We were expecting more clarifications on the deal. We haven't got those yet. What's your reading of this?
No, we are also waiting for the executive order. Normally it comes after the announcement of the deal. So first of all, I would like to congratulate and say thanks, big thanks to the Honorable Prime Minister and Shri Piyush Goyal ji. It is all their efforts. And the whole industry is delighted now. Lot of units were totally closed, though whose exports were 100% to the US. But I think they have a big relief on their chairs. I can see, and we are also celebrating by giving the party to few of my friends. No.
So when you're celebrating, when there is a party that is underway, Mr. Ralhan, which is the sector that is partying the most right now? Who is most euphoric for the kind of deal that has been struck? We're still waiting for the details, but tell us, because from what Piyush Goyal is saying, that this is very good for the labor-intensive sectors, and that part is going to be very excited about this deal, is what we got from Piyush Goyal.
Absolutely, the exports will increase. I think he is right, whatever he says. So they should give a complete report and kindly explain all the HS codes which are under this deal.
About MSMEs, engineering goods, textiles, leathers.
Everything, MSME, auto parts, hand tools, everything is all, the people are very happy. I can't explain you. The people, I mean,
but explain the
a lot of
happiness
people
to
are
us.
congratulating me.
Yes.
I said, why you congratulating me? I mean, we are all congratulating each other.
Correct. No, but sir, tell us, because from the exporter's perspective, at this stage where we are at, the last time when we were doing business with the US, we were around the 5 to 6% mark. Now, after it went all the way up to 50%, now we've come down to 18%. Yes, in comparison to many of our competitors, we are on a very strong footing. But what's the euphoria about, and which are the sectors that are most euphoric now that this deal is done?
The most benefit is going to the apparels, garments. I mean, the next comes the auto parts, then hand tools, and all other items. Fisheries, I mean, the very important is the fisheries. These are almost stand still after the tariff of 50%. And leather, of course, yes. Leather will be the biggest beneficiary. Since we are one of the lowest in all our Southeast countries, all against our competitors, I think the people will start thinking about it, and the orders will start coming, not very, very soon.
Right. So the orders will start coming very soon. Typically how this moves, and David Roche is joining us as well, perhaps I can turn across to him. With this kind of euphoria that the exporters are enjoying here in India, I'm just wondering from the American side as well, whether they share this kind of euphoria as well about the access or the added access they're going to get to the Indian markets. Is this more than just the markets? David Roche.
Well, I feel rather like a Grinch who didn't get to the party, which is obviously going on in India about all this. But I have a much more sober reading of it. I would say two things. Number one, we have to wait for the details. In the case of the deals with Japan and India, that was weeks, not minutes, before we got the details. So I don't really know what has happened to things like access to agricultural markets for US goods. I just don't know where we are. But I would say this, look, I'd like to put this in a wider context. India has really done very well over the last couple of weeks. Number one, they've done the deal of a lifetime with the European Union, which takes just as much of Indian exports as America does, or almost as much. And now it's got Trump to back down on his tariffs. So the original calculations of what the damage these tariffs would do, the oil tariffs and the other tariffs, was about 1.6% of GDP. So let's say half of that is gone. Well, you've just added 0.8% to Indian GDP, which is not immaterial in an economy which is going to be growing at 6 or 7%, and which is already going to be boosted by additional trade with Europe. So look, it's very good. No doubt about it, very good. I'm not going to tell you how good it is really, because I don't have the details, and neither do you. But I would say one final word: do not trust Trump. That's today. You do not know about tomorrow. And I think the problem is that the volatility of politics in Washington probably means you're okay for a while, but it does not mean that that volatility or the politics of threatening has gone away.
We have Chandrakant Salunke joining us. He's president of the SME Chamber of India and India-US SME Business Council. Good to have you with us, Mr. Salunke. Perhaps you were listening in to what the Commerce Minister Piyush Goyal was saying at that media conference as well. Particularly when he talks about MSMEs, he's talking about engineering goods, textile, leathers, jewelry sectors, that all of these will be presented with many opportunities in this trade deal. That's what we heard him say. How are you reading this in terms of the opportunities? How much of the pickup is going to be there after this entire lull period, after this entire period where we didn't know where this is going to go, especially with our trade with the Americans?
This is rather in a very good time, and the Dhurandhar time, we can say. The Dhurandhar deal, what we are mentioning on your projecting you are now. The point is, this is a very very good news for the manufacturers, particularly from SME sector. I will be thankful to the Sri Narendra Modi ji, our Prime Minister and President Mr. Tam, for particularly for providing this opportunity to MSMEs. Those are involved in manufacturing, those are involved in exports. So we were having some little bit fear about what will be the future of MSMEs. Those are already enjoying the banking finance from the for the particular business purpose. They will become NPA, but somehow we have started exploring new markets in other countries, and especially thanks to the Honorable Prime Minister of India, that the mother of deal, the FTA we have signed earlier, and that because of that we have started very good initiative, particularly to finding new market. But nevertheless, America is attractive. America is very good for our business, and of course this is a live project, or particularly those have already invested in US, already American companies invest in India. So I'm sure that this will be a good news, a good atmosphere created by both the dignitaries. And let us see whatever my friend said from America. We have to wait for some time for a executive order or the final decision on how this will be utilized, and especially for the purpose of the industrial purpose.
So it's going to be very interesting to see how exactly the agriculture and dairy part are going to be dealt with, Mr. Salunke, because Piyush Goyal has spoken about this as well. Prime Minister Modi, he says, has always protected the interests of farmers and livestock holders and dairy farmers. Is that a point of concern until we get more clarification and more details, Mr. Salunke?
Of course, we are waiting because our mainly the production from the rural area, and this will be help to the rural entrepreneurs, particularly the cooperative industry, particularly the small farmers, small enterprises. You must be seeing that most of the startups from the rural area, they have been involved in our dairy, agro processing, food processing, and this will be a good opportunity to enter in US market. Now the China is struggling rather to enter in the US market again. They are struggling to connect with the right business partners. This is the right time to explore further business opportunity in US market, especially for the engineering products, dairy products, also the textiles, garments, marine products, and this will be an opportunity for Indian industry. But we are also studying, we are also looking seriously on what kind of the hurdles will be there, what kind of rules, regulation they will be imposing, because reduction of the tariff is part, but how they are reducing the other things that we want to understand.
Fair enough. So it has been, as far as all that has happened so far, a bruising year for tariff brinkmanship. India and the US now have finally sealed a trade deal. The headline number is hard to miss. Reciprocal US tariffs on Indian goods dropping to 18% from 25% earlier, and from as high as 50% during the flare-up that happened earlier last year. But the announcement followed a phone call between President Trump and Prime Minister Modi, both leaders hailing it as an immediate reset of ties. And there is also the energy subplot. Washington claims that New Delhi has agreed to halt Russian crude purchases and step up American energy buys, potentially Venezuela too. And that is part of the thaw, at least that's the American version. Details and sequencing is going to matter in the fine print eventually. But the question is, how have we cracked this right now, this deal, the timing? In the last 12 months, India has reeled off a run of trade pacts. The United Kingdom, Oman, New Zealand, European Union just days ago, and now the US. So many in Delhi and Washington, D.C. are saying that the EU FTA, the mother of all deals, has helped unlock Washington to close this deal. Net-net, India is repricing its place in global trade. The markets have voted with their wallets today. The rupee has logged its best session in years. The equities have ripped higher. Tariff uncertainty is cleared now. So even as analysts are cautioning that execution and the fine text of this deal are going to matter, the markets are on a tear. On the ground, who stands to gain? We've spoken about these. Early winners include textiles and apparel. Besides seafood, auto ancillaries, chemicals, gems and jewelry, where price competitiveness in the US market improves immediately. But here is the caveat as well. Section 232 duties on steel, on aluminium and some auto parts, they can still bite at 25 to 50%, even after today's handshake that we are talking about. So the bottom line Is that a strategic de-escalation with America, a trade competitiveness nudge against regional peers, and a sentiment reset for the Wall Street and the Indian currency? So now the big questions are about durability and deliverables and downstream effects on energy security for one, also the export orders as they come through. So we've asked India Inc. what this really means in the trenches. Fabrics, fine chemicals, all of them. Listen to what they've told us just before we set off this debate with our panelists who are joining us on the big question.
India and America are extremely aligned, and I think this shows the strength of that alliance partnership and puts us back in the right context in a stronger position to grow our business. So I think this is good news. It puts a lot of clarity and it takes away any overhang that one may have.
So we're importing from India. We're subject to pay this additional 25% of penalty tariff, and compared to our competition who are mainly in 19 to 20% range, we were paying a reciprocal tariff of 25%. So that will give almost a differential of 30% higher tariff if the goods are going from India. With this announcement of last night, definitely that takes it off. In fact, it gives India an advantage of 2% compared to the competition of Bangladesh, Cambodia, Vietnam, Indonesia, these kind of countries.
See, there's no limit now because, the opportunities are very high. See, now we signed the agreement with the EU, European Union. That itself, I don't think, we can take 10% of that demand. So now with the US agreement, the opportunity is going to be, sky is the limit. There's no limit. Anybody invest on the garment sector, now this is the best time.
This was something that the industry long awaited, and it's a huge positive for the country and for the sector in general. US accounts for $6 billion worth of chemical exports from India. It's roughly 20% of country's total chemical exports. So on that, bringing tariff down all the way from 50+% to 18%, I think gives a lot of relief plus a lot of certainty. I think a lot of decisions around growth, capex were kind of in a holding pattern mode over the course of last 9 months. And I think this deal will give a huge push towards that. So very positive for the sector.
So the industry voices are saying it, that now we are seeing that much more certainty. When you talk about the American deal that the Indians were striving for, that was in the balance, now we are getting some clarity on it. Yes, more clarity is required, but at this point, now that we have a trade deal, a lot of that uncertainty goes out of the window. It also begs the big question that we're asking today. Now that we've got some 5 deals going in the last 12 months, including the deal with the US, does this mean that our place in the global trade order is changing? Which is why we're asking, has India changed its place in global trade? And for that, we have an excellent panel to discuss this with. Let me introduce you to them. Well, we've got Chandrakant Salunke with us, President of the SME Chamber of India and India-US SME Business Council. Pradeep Mehta is also with us, Secretary General at Cuts International. He's NGO Advisor to the Director General at the WTO. S.E. Ralan with us, President of the Federation of Indian Export Organizations, the FIEO. Anubhuti Sahai is with us, Head of South Asia Economics Research at Standard Chartered Bank. And David Roche is here, Global Strategist at Quantum Strategy. Gentlemen, thank you very much for making the time. Chandrakant Salunke, first to you. With these American tariffs on Indian goods now cut to 18%, of course, from 50 and 25%, but what's the one immediate barrier that you see that SMEs are still going to face to convert this relief into firmed up American orders? Whether it's to do with compliance or logistics or working capital, where do you see the problem here?
The problem will not be much there because we have been supplying or exporting to the US market, and most of the exporters are aware about the their rules, regulations, hurdles, and compliances, and all the performance basis. Particularly now, this is a good time to learn more about it because the Trump administration have been defining and calculating the ecosystem for the imports. So therefore there will be some little bit hurdles will be there, but nevertheless Indian entrepreneurs, Indian exporters are very well knowledgeable, very well equipped with the knowledge and services. And of course our government of India, particularly Commerce Ministry, is behind our entrepreneurs and exporters to educate them, support them, provide hand-holding. You must be seeing that last 1 year, everybody was under the pressure, and therefore the government started finding the new emerging market, and therefore that is the outcome for the tariff imposed by the honorable President Mr. Trump on India. That's why we had gone for the instantly various deals with the various countries. FTAs is signed, the mother of deal with the European Union. That is the initiative taken by the government, and rightly taken, because we have to achieve the Viksit Bharat. Without Indian SME, without manufacturers, and without exporters, it will not be done. So I'm sure that whatever the mention you are mentioning, the picture you're showing with the Mr. Modi and Trump, ye dosti nibhayenge. So I'm sure that they will, particularly follow the friendship between both of them, both the leaders, and to provide a level playing field for the Indian industries, Indian SME sector, Indian exporters.
So you sound very confident. Pradeep Mehta, are you as confident? This deal narrative also includes the US claim that India is going to halt Russian crude and step up American/Venezuela energy buys. How do you think India is going to sequence any kind of energy shift to preserve policy autonomy while locking in market access gains?
So you're asking me a question?
Pradeep Mehta.
Oh, Pradeep.
Pradeep Mehta is not with us. Let me take that across to Mr. Ralhan, because as far as crude oil is concerned, we don't have clarity yet. And this, what we've heard from the American side, is only about halting Russian crude and stepping up the energy buys from the American side or the Venezuelan side, which is what we got from Mr. Trump when he put out that first tweet. How do you think India is going to make that transition? Do you see that as an easy process? Do you think that we could have got a good deal on the oil front as well, where we hold our ground?
I think Trump must be satisfied with whatever we are buying from Russia. That's why he declared such a big announcement. Yes, I agree. A lot of things are yet to be looked into. After the executive order, what are the rules and regulations? What are the other issues? I mean, that's the executive order is very, very important. That's what we are waiting. But as far as the Russian oil is concerned, I think it is very nominal. I don't cover that basically, but I think the Trump should be satisfied by whatever we are buying from Russia. There should not be any problem.
I'm just getting breaking news on the channel, so let me just apprise you of what I'm hearing right now, that India may get some concession under Section 232 is what I'm picking up. So Section 232, of course, includes steel, aluminium and copper. The US Section 232 duties, they remain around 50%. Some auto components as well, tariffs might still be 25% or around that much is what I'm picking up. Mr. Sajjanhar, so as these details come through, because the clarification hasn't come through, and we're looking at more and more speculation that's taking place on how exactly the deal structure is going to be. Of course, there is going to be a joint statement, but tell us, in your understanding and experience, when we talk about Section 232 and India may get some concessions under it, but there could be some exclusions as well. When you talk about steel and aluminium and copper, these are quite crucial, wouldn't you say?
Yeah, thank you very much, Vikram. Yes, you're very right. These are very critical, and we have had suffered this pressure from the United States even during Trump 1.0. So, we are quite familiar with what this can entail. But then even in the last term, we were able to, overcome these issues, and we were able to maintain and retain our exports of steel, aluminium, etc., etc. But if you permit, if I could, just come in on the question that you had raised about the energy security and India's purchase of oil from United States and Venezuela and Russia. So, first, as far as Venezuela is concerned, we have always been buying oil from Venezuela. We have refineries in India which are capable of dealing with the heavy crude that comes from Venezuela. Not very many refineries in the world are equipped to deal with that. We are able to, and that is why, we were buying oil from there. Of course, the quantities were not all that large, not only because of the sanctions that were imposed, but also because the production of oil by Venezuela, because its infrastructure is not very well developed, it couldn't, bring up so much of oil that we could pick up from there. Now, of course, there are investments. If the production increases, then India would definitely be in the market. As far as the United States is concerned, you would recall that even in Trump 1.0, we had considerably, significantly increased our offtake of LNG and oil, shale oil from the United States. And even in the first few months when Mr. Trump came to power, we have been increasing that. We are at the moment importing our energy from 41 countries. So, whatever energy we get about 85% of our oil, 45% of our gas from different, from importing sources. So whatever we are able to get from the United States, from Venezuela, we'll be able to deal with that. And also, as far as Russia is concerned, I'm sure, companies which are under sanction, for instance, Rosneft and Lukoil, that of course our companies will not go to them. But otherwise, whatever else is available, and depending upon the pricing and depending upon the quality of oil, I'm sure we will continue to buy oil from there. Maybe the quantities might come down. I think in December we were importing about 35% of the oil exported by Russia, and it might come down depending upon global circumstances.
Right. So, I mean, of course, from the American side, we've heard that there could be a complete stoppage as well. Now, how much that is part of the deal, that we've heard from the American side, but no clarity from the Indian side yet. But talking about oil, we have to talk about the impact on the Indian currency as well. Anubhuti Sahai, perhaps you can tell us, the rupee has logged its best session today in years. Equities have, of course, ripped higher after the announcement took place. But what's your 3-month base case for INR now and bond yields if this tariff clarity is going to sustain? And assuming that the RBI is going to lean against excessive appreciation, how do you think this is going to play out on the Indian currency, which faced a lot of volatility at one level, but also a lot of depreciation? And many of the factors that many have been talked about is because there was no clarity on an American deal, a trade deal with them.
Sure. If you look at the whole this whole development, this is definitely a big positive. Clear skies for the currency, which has been under pressure on a host of factors. But I would say that in the last couple of months, a lot of pressure was coming on the negative sentiment as trade deal was not been finalized. So it is definitely a big positive. Let me break down our view on rupee from a short-term perspective and a medium-term perspective. Over next couple of months, that is by March end, our view is that there is further room for rupee to appreciate, probably towards 89 or 89.50. This is on back of one, trade deal announcement. Second, this is also a quarter where we have a positive seasonality, which effectively means that we export a lot better than what we import. And as a result, our trade deficit is one of the narrowest in this quarter. In fact, this is a quarter where we have also seen trade surpluses. So these two factors put together is clearly likely to push rupee to a stronger level. And while we expect the Reserve Bank of India to collect dollars in order to boost its FX reserves, we think they will be okay to allow two-way volatility and allow rupee to appreciate, because two-way volatility helps in the appropriate hedging behavior. From a medium-term perspective, when we say medium-term, let me put a quarter. So for December 26 end, our forecast is for 93 rupees. And it is primarily coming on back of a few factors. One, we have a view that dollar either would be slightly stronger or would trade sideways. Secondly, we are little concerned about the FDI flows, which have plunged a lot primarily because of outflows. Gross inflows still continue. And this trade deal, while being a positive, is unlikely to turn them around back towards, say, an average of $20-25 billion, and definitely far away from the $40 billion peak, which we saw at the end of March 2020. And the pressure on rupee, the pressure on net dollar inflows is likely to remain, while next 12 months we should see a positive dollar inflows versus 2 successive years of negative inflows. We think the pressure on rupee to weaken from a medium-term perspective still remains, but far more contained than what we have seen in the past couple of months. From rates market perspective,
I'll just come to you about the rates market, but David Roche, since we're running out of time as well, I just wanted to ask you, considering how the Indian rupee is moving, considering Anubhuti is also talking about the pullout of FDIs. As far as FIIs are concerned, we've seen that happen over a period of time. And yet we are wondering whether India is in a more commanding position to get what it wants in trade deals. Yes, relative to Vietnam, around 20%, Bangladesh, around that much. India now is sitting at 18% when you talk about this trade deal with the US. So now it's about the durability of this competitiveness window. If the US is recalibrating us against the others, where do supply chains actually shift in 2026? How much of that is going to be coming to India, which is going to have a ripple effect on our economy in the way our currency behaves as well?
Wow. Well, I mean, that is one hell of a question. I'll give you my answer. I think the level at which we are told Indian tariffs, US tariffs on India are going to settle, compared to places like Bangladesh, Vietnam, which you showed on your screen a little while ago, I don't think that is enough to lead to a reallocation of supply chains towards India. I think India is picking up supply, factories, etc., because it is making progress as a production center. But I don't think this is going to be tariff driven. So I would say don't bet too much on that. I think obviously the tariffs are good news. It would be very foolish to say they're bad news if they come down. But you do have to remember that there are two things out there that can influence things. Number one, the transactional approach to international relations and economics and geopolitics has not gone away.
Right.
And you can see further disruptions from further places. The second thing is, don't forget that all is not well in the United States. Yes, it's a nice place for you to sell your products, and I'm sure it'll go very well. But I would say that the volatility of things in the US could get much worse this year and quite possibly lead ultimately to a recession, which then works back through your new competitiveness in terms of the market to which you're selling not doing very well.
Right. No, that's a fair point. But in that sense, have we kind of decided that we are not going to put all our eggs in one basket? The EU FTA is one part of that story. Ashoka Sajanhar.
Look.
You were saying?
You've been doing that for the last 2 years, and it's very clever. You should not fall into the honey trap of any single global hegemon. And you should keep doing that because, as you can see today, it pays.
It does.
So carry on.
It does. Mr. Sajanhar, do you agree with the EU FTA? We've closed it just days ago. But now one wonders till what extent has that catalyzed Washington's urgency right now? But also, how should India leverage rulemaking with the Europeans to hardwire better discipline from the Americans as well? Is that something that India can now do?
No, definitely. I think that would definitely have acted as a very strong trigger that, that we've been able to have this deal with, known as the mother of all deals, with such a large entity, $21-22 trillion, and 4-5, the fastest growing major economy in the world. So both of them have come together. I'm sure this, and also maybe some of the other factors with the visits of Mark Carney and Keir Starmer to China. So maybe the United States is feeling that, it is losing out on leverage which it thought it had. So maybe it had to come together. And I think this basic content of this deal, the substantive content of the deal, Vikram, in my view, was settled in sometime in July. I don't think any significant change has taken place in the contours, in the structure of the what has been shared between the two sides. What are the gives and what are the takes on the two sides? So I don't think that is Mr. Trump, for his own reasons, and this is not the time to go into those. And he was, trying to apply that pressure. That has not worked, and so he has thought it fit. But India is in a sweet spot, I would say, at this moment. Having signed both with the United States, with the EU, with UK, and with a host of other countries. But what it really needs to do is increase its competitiveness domestically. I think that is in terms of the structural reforms that are required domestically. We can, of course, engage with the outside partners to get better terms. But what is really required is to have all the reform processes that are needed, fasten them, expedite them, take them forward so that we become more competitive going forward.
Well, that remains to be seen how competitive we are going to be. But today we saw the markets were on a tear. If the tariff relief persists, Anubhuti Sahai, do you expect the current account deficit to narrow through stronger exports, or do you think it'll widen through capital goods imports for capex? What's your FY27 balance of payments marker to watch if flows are going to re-enter India now?
So for FY27, our current account deficit forecast is in the range of 0.6 to 0.9% of GDP. So over past couple of years, current account deficit has remained very well contained. And on back of this trade deal, assuming it gets effective immediately, we need to know the timeline when it becomes effective. Initially, there can be some widening in or the trade balance or the trade surplus with US can actually widen in the first round because we are a higher tariff economy. Exports can improve, but if US goods are tariffed at 0%, then we can also see more imports coming from the US. Plus, if what US is saying is right and we switch completely out of Russian oil to the US oil, there can be some impact on the overall import bill. But all said and done, even if there is some adverse play out on the trade deficit front, the services exports are doing exceedingly well. And therefore, the current account deficit, even in the worst case scenario, is looking in control. So less than 1% of GDP. Balance of payment, we have seen 2 successive years of balance of payment deficit. And with this trade deal in place, our sense is we have now taken out the risk of a negative balance of payment story for which would have played out in the third year. So the trade balance of payment surplus can be in the range of $5 to $15 billion, depending on how much FPI flows should come in. It should be positive, but we need to see the delta. FDIs, as we highlighted, we remain cautious. So therefore, $10-12 billion of FDI flows. But net-net, a big switch from a deficit year to a surplus year from a balance of payment perspective.
So the forces that are shaping India's trade dynamics, also the resilience of our SMEs, the shifting global economic center of gravity, and the policy guardrails, we'll need all of that in the months to come. The insights here remind us that India's economic story is not playing out in isolation right now. It is being written in the boardrooms, on factory floors as well, and across the negotiating tables, also within the wider global realignment that we are watching and tracking so closely. The choices that we are going to make now are going to redefine what we understand as competitiveness, and that is something that is going to last for years to come. A big thank you to all our guests. Mr. Salunke, Mr. Ralan was with us, and of course, we have Anubhuti Sahai, David Roche, Mr. Sajjanhar. Thank you very much for your insights and perspectives on this edition of The Big Question. And that's a big question tonight, even as we discuss India-US trade deal threadbare. As we get in more details, we heard the big words coming in from Piyush Goyal as well, the Commerce Minister. A joint statement is expected. How soon? That remains a big question as well. But we are tracking this from every nook and every corner. You can rely on us on NDTV Profit. But for the moment, on The Big Question, I'm Vikram Oza from me and the team. Thank you. Good evening.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक है ना, मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life.
That's what scheme for you. That's what businesses like Share.Market PhonePe Wealth are building for. And to talk about that and the challenges that it entails and the opportunities therein, I'm joined today by Ujjwal Jain, who's the Chief Executive Officer, and Nilesh Naik, who's the Head of Investment Products. Gentlemen, thanks so much for taking the time. It's an exciting time for all of us watching this industry grow, right? If you look at it a decade back, you look at the numbers right now, it's staggering. Seemingly, as you're looking at it on an ongoing basis, it's not as staggering as if you look at it 10 years back. But in your life cycle as well, what is the kind of experience that you're having onboarding clients right now? Is it as frenetic the activity as you saw soon after COVID?
SIP growth has started was going very healthy pre-COVID also. Post-COVID, actually, it made a more like a population scale shift. And when I say population scale shift, the whole, there was a change in terms of how people actually look at their wealth creation. And for the most part, actually, if you look at population scale, right? And when I say population scale, it's across the length and breadth of the country. Majority of the people cared about wealth creation through traditional assets and largely fixed deposits, which is looked with a lot of safety, gold, possibly residential real estate for most of the middle class end users. But it is only post-COVID people have started making that shift from traditional wealth creation instrument to financial instruments. Right. And there, mutual fund came as a very, very important instrument, thanks to the Mutual Fund Sahi Hai campaign also, which has helped build a lot of trust in the industry and the people to actually get into markets through mutual funds. But a few other things that have also transformed the way people look at markets. Some of them is like the entire inflation, right? The real returns for that matter. When look at FD returns, people realize that post-tax, the income they make on FDs, actually the real returns are can't compete with, can't actually help for adjusting for inflation. So that is where people started actually realizing that I can embrace equities market, especially mutual fund, which is more stable and managed by fund managers, and take a long-term view and use that volatility of market as with a lot of patience, especially through SIPs, and go on investing in that, invest in that, and actually make a long-term, make better returns than fixed deposits. The other is the UPI, the Unified Payment Interface. What that has done in India is that when you get into mutual funds, you have to do Aadhaar-based onboarding. So the India stack has worked tremendously well for people to simply go online and open their mutual fund account. And with UPI, the trust rub-off to actually use payment as an instrument to set up SIPs, that has worked really well. So these things collectively has actually helped people to shift to financial assets, especially mutual funds. And that growth we are seeing even today. And that is now stabilized.
So just to drive home that point, Ujjwal, would you say that now the challenge, not just from the perspective of the investor, but also from the perspective of the platform or the service provider, is no longer access? It is something that practically everyone has the ability to do. It's not challenging to get more people to come and invest. Is that fair?
Yeah, actually on the access, there's still a lot of opportunity to make sure mutual fund is out there available to most at a lower entry barrier. So reducing the entry barrier is actually one part of the problem. On the access, that is still a big market opportunity for people to actually embrace mutual funds. But a larger problem statement is that, okay, I have access to mutual funds, as you started the show with that number of schemes that we have in India. What is the right mutual fund to get into? So when you're starting with a mutual fund investment, you cannot go with a trend-based mutual fund or a random mutual fund without any thinking. That could actually be you will start on a very bad note. Sure. So that is where, how do you make sure that you invest in the right mutual fund? So as a platform provider, we look at this as a very massive opportunity as a business also, but from a consumer point of view, that's a real opportunity to make sure that the customer come on your platform, not just get access, but also get right information and knowledge to invest in the right mutual fund and build a long-term wealth with a 10, 20, 30-year view.
Okay, so I want to bring you into this conversation because we've been talking about, I know that I have been at least from 2016 onwards talking about making the right selection of funds. The tendency is that you will select something and you will go back 3 years later and say, oh no, I made a horrible choice. Do you see that taking place even today despite the proliferation of information that is available?
Yeah, I think largely we still see that trend, and in fact you're right. If you look at numbers, right, we actually have done this study in terms of looking at what is the correlation between let's say previous 3-year return versus next 3-year return, and invariably irrespective of the category that you choose, you will realize that correlation is close to zero, which means the past performance doesn't tell you much about what you can expect, right? But unfortunately, I think a lot of investors invest based on the past returns, and which is where, like Ujjwal mentioned, the investment decision making, choosing the right product is very, very important, so that from a medium to long term perspective, investor have a decent experience of investing into mutual funds.
The challenge though is always when an advisory comes into play or even a distributor comes into play, there is a one-on-one. But traditionally platforms have been used to have a low-cost model and to have an execution-based model. People take ideas from elsewhere and they execute. They look at it not from the perspective of I'm getting advice on this platform. But you guys are playing this differently. Can you explain how that works?
I think, Alex, when you look at investing, one thing is to say that, okay, this is the best product to invest in, or this is the right time to enter or exit the market. But I think what is also important, and I think more important, is that you avoid making big mistakes. If you avoid big mistakes, then you are more or less set to achieve your financial goals and create wealth, provided you are disciplined enough. And I think for platforms, that should, I think, going forward be the focus as to how you help investors avoid those big mistakes and how you help them to be more disciplined. So in our case, for example, we very early realized that a lot of investors are investing purely based on performance, which means if you have to sort of accentuate that behavior, You just show, funds based on returns and people will invest.
Oh, you have a star rating.
You have a star rating.
That is based on past returns.
Correct. And even the returns number, which are very easy to understand, right? But intentionally what we have tried to do is that, stick to core products. For example, categories like flexi cap, large and mid cap, value. These are typically good categories for any investor with a long-term horizon to start their, let's say, SIP. And more importantly, when investors are investing, we have been heavily focusing on SIPs because that takes away the timing risk to a large extent, right? The other point that I wanted to mention is, we have launched a very interesting tool called CRISP.
CRISP. This is an acronym. I'm sure this is an acronym because otherwise it sounds like something that I would bite onto.
Yeah, yes, it is. So CRISP actually, Alex, stands for, consistency, risk and investment style of portfolio. So a lot of people invest based on past returns like we discussed, but not many people look at, let's say, consistency of performance in terms of rolling returns, etc. So we take that into account. We look at the risk in terms of, let's say, standard deviation of funds and compare it with the peer group and so on. And most importantly, we also look at the investment style of the portfolio. You often hear experts talking about, how investors should know, how the portfolio is managed. But the retail investors have no clue what that means, and which is where the style of the portfolio is very critical. And I think
so. When you say style, let's drive home this point, and you can weigh in as well, Ujjwal, because and we speak about it on an ongoing basis. Not everyone understands it, as you pointed out. So when you say style, you're talking about the overarching style of either the fund house or the fund manager to say that they're constructing their portfolio either from the perspective of a value bent, or they will have a momentum bent, or they will have a growth and quality bent, or they will have a low volatility bent. That's what you mean by style, right?
Correct. So each fund manager will have his or her own style for that particular fund. It can be a mix of styles as well, right?
Yeah.
But when you have perspective on the style of the fund, it makes it relatively easy for you to construct a portfolio which is well diversified across styles. And that's very, very important concept, when it comes to, investing, the diversification part. It's not just across stocks and sectors.
Extremely important that you're pointing this out, because if you look at the last 10 years, data will tell you that a value style has outperformed 7 years out of 10. It will tell you that a quality style is outperformed in less number of years. So it depends at what point in the cycle did you invest. If you invested in those 3 years when value underperformed, then you will hate the scheme selection that you've had, but you're playing it differently. Is that how it works?
Yeah, so what we are trying to make sure is that we take the last 5 years of data and individual fund houses, individual schemes, underlying holdings. So entire proprietary model, which is the CRISP model, has been built using that data and help you take a forward-looking view on basis the rolling characteristics across this performance, rolling performance, risk, where you are versus your on the risk side with your peer group within the scheme category, and also on the style. So what it helps is that if you realize that some managers have done really well on performance, but their style does not show any characteristic, which means that they've made choices in the underlying portfolio which are not characteristic to their actually scheme ethos, that all comes out well. Now, but the challenge actually, as Nilesh pointed out, these things appear to be very complex when you look it from a consumer point of view, and especially when we are working to make sure that the Bharat adopts this model when they get into mutual funds. The opportunity is that the access, when we talk about mutual fund, the experience to provide the access, most of the platforms have done really well, including us. Now, when it comes to decision making, so part of the problem is that how do you build your underlying technology, research platforms to actually able to analyze these mutual funds on an ongoing basis, and on the consumer side, how do you make these information and knowledge packed in a very simple, intuitively well understood form?
And Ujjwal, this is fascinating. So I'm sure that when you're building out these products, and ultimately these are tech offerings where you're trying to understand how somebody would behave in a certain situation. So I'm sure that conversations with your developers will be along those lines, where you're saying that you're designing the UI of that application to say that if I showcase this kind of data, if I have this prompt when I make a selection, then the tendency of the user is going to be 9 out of 10 times they will either sell or buy. Is that the kind of conversation that you do?
Take the example what Nilesh pointed about. Now, a lot of people say that people end up buying a lot of mutual funds basis the past return and a lot of recency bias in that. A part of the problem is because of the user experience design also of the WealthTech platforms, where they actually end up showing on their landing pages a lot of mutual funds with trending past returns, right? So anybody who is getting into mutual fund will tend to get captured in that user experience far more because they are starting
FOMO,
first time.
And it's FOMO.
Yeah, right. Now imagine you build a user experience with that mindset that how do I put all that research that I've done through CRISP in user experience form factors so that when people get into these mutual funds, they have the right information, and you are basically, by the time you make a mutual fund selection, maybe today 2 out of 8 are trying to be experimenting by getting into wrong mutual fund. Maybe 6 out of 8 would now eventually be in a better position to start with a right flexi cap or a large cap or a more diversified mutual fund. So I think part of the problem is to get the research right and globally best, like comparable research, make that available to Bharat and use the user experience design as a consumer tech company to make that accessible to consumers and make sure they adopt in the right way.
So couple of things that stand out, and Nilesh, maybe you'll be able to weigh in on this on behavior, right? Which is that so many studies have pointed out that individuals make less returns than the schemes that they invest in. And just to drive home that point, as an example, suppose I'm investing in one mutual fund scheme, just one, and that scheme has given me a return of, say, 100% over the course of 5 years. I may have experienced an 80% return, and the reason is that I might have stopped it at certain moments. I might have pulled out at certain moments. I might have worried about the equity markets falling by 20% and then stopped an SIP at that moment. So what is that kind of behavior nudge that you're providing? Because ultimately stickiness is almost always the most important thing when you're building wealth over the long term.
Correct. Alex, I think there is this interesting quote by Benjamin Graham, the investment guru, right? He says the investor's chief problem and even his worst enemy is likely to be himself.
Yeah.
Right. And when you look at the behavior of the investors on ground, you realize how true that statement is. So, for example, you mentioned about funds returns being better than the return that the investor make. I'll give you one recent example from our market itself, right? Just go back about 1.5 years, July of 2024, when market was really doing well. You just look at the equity flows, right? It was roughly about 81,000 crores. And if you look at, let's say, March 2025, by when, the market had corrected almost, I think, 12-15%, the flows came down to about 56,000 crore. And that's not the entire...
You're saying gross flows.
Gross inflows into equities. Yeah. And that's not the entire story, because there's also a SIP component to it, right? Yeah. And if you adjust for SIP component, it's like 60,000 crores versus 30,000 crores. So there's a 50% drop when the market has corrected by 12-15%. And when you have people investing more at market peak and in investing lesser amount at when the market corrects, that's the reason for this kind of behavior. Now there's a big opportunity, I think across board, not just the digital platforms, but I think that's the most important value add that an intermediary can do, be it a MFD or a RIA, right, to the investor's life. So how do you nudge people to continue their SIPs during those times? How do you get people to invest more when the market's correct? And those are the things, I think, which are very, very critical in terms of solving for investors' problem.
So I think this is important, and I'm asking from the perspective of business, right? Ultimately, you're talking about what should ideally be the behavior. From your perspective, it's good if they follow the right kind of behavior, because the outcomes that they will get over a slightly longer time frame would be better than a peer group that might make the wrong choices. Initially, they might see a spurt or they might not, but eventually it will fall off, right? Yes. So is that the model that you're trying to follow, to say, okay, I want to get maybe not the best returns in the industry, good returns that people can bank on so that they can have financial success.
Correct. I mean, so look at it, the money from where the opportunity cost of that money coming from. It's coming from fixed deposits,
Fixed deposits,
right?
yeah.
So the expectation is to make incremental return. Now the fact is, on the extreme end, equities market are sold with very high returns expectation without looking at the risk part of it. So the idea is that if you can balance the risk well and get a consistently better returns year over year, then as a platform, we have actually able to champion our cause of making sure that you get into a right mutual fund.
And just to add to what Ujjwal mentioned, right, see, mutual fund is not acquisition. Or let's say if you look at the last 6 years, 2019 end, we were close to, I think, 1.9 crore unique investors in the industry. Today, we are close to 6 crores. And the run rate is almost similar, even as we speak. But the most important part is to retain those customers, ensure that they have right kind of experience. Because whether you are talking about the intermediary like us or whether you are talking about the investor, I think it works very well when people stick to the product and invest with a long-term perspective. And that's where I think it's very, very important to do right kind of, offering right kind of products to the investors.
Yeah, I mean, I think that point is driven home by the SIP figures, right? You have a 31,000 crore gross number, but everybody in the industry agrees that that net number is significantly lower. 35% is what is expected to be the number. That's because there is pausing and switching of SIPs. You're doing a daily SIP as well.
Yes.
Are you finding traction in that?
Yes, we are finding traction in that, and I think part of the problem was that people with investable savings slightly lower, and as you expand the reach of markets, how do you make sure that even the people with very on the lower income households level can start at a very small amount and build that disciplined habit of SIP, which continue to extend from what monthly SIPs have given. We have launched a daily SIP with rupees 10 as a start.
Okay, very interesting. Just a last thought, Ujjwal, and we're closing out the program, but I wanted to get your perspective on the kind of demographics that you've seen, particularly over the last 1 year, in a time when the equity markets have not been absolutely fantastic. Are you seeing encouraging signs from tier 2, tier 3?
Yeah, I mean, 70% of our AUM, fresh money that comes on our platform is coming from B30 and beyond cities. And I think, and that is where we have realized that majority of people to actually appreciate equity as an instrument for wealth creation and using mutual fund as an instrument, that I think irrespective of the market cycles, things are stabilizing. That is the factor of stabilizing. While still there are redemptions during a down market, but versus past, we are shifting the base as a country, right? And you can see that even as we speak, right? FII outflows continues, right? Month on month, right? Still, Indian markets able to absorb that with domestic money, and that is fully driven by retail money, which is actually represented by larger Indian society, right? And I think we are now becoming the strong hand here.
Yep, the base is shifting.
Yes.
On that note, gentlemen, thanks so much for taking the time. Well, you heard it. The base is shifting. And what a message to end this program on. Thanks so much for tuning in. This is NDTV Profit.
I propose to raise the STT on futures to 0.05% from the present 0.02%.
There's a buzz of a potential hike that could happen when it comes to options STT, and this could be major negative coming in.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम। क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला। I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम। क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह। दिस इज माई स्टोरी।
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock.
with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
He has been tracking markets for over a decade.